We can go. Good morning, and welcome to the OPPD All-Committee meeting. Notice of the time and place of these committee meetings were publicized by notifying the area news media, by updating OPPD website, and by emailing such notice as to each of the directors on November 8th, 2019. As we discussed at the April committee meeting, we're going to hold any closed sessions at the beginning of board committee meetings. On today's agenda, we have one item to discuss in closed session, which is power with purpose, procurement of integrated photovoltaic, solar, and natural gas fuel generation. We will endeavor to conclude the closed session discussion as close to 10 a.m. as possible so that we can begin the public portion of the meeting. In the event that we do not complete our closed session discussion by 10 a.m., we will move to continue the closed session after the public session ends. We need a motion to go into closed session. Director Kavanaugh. You have to have your statement. Do you have it?
I don't have it. Oh, sorry. Okay, I move the board go into closed session at this time, 8:32 a.m. to discuss power with purpose, procurement of integrated photovoltaic, solar, and natural gas fuel generation. With respect to this matter, a closed session is necessary because the discussion will involve competitively sensitive utility infrastructure information, including potential pricing and types and locations of resources that would create a competitive disadvantage for the district if known by its business competitors, and also would create a competitive disadvantage for the district if known by potential contractors and property owners that may be involved in the infrastructure projects.
Okay, thank you very much. And we do have one question.
No, I'm good.
No?
Second.
Okay.
Faulkner,
Yes.
Kavanaugh,
Yes.
Gay,
Yes.
McGuire,
Yes.
Molhoff, Moody,
Yes.
Williams,
Yes.
Yoder.
Yes.
Motion carried.
The motion to go into closed session has passed. This closed session will be limited to discussion regarding power with purpose, procurement of integrated photovoltaic, solar, and natural gas fuel generation. No votes or other action will be taken. The camera and live stream will now be off. Good? Okay.
Where's Williams?
That's okay, we still have.
We've got enough.
We got a form.
The motion to come out of session at 10:24 a.m. is carried. Oh, no, it isn't. Oh, no.
No.
It says- Okay.
Someone
right
needs
now
to
here.
do a motion and someone needs to do a second.
We need a motion and a second to reconvene the open session. Okay. We have
Faulkner?
vote.
Yes.
Kavanaugh, Gay, McGuire,
Yes.
Molhoff,
Yes.
Moody,
Yes.
Williams, Yoder.
Yes.
Motion to come out of closed session at 10:24 a.m. is carried. This closed session was limited to discussion regarding the power with purpose, procurement of integrated photovoltaic, solar, and natural gas fuel generation. No votes or other board action were taken during the session. Okay, thank you very much. And that would be it for now.
Okay, 5-minute break.
5-minute break. I need a break for my back.
You didn't get a lot?
Show and tell. What's funny when I was walking in, Mark's like,
Need somebody up. Thought it was to keep me awake.
Well, we don't get to sit at this table.
come back in, and we're waiting for Mike.
Mike's over there.
Mike's over here.
Okay. Director Kavanaugh.
We'll go right to the safety
Okay.
briefing, I think.
Welcome back, all directors and everyone. Earlier, before the closed session, I made the announcement regarding public notice of meeting. Today, we'll hear the following committee reports. Finance from Director Tim Gay, Public Information from Director Craig Moody, Systems Management and Nuclear Oversight from Director Rick Yoder, and Governance Mike Kavanaugh, Director Mike Kavanaugh. President Burke, can you please give the safety meeting?
Great, thank you. You're on the 9th floor on the west side of Energy Plaza. Fire extinguishers are located in this room and actually down just on the outside of the men's restroom, down the hallway to my right. The AD and the first aid kit are on the wall to the right of the elevators, one on top of each other. Is anybody here certified in the use of an AED or in CPR? Very good, thank you very much for that. There are 2 exits to this room, the 2 doors to the back of the room towards my back. We will exit to the nearest stairwell in the event that we need to exit the building. In case of a fire, we will not use the elevators. An emergency response team member will assist us in the evacuation and appropriate sheltering. In case of a tornado, again, we will be directed to a safe area. We would use the stairs, and when you use the stairs, remember to use your 3-point touch, which is 1 hand on the railing and 2 feet on the ground. The shelter locations for the board will be in the call center, and we'll take the southwest stairwell. The visitors will go to the OPPD parking garage and will be directed by the emergency resource team. In case of a fire, again, don't use the elevators. And if you have a medical condition, please write it down or tell your neighbor. And in case of emergency, Kevin, can I have you call 911 in event of emergency? Thank you very much. And that concludes my safety briefing.
Thank you very much. We're going to begin with Finance, Director Gay. You've got a busy schedule here.
Yep, thanks, Director McGuire. As you can see, we have 4 items. One would be an action item. We did have a Finance Committee meeting last Friday and covered several of these things on here. One thing we did look at, we previewed the updated potential quarterly, more comprehensive financial updates that we're going to start next year. And if you haven't been talked to on that yet, we discussed it earlier, but it'll just be a more comprehensive view. So we got this kind of a peek of what that could look like from Javier and his team. With that, I don't think there's anything major other than what we're going to cover here. Of course, corporate operating plan we're going to cover here today in a presentation, and there'll be much in that we'll have some Q&A. What's that? Oh, we did talk about block rate structure. It was a good conversation, but I'd say fairly quick because that pesky committee was pushing us out of there earlier. But,
Yeah.
But anyway, we did talk about the block rates and how to come back and take a look at that, and there was a good discussion. There needs to be more discussion, quite honestly. That's what we've decided. So we don't want to bring something out that makes no sense or isn't ready for prime time. So we're going to continue to work on that. If anybody has a comment on that, no? Okay, we're good. With that, in the interest of time, I'll turn it over to Javier Fernandez, and he can walk us through October financials, our bond issuance, and then we'll go over, do a presentation on the corporate operating plan. The one thing on the action item, probably don't want to rush through that, but he'll explain that very well too and answer any questions. So Javier, I'll turn it over to you.
Thank you, Director Gay. So I'm here to present the financial results as of October 2019. 10 out of 12 months of the year have elapsed. It's been an interesting year, lots of moving parts, mostly market prices for power, also interest rates in the marketplace. Those two things have moved a lot of variables in our financials. Off-system sales, power purchases, and other income on mark-to-market of securities. This time around, the most of those things were quiet or quieter than in previous months. The main topic this month is the bond issuance that we completed and we closed in November, but also preceding that we had the cash defeasance of bonds in mid-October, which is what's driving a lot of the changes that I'm about to describe. From a revenues perspective, retail revenues for October were right on the nose, $72.4 million, which is $500,000 under budget. Very close. I think this is probably the closest month we've had compared to budget. Same with off-system sales revenues, were $10.2 million, which is $400,000 under budget. Very, very close. Other income for October was $8.3 million, which is $1.7 million over budget. We did continue to see a decline in interest rates. The Federal Reserve did lower interest rates, and that caused a little bit of a bump on the mark-to-market of our securities, which explains most of that $1.7 million excess over budget. But it's not as large as we've seen in other months. It certainly continues that trend of lowering interest rates, creating an artificial, I would call, mark-to-market effect on our income statement. It's not a cash item necessarily, because we don't plan on liquidating those securities anytime before maturity, but we have to mark those values. Operating and maintenance expenses were $33.6 million, which was $6.8 million over budget. This caught my attention. And one of the reasons, there are two main reasons for that overage. The biggest reason is budget and timing. When our budget teams went in last year, or almost 18 years ago, they're doing their best at estimating when expenses will come in from an accrual perspective. And there was a little bit of an offset between when expenses came in and when we budgeted those to come in. Of the $6.8 million over budget, $4.4 million, it's really just expenses that we were anticipating to hit in November, but they hit in October. So I fully expect that to reverse itself back in November. It is a good lesson learned for our budgeting process, and we're certainly tightening those processes to get an even better and more accurate forecast for the budget. That leaves us with $2.4 million over budget. Of that, about $700,000 was a write-off we had on a capital project we had open for quite some time. We typically go back and we review work orders that have been open for a while. Are there capital or their expense? In this case, it was a work order that was reclassified from capital to expense, and it hit that our income statement that month of $700,000. That brings us down to a $1.7 million true variance over budget on operating and maintenance expenses. That is about a 5% variation. I am more comfortable with a 5% variation once I have all these explanations. We have been coming in under budget most months, anywhere between 1 and 5% under budget. This 5% over budget really doesn't cause me much concern. Again, we're still hitting all of our O&M. Very proud of what the team has done in hitting and being so accurate compared to budget on our O&M expenses.
Can you elaborate on that $700,000 that you mentioned a second ago? Was there what that project was specifically?
I don't have specifics on the project. I can get those to you. It's an old work order. It's been, we typically keep work orders open for a number of months, sometimes years, as we work and complete those work orders. There's always a true-up process where we go back in and say, okay, of this project, was all of it capital, was some of it capital, some of it O&M, and we typically true that up. This was one of those where it trued up back to expense. But if you have any specific need for that, I can get you the specifics on that project.
Yeah, I'd be interested to see that, if that can be available.
I will follow up with that.
Thanks very much.
Yeah. Fuel and purchase power expenses for October were $26.5 million. Again, very close, $400,000 over budget, very close to budget. Other expenses, this is where it gets a little interesting. Other expenses for October were $42.2 million, which was $9.1 million over budget. The majority, if not all of this overage, was a direct consequence of, in October, we used cash to defease, to pay off existing bonds. Those existing bonds had originally been issued with an original issue premium, and I can get into a lot of details here, but when we issue bonds at our original issue premium, as time goes by, we amortize that premium until maturity of those bonds. In this case, because we paid those bonds off prior to maturity, we realized the loss of the unamortized premium in the month of October. Typically, under an advance refunding scenario, when in the past when we were allowed to do that, we would do the same thing. We would pay off old bonds, issue new bonds. The old premium would mostly offset with the new premium, and you wouldn't see this discrepancy. In this case, because we're executing this in two separate transactions. One is a payoff with cash of bonds. We have to recognize the loss of the unamortized premium. Again, it's non-cash, but we have to recognize that loss in October. And then in November, when we issue the new bonds, the new premium gets amortized over a long period of time. It doesn't cause me concern. We did this, and I'm going to report on the next item. We by doing these cash defeasance and reissuing bonds, we were able to lock in lower interest rates and deliver true savings, not just these book savings, but true savings in debt service for ratepayers. But it's a large number, and I wanted to explain the rationale behind that variance. Yeah. That brings our net income for October was a loss of $11.3 million, which is $15.7 million under budget, explained by the other expenses on the cash defeasance and the O&M piece that I just described. Capital expenditures for October were $11.3 million, which is $2.1 million under budget. What this doesn't tell, the story behind this is, while we're still lagging from our budget perspective on capital projects, I am incredibly proud of the organization and in how we have been executing our capital project, our capital portfolio. I fully expect that by the end of this year, I should be able to come to this table and share with you significant improvements, meaning we should be able to complete significantly more, percentage-wise, projects on capital that we have in the past. This is something that we've been tightening our processes to make sure that we have good forecasts and that we have really good communication every month, every quarter with the major project managers to make sure that we are hitting our budgets and that we are completing our capital projects as expected. And I fully expect this to be the case this year, so it'll be a big improvement over last year. It's really important because without our assets, we are nothing, right? We rely on those assets, on those poles, on those wires and generators, and so it's important that we take good care of those. And I think we're making a really good progress on that. The last item I have to report, which is tied to the cash defeasance, as I mentioned earlier, the unrestricted cash balance at the end of October was $227 million, almost $228 million, which is $211 million under budget. Ugh, that would cause me a lot of concern, were it not be because we defeased bonds in October and we issued bonds and the new bonds closed on November 9th. So you see that dip in cash that will be replenished, actually was already replenished when we closed the bonds last week. So that explains that cash fluctuation. We were with a lower amount of cash. We operated with that amount of cash for about 16 days, but it was a calculated risk, and my team was constantly monitoring, making sure that that we were in a good position, and then we replenished our funds.
This whole process we had previously discussed in depth, that's what we would have, usually about 15, 16 days, and we have a lower cash balance.
Correct. We had, because of the new tax rules that prohibit advance refundings, this is not an advance refunding. We had to pay off bonds, and we had to wait at least 15 days to issue new bonds for it to be considered a new transaction. But all in all, I'm happy to report, and I'm going to report this in the next item, that it all worked well. That concludes the report for October. Any questions? Okay. The next item is something that brings me a lot of pride and joy to share with the board. It's something we do regularly. It's something that some of us, I'm looking at Mr. John Thurber back there, he's done this many times in his career at OPPD, yet I don't want this to just become another refunding, because it's a big deal. John Thurber and his team, they led a fantastic cash defeasance followed by a new money issuance. We sold bonds on October 24th. That's when we were in New York. Our underwriting team, this time was led by Bank of America Securities, helped us underwrite this bond issue, $137 million, almost $138 million of bonds to replenish the cash that we had previously used to pay off bonds. When you compare debt service of the bonds we paid off with cash and the new bonds we issued at a lower interest rate, total savings for our customer owners total $23.2 million in debt service savings over the remaining ones. That's fantastic, something that I'm very, very proud. It doesn't happen overnight. It takes a lot of time and effort and diligence from preparing the official statement and rating agency conversations, underwriting the bonds, and all the way to the legal documents with Fraser Stryker and Kutak Rock, who helped us get all that transaction together. But I'm very happy to report that on November 9th, we closed that transaction. We got Barclays, which is our financial advisor, helped us and make sure that the rates we got from those on those bonds were fair, and that we got a good transaction. So very, very excited and very proud to report that. Any questions on that?
I would also just say, I know we talked about that earlier with Betty, he's been doing this long, he's really good at it, and the whole team, but thanks. I mean, $23 million in savings is a great opportunity. I know we try to get that out there to the public. It doesn't get covered a lot of times, unfortunately, but we've just done a great job over the years refinancing all these bonds, like others, I get it, but good job to you and your team.
So thank you very much for giving us the authority and the authorization to be able to do that. I think that's really important for us then to take advantage of the near-term market changes and the advantages to that. So I want to thank the board for giving us the authority and authorizing us the ability to do that.
Rather than having us come back and try to vote on it or anything, again, this is a timing issue that's very, very important. And this
One last thing that I did ask the team, the day they were pricing the bonds, they were setting the new interest rates on a tax-exempt basis for these bonds. I asked them to, and the underwriting team, to look at, hypothetically, if we had been selling bonds that same day with that same credit on a taxable basis. So we could have done this whole refinancing on a taxable basis and therefore wouldn't be subject to the the advanced refunding limitations the tax code provided us. So we could have still refinanced these bonds with taxable rates. If we had done that, and of course it's all hypothetical, but the indications we got from the underwriting desk that same morning would have yielded savings that were in excess of $8 million lower than when we got here. So this is a testament of our financial health paying off for our customer owners because we had the liquidity we had, because we were able to deploy that liquidity the month before and issue tax-exempt bonds in November. We were able to squeeze in an additional at least $8 million of savings for ratepayers. So it's something I'm really, really proud, not only for the team, but it's this financial health we've been building over years. This is one example of how it pays off.
Yeah, congratulations to the team. This is a big deal.
Yep.
Do we have the total number now? Do we have a running number, Mr. Thurber, and how much we've saved in defeasance of bonds?
Well, I believe it's over $250 million.
Now over $250 million is what he said.
Of savings,
Of
over
savings.
many years.
Yeah,
Yes.
about 12 years.
Are there any questions on this item?
All those zeros?
All those zeros really caught Mr. Mooney.
Oh, good.
Choking on his nuts there.
Okay, if you allow me, I think the next item is the corporate operating plan. I'm going to stand in the podium and I'm going to present. Thank you.
It's about those-
Okay, so from one project to the next, now we're talking about budgets. This is our preliminary corporate operating plan for 2020. This is otherwise what I would refer to as our budget. Just a reminder to our board and to the public who's watching, the process typically looks like this. We present our draft, our preliminary corporate operating plan now, and it'll be, we're still not at the end of the year. We still have a little bit of year left to go. Between now and December, we may make some final minor adjustments to the plan as financial information becomes available. And it also allows the board to digest and study the COP, the corporate operating plan, ask questions and for the public to ask questions, and it'll be submitted for your approval, your final approval, or your only approval in December at the December board meeting. That's how it typically how the process works. This corporate operating plan is I would say the planning of these started back in mid to late April. I would say it would have started earlier had we not had the flooding in the spring. But it's a really long process. It takes the entire organization, all departments of the organization come together, and they put together their budgets that ultimately result in this presentation. Big assumptions. These are huge assumptions that we used to develop the COP. One, of course, we are still under a no general rate increase, so that was incredibly important for us to make sure that we are still living with the same means, with the same general revenue that we had back in 2016, that we held for 2017, 18, 19, and 2020. This will be the fourth year, 4 out of 5 years of the no general rate increase commitment. It doesn't have a change in the fuel and purchase power factor, but it does have a resetting of the fuel and purchase power base rate. I'm going to talk about that in more detail in the slides to come. I would say if you were to ask me what's the biggest change in this budget, I would say this is one of the biggest changes that we have in this budget, and one that brings me a lot of comfort in that we are adjusting our budget to the reality that we have with the volatility in the market we have, and how much more we are relying on purchase power today than we were in the past. It's all a good story. It's something that we've been planning for, and you will see that now materialized in this budget. Retail energy sales, pretty steady. We're assuming a 2.3% increase from the 2019 budget and a 2.2% increase from the 2019 projected. When you see 2019 projected, we are using January through September actuals, and then we're projecting October, November, and December what are the retail sales are going to be. We know things are a little different than budget, but when it comes to retail energy sales, they're pretty close. So this new budget assumes a growth in retail energy sales in megawatt hours. Wholesale revenue, this is a little different. You can see that there's a 55% increase from the 2019 budget, but only a 5.4% increase from the 2019 projected. That means that we missed something in the 2019 budget. And I wouldn't say we missed something. It's something that our utility has been evolving. We have been participating more and more in the markets. We are relying more and more on markets for not only off-system sales, but also power purchases. And the prices and volumes and congestion we see in the market today are significantly different than we saw a few years ago. So I've been mentioning this every month in my financial report. I say off-system sales were higher than budget by sometimes tens of millions of dollars. But power purchases were also higher than budget by tens of millions of dollars. That is basically reflected in this 55% and this 33% increase over the budget. What we're proposing to do is a big change in the way we are forecasting power prices, congestion, and our reliance on market and renewables that cause these shifts. So we are including a budget that has significantly higher off-system sales, higher than what we've budgeted in the past, and as well higher purchase power than we've looked in the past, to align more with the reality that we've been seeing in the past few years.
So can you elaborate what types of things are we seeing more sales of, and what types of things are we seeing more purchase of? Is that breakdown by fuel source or generation source?
We're seeing it's so. A variety of things, but I would say probably the biggest driver here is prices we are seeing, driven basically because of congestion in the transmission system. We've seen a growth in wind generation, for example, upstate Nebraska and Iowa and other places. There's a high concentration of similar technology that is providing the same type of power at the same hour, coming in the same avenues, the same transmission lines that everybody else is using. That causes a lot of congestion. We see a lot of price variation. Sometimes we see negative pricings in the minus $200 to $300 a megawatt hour. Sometimes we see on the other side, we see plus in the $300 to $400, $500 per megawatt hour. So part of it is the concentration of renewable intermittent generation. The other one is, frankly, we have seen a lot of closures. Fossil fuel plant closing around the region, that also creates a lot of issues with reliability. I think we've mentioned in the past where the markets are calling and they're giving you handsome rewards to put in power because there's not enough generation in the footprint. So that throws pricing up on a roller coaster. It's been really hard to predict power prices, and so one of the big changes that my team has done is let's make sure that we calibrate our power purchases and our off-system sales to more closely mimic what we are seeing in the market. Something really important here, you see a 33% increase from 2019 budget on purchase power. In 2019, we assumed that in 2019 we were going to purchase more power than usual because we were going to have Nebraska City 1, Nebraska City 2, they went through a big outage this year. Well, even with that additional purchase power we assumed in 2019, all else being equal, I would have expected a decline in purchase power for 2020. That is not the case, right? Not only are we going to we're forecasting similar amounts that we had in 2019, but even higher dollar volume than in 2019. It's a reality that's happening to us. Yes.
So, follow-on question there. So I understand the closures would drive more wholesale revenue for us, but does the congestion, no, wrong?
Both. More wholesale revenue and more purchase power. It depends on what time of the day. It depends on what we have going on.
That answers my other question. Congestion gives us both, right?
It gives us both. So on a normal operation, there will be times when we make money in the market. There are times when we lose money in the market. We're buying more, we're selling more. The band of prices that we've seen in the past few years has grown. Right now, when we lose a lot more. When we gain a lot more. And you see those big changes in off-system sales and purchase power. We are making a big calibration on this budget to make sure that we get it closer to reality. We're still going to have deviations. We can't predict the market perfectly, but it'll be the amounts that I will present to you next year on variations over budget should be significantly lower than the ones that I've been presenting so far.
And our units for the percentage calculation are dollars?
Dollars, correct. Yes.
So what is our retail sales compared to our wholesale sales? I mean, what's the percentage that goes towards native load, I guess is what I'm asking, is what percentage of the energy that we produce goes to retail energy sales and what percentage goes to wholesale to the market? I mean, I realize that it all goes to the market, but how much of our energy is?
I can show you, because these graph, and the reason I'm struggling with that is this graph I'm comparing megawatt hours versus dollars, and it'll be hard. Later on, I can give you an idea of dollars to dollars, how much retail revenue is compared to wholesale revenue, if you allow me to.
It's fine, but at some point it would be nice to have an idea about that.
What I can tell you, without even going into the slides, is I've characterized this many times in the past, and I think I've said this publicly. We have right-sized our utility with the closure of Fort Calhoun and the refueling of North Omaha 1, 2, and 3, and potentially with the solutions that the board will consider later this week. We have right-sized this utility where we don't have that much excess. We're not long power as other utilities in the state or in the nation are. So I would say we are now closer, much more closer serving a retail native load than we were before. We have less megawatt hours to sell in the market. That's going to be evident in one of the slides I will show in a minute.
So my question about the wholesale and purchase leads into the SD7 that we're talking about, because we have a strategic directive now that talks about percentage of retail energy sales, but that's being updated. Well, that's proposed to be updated, and it doesn't still refer to retail sales. So I guess that's why I'm asking the question about understanding our wholesale versus our retail, and it's a little bit different than Janice's question, but potentially related. Is that an appropriate thing to talk about as we get to SD7 in the systems committee, or the balancing of how we're adjusting that language to understand our emissions relative to our wholesale versus our retail? and how they're tied together. I guess I want to make sure that as we talk about an update to the language there, we know how that's reflected back to our operations, and maybe that's an appropriate discussion about how we expect monitoring in SD7 to be reflected back to this component.
I would ask if we could move that conversation to SD7.
That's great.
The only comment I would have just to close on this one is that measure on retail, on renewable energy as a percentage of retail sales doesn't necessarily equate to carbon emissions reductions, right? You could have a ton of renewable and still emit. So that was one of the reasons why we evolved last year that SD7 to include carbon intensity, and that's why you're now continuing to evolve that SD7.
Okay, well, thank you.
Yep.
I have one other question, just as far as purchase power, our wind farms, is that included in
Yep.
there?
Yep.
Yes.
Absolutely.
And with the shoals coming on at the end of this year, we would expect an increase in purchase power based with shoals, is that correct or not? How does
Yes,
that
that is that is correct. That's a bittersweet
Yeah.
answer from my perspective. It's great that Shoals came online and we have 160 megawatts of additional wind coming into our region. Fantastic from many aspects, but when it comes to volatility, it's another source
A little bit more.
of similar technology located in a similar region that potentially could be causing even more congestion down.
And you're
down
taking
for
that
us.
into consideration when you do this as far
Oh,
as
absolutely,
doing
absolutely.
changes?
We're forecasting what that could
As
do
far as
to
forecasting.
the market, right? And we do that not only with our wind farm, but with all the wind that we see in the footprint of the market. Expenditures for capital and operating maintenance are planned to maintain system reliability, future load growth. I'm going to touch on this in a little bit when it comes to both O&M and capital and all the big changes that we're making. It may not be evident in the document you have because we're talking big numbers, but there are big changes we're making and making sure that we are reinvesting in the system, making sure that we are keeping our assets maintained in a good way, and that we're funding our programs to make sure that we increased reliability, tree trimming, and a bunch of other things that are really helping us meet your SD expectations. Financing, outstanding revenue balance will not be impacted by new money financing plan. This is important. We are not counting on external sources of funds to make this work. However, we reserve the right, if market conditions are appropriate, we may issue new debt to lower interest costs. Right now, the capital that we have, the capital portfolio we have in front of us does not necessarily require us to issue debt, but it's always important for us, and we'll have a resolution for you in December to authorize us to issue debt to reimburse us for capital expenditures if market conditions warrant it. But something very important is that we're not counting on that inflow of dollars to balance this budget. We can make it work with our own resources. We can pay cash for our capital. For Calhoun Station, we continue to fund our decommissioning trust funds. The planned funding and interest deposits is about $135 million, $124 million in contributions, plus $11 million in interest. It continues to fund the trust funds, and we continue to use those monies to pay for the ongoing work. There's a graph later on with some bars that will help me explain this in a little bit better way. We plan to maintain our $50 million rate stabilization fund, which is fantastic. We've had it funded now for 3.5 years in a row. We haven't had the need to use it. It's always there available if we have to use it. Something very important to remind folks is if we use it, we have to replenish it at some point. That's part of the commitment we've made to our creditors and our rating agencies. But we haven't used it, and it's good stability that has helped us not to use those reserves. We've made 2 deposits, one in 2017 and one in 2018, to build a decommissioning and benefit reserve account to $77 million. Based on financial results this year, I am not expecting us to have the financial ability to increase that, to make another deposit, but certainly we're keeping that in there. A reminder for the board and for the public is this account is there to serve 2 purposes, as the title says. Either to fund unanticipated decommissioning expenses, if we have those, and at some point, this is one of our ERM risks, it's adequacy of funding for decommissioning. As decommissioning work continues to progress and funding is less and less of an issue, that risk will continue to go down, and at some point the board may decide, management will present a recommendation to the board to say that risk is no longer one of our major risks, and you may have an opportunity to use that amount to give a boost to our pension funding. But for now, it's still sitting in that account while we still have the decommissioning project ongoing. But I fully expect that in the next few years, we'll have the discussion and we'll decide what is the best use of that of those funds.
Decommissioning specifically for the nuclear power plant,
Correct.
doesn't-
Exclusively for
It's
it.
not decommissioning for any other type of plant?
It's nuclear decommissioning.
And so we don't have a fund for decommissioning for other types of,
So
okay.
we have to reserve, and we have some accounting ways that we have to reserve and figure out, okay, for all of the other plants we have, if and when they retire, we need to decommission those. That's not what this is.
So
This is
for-
exclusively related to the large billion-plus, $1.2 billion decommissioning project we embarked on in 2016.
so for North Omaha, there's no decommissioning?
There will be decommissioning costs, right?
Costs, but there's no
those are
fund.
separate
Okay.
and distinct from these.
You would most likely see those in the event of whatever the generating station may be or asset may be that we're going to decommission. You would see that in the corporate operating plan.
Correct.
In either a capital or an operating cost budget item.
But they are relatively minor compared to the sheer order of magnitude of a nuclear one.
Do we get any, we talked about the bond or ratings and all that, do we get any benefit for having this with the bond people, or is it just something? Yeah, the reserve.
Yes, they do. So these amounts, depending on different rating agencies, they count these funds for either liquidity or some limited liquidity that we still have, right? And so especially the rate stabilization reserve, that's a big deal for rating agencies and banks. They know that if something were to happen, knock on fake wood here, financially, that we needed to inject cash into the district halfway through the year, that we wouldn't necessarily have to go out and raise rates halfway through the year, that we have a way to weather the storm and eventually recoup the use of the reserve. But it is very important for rating agencies.
I think I've only, how many times have you used that? I think, I remember once maybe
We
or
used the rate
twice.
stabilization, yeah, after the flood we did, yes.
Yeah, but just once or twice. But it's good to have when you need it, that's
We
for sure.
definitely needed it, yeah. It prevented a rate increase.
Is that $50 million balance, has that remained pretty flat over the years?
It has remained flat, and that's a question that I've had with my team, and there are different arguments. Could it be higher? It could be higher. Higher would, it's also, there's a delicate balance between us keeping cash in the district for liquidity purposes and risk mitigation purposes, and the other one is keeping cash in the pockets of our ratepayers, right? And so at this point, we don't have any reason to believe that we need to increase the amount of reserves we have. I think what we have is supported by the rating agencies. But at some point, if that were to change, then we would have a conversation with the board to modify that amount, whether increase it or decrease it. At this point, I don't have any expectations that will happen.
Javier, a quick question before you get off assumptions, and I didn't see it in future slides, so I'll ask it now. One of the assumptions is for the load forecast, a 2.2% increase in general business sales, and only a 0.7 increase in the number of customers. Drilling down on that, residential forecast is down 1.2, commercial up 2.1, industrial is up 6.2. Is that our new large customers that's really driving that increase?
A couple of things, but yes. So we have Facebook now energized, and they're starting to ramp up, and we're seeing some of that showing up in the industrial side. Mm-hmm. There are a few things on the commercial side as well. One of them, for example, Boys Town, which we used to consider that wholesale. Now it's a commercial. It's in the CNI or large commercial category. So things are moving in there, not necessarily where we have a lot more customers. They're just customers that are reclassifying between industrial or commercial. But the big increase that you're seeing in industrial is very likely coming from from our data center load in Sarpy County.
Okay, thank you.
We have 2020 planned outages for North Omaha Station number 4, number 5. They're not as lengthy as the ones we had in Nebraska City 1 and 2. Also, those units don't produce the same amount of megawatts, but still it's large enough that we are for certain including them in our planning for how much power we're going to have to sell, how much power we're going to have to buy, and all the capital that's going to have to go into those units. many other shorter outages as we always do during the year, but nothing worth mentioning here. And then we have an accounting change. I'm going to talk about this in the next slide. I refer to these as housekeeping, but it's important. It's something that the board has to approve. And it's a change in decommissioning regulatory assets. So if you read the whole slide, I hope the message was clear. I'm going to paraphrase what the slide says. When we have a liability sitting on our balance sheet with our decommissioning project. Our decommission started at $1.2 billion. We've been chipping away at that, and it's a liability. We have to pay for that decommissioning of Fort Calhoun. On the other hand, we have assets that are growing. We have assets, and those assets sit in the regulatory asset side of the balance sheet, where it says we, or you, the board, will establish rates so that we have enough money, enough funds coming in for a number of years to fund the decommissioning trust funds. Between the deposits made into the decommissioning trust funds and interest earnings, we will have enough money in the funds to meet the liability. That's the layman's explanation. As the principal in the fund continues to grow, the interest earnings continue to grow. We are now relying more and more on interest earnings than we were 3 years ago. And as we complete funding of the balance of the nuclear decommissioning trust funds, which should happen in the next 2 or 3 years, then we'll be done depositing. However, the fund will continue to grow with interest earnings. Those interest earnings are in the $11 million range now. They will grow to $15 million range at some point. Those have to be counted against the liability we have. That has always been the case. That has always been the intent, that between deposits and interests, they will meet the liability. What we're asking, and it's going to be part of your resolution, is that decision to better match the decommissioning expense with the funding sources. We're recommending modifying the regulatory accounting to match the recovery of the decommissioning expense, basically including interest earnings as part of that formula. That's one miscellaneous item that we never went back to the board and asked for, and we're asking at this time for the board to approve these so that we can count those interest earnings on the decommissioning trust funds that will be used and have always been assumed to be used for a decommissioning project. Yes?
So, similar to, I guess, an individual retirement concept, as you get closer to retirement age, you shift asset allocation to be more stable. Are we doing something similar with the assets that are in the decommissioning fund so that we have more certainty of the future value of the fund as we get closer to the time when it's necessary?
Great question. Thank you for the question. As opposed to our pension fund, which is invested in a variety of asset classes, equities and bonds and other assets, this one is invested exclusively in fixed income securities. Now, it has pros and cons. The con is that we've had to put in more money into the decommissioning fund because we're not earning 8% on equity, right? But the benefit of that is that it has always provided us a very steady, very stable source of income. So all of these investments are fixed income securities, which gives me a lot more comfort knowing that, yes, $11 million or $15 million of interest earnings, could that be higher? Could be, if we had the authority, which that's a whole different discussion. But knowing that it comes from fixed income securities, it's more stable. But thank you for the question.
So then we don't expect any changes as we get closer to the completion of the decommissioning. It's already in a position that is very stable.
From a funding perspective, it's very stable. I would say the risk, if you will, is on the project side, and Mary's team is doing a fantastic job managing that piece. It's making sure that we come in under budget and on target, and we've done that for years. Now with the decision to move into deconstruction and saving even more money, that gives us even more certainty around the fact that we will have enough money to pay for decommissioning.
Great, thanks.
And does the NRC mandate that it has to be a fixed income as far as this, or are there other companies that are putting in any type of risky?
The NRC mandates is, and I can tell you this because I've managed another decommissioning trust fund in my previous organization, where we did invest in both equities and fixed income. We have to provide assurance with good, solid assumptions that our investments will meet the liability. There are certain private entities have the ability to invest in different things, in a different basket of assets. Public entities like us, by law, we're restricted to fixed income. But I've seen it both ways. It often comes down to the level of risk governing bodies are willing to take. I would say in my research, most decommissioning trust funds are invested in fixed income securities. Less are more diversified.
Okay, thank you.
It's a long-term investment. For a lot of these folks, for us, we're going to complete the majority of the work here in the next decade under deconstruction, but there's still going to be quite a bit of work left on fuel storage, and some of these go decades out, right? So you want to make sure that you have a conservative assumption for that. I don't know, Mary, if there's anything you want to share. Okay. Yes.
Some reason they weren't connected. We didn't authorize both the rates and the interest before.
No, it needs to match. Our auditors and our GASB guidance tells us we need these resolutions so that we can truly count interest earnings and deposits against that liability, so we can then closely match them.
So it's an audit.
What was that?
Yeah, I think your question is why wasn't it
Yeah.
connected before? I think it was just it was an oversight at the time.
I think it was inferred, but it was never explicit.
Yeah,
Yep.
Okay.
yep.
And now we want to make it explicit, just so there's no question.
Yep.
Thank you.
That's right.
Okay. Okay, so now this is the other one, the fuel and power purchase power-based reset. I'm going to attempt to do the same thing here, assuming that you've read the slide. I'm going to spare you from reading it out loud. But what this does is, the narrative I have is, as we've made significant generation decisions in the district in the past few years, decommissioning Fort Calhoun Nuclear Station, refueling North Omaha 1, 2, and 3, we decided also to participate in a more active way in the market. We have a lot more renewable generation. For the discussion we just had a few minutes ago on the volatility we have on purchase power. Under our no general rate increase mandate, our promise, we are making a decision to, as time goes by, we believe that a much better reflection of reality is for us to have a fuel and purchase power base rate that truly reflects what we are seeing in the market. We are proposing an increase in the FPPA base rate to really reflect what we are seeing on purchase powers and on actuals. What gives is, well, we are now we continue to make significant investments in our nuclear decommissioning trust fund, but those will continue to taper off, and that's an opportunity for us to then convert some of those dollars into the fuel and purchase power base rate to better reflect the amount of dollars that we are investing to keep the lights on as we continue to purchase more and more power in the market. So this year, for example, there's a $34 million, over $35 million under collection. So this year, between $14.7 and $20.7 million that you see in the last bullet here, we missed the mark on purchase power by $35 million. We believe that's going to be the case. It's between $35 and $50 million. That's going to be the next item on the agenda. Now, we have recovered some of that. We've made money also selling power. So we are able to forgive these $14.7 million. We're able to say, hey, we paid more than what we budgeted, but we also received more than what we budgeted. In order for us to maintain our 2 times debt service coverage ratio, we're comfortable proposing not collecting $14.7 million in future rates for what happened in 2019. However, this year our cash balances are going down because we've purchased more. Our over budget purchases have been more than our over budget sales, to the tune of about $20 million or $21 million. So what we're proposing is, so that this doesn't happen to us again next year, let's really true up the fuel and purchase power base rate to where we think it should be, so that we have a budget that truly reflects the amount of purchase power we're going to make and the amount of off-system revenues we're going to generate. Let me just go to the next slide, and maybe these will help. What we're doing here, it's still the same, no change in average retail rate from 11.49 on average, 11.49 cents per kilowatt hour to 11.49 cents per kilowatt hour. The FPPA factor doesn't change. What we're proposing is increasing the base rate from 2.068 to 2.305 and doing a commensurate decline on all other rates from 9.236 to 8.99. This keeps us, it keeps us whole, it keeps the no general rate increase, but the composition of our budget next year will have a bigger portion that is purchase power than it was in 2019. I think this, one question that Director Molhoff has asked me in the past, hey, so when we get out of the no general rate increase window, are we setting ourselves for a big rate increase? And I would say these type of changes is a move towards ensuring that that doesn't happen, right? That we are now more accurately reflecting the amount of purchase power we're going to have in the future, and that we're making sure that we can live with those with that purchase power while we decline other expenditures in the budget. It's setting us up in a really, really good way for us to come out of the 2021 5-year no general rate increase.
And thank you for answering that question every time I ask it.
I think it's important that our customer owners listen to
Consistently answering that.
Yeah,
So how much 2020 is that be year 4?
correct. Director Williams?
So 11.49 isn't really listed, and is this the, I'm sorry, residential, or is this across all 3 sectors?
Across all.
Okay, so, but that isn't really listed as a cost directly in any of the rate tables, and nor is the FPPA. I mean, I'm looking at 110 now, and it shows cents per kilowatt hour. So I guess help me understand, are we expecting that the listed cents per kilowatt hour in something like 110 would change based on reflecting the difference between FPPA base rate and all other?
Our customers won't see any of these change, really. It's a way we're budgeting for that purchase power. I guess I'm not
So
getting
it is
the
a
question.
budgeting change, but it will not reflect any adjustment to the 8.63, 7.46, 5.27 in rate 110?
Correct, that's correct. So this is, we're not asking, this is not a rate action from the board.
No.
It is in the fact, in the sense that we're asking you to change the FPPA base rate and all other rates, but it doesn't change the rates on 110 or 115. That's just the way we collect rates. This is the way we generate that revenue. How we calculate all the revenue we're gonna need and where that revenue is coming from.
And the increase in purchase power has to be with, we had the previous discussion is about, you know, we have a lot more renewables online that we're paying for now. We're gonna have an additional renewable with Shoals. And the SPP, you know, it goes back and forth as far as purchasing power and selling power. You know, it's just a lot more volatility, exactly what you said, and that's why we need this.
Correct.
So going
It's,
forward-
in my opinion, it's a really good story. We've been planning for these.
good.
Now it's a
This is
time for
good.
us to reflect it in the budget.
It reflects all the changes that we have in generation
Correct.
throughout the system.
So you're making these financial changes to reflect that volatility. So the fuel purchase power, you're saying you're learning things. Well, we learned we have to move some money around. What other things are we learning? I mean, are there trends becoming now that you're seeing with the volatility at certain times of the year? I know weather and all sorts of things can impact this. Is there certain things you're saying, oh, now we see? Or is that something you can't maybe want to bring up today because of competitive reasons?
Well, I can't get into too many specifics because that'll give
But
away our competitive
it's many
position. But
people
yes,
learning.
to your point, we are getting better and better. We're relying more and more on data and data analytics and data science to try to understand what's happening around us with weather patterns and wind and congestion, and trying to figure out, okay, what is our best way to get the most value out of the market? And to the extent that we have exposure to the market, make sure that we have the right instruments, the right tools to hedge most of that risk. So this is an area that Troy used to head about a year ago. We have our Mark Trumbull, our Director of Energy Marketing and Trading. We're constantly looking at that. How do we extract the most value for our customer owners while protecting on the downside? But there is a downside. There's, without a doubt, we are seeing a downside on purchase power that, you know, we're paying more than we had been expecting. So we're trying to true that up in the budget.
I'll just ask maybe a clarifying question off of Eric's. So rate 110 so we're not making any changes to that, but on our customer's bill, they have a line item for fuel and power purchase, and that number will ultimately be adjusted.
Right. We're recovering more dollars for fuel and purchase power. We're recovering fewer dollars for all other, ultimately leaving the dollar amount the same.
So a bill this month will be very similar to a bill next November?
Kilowatt hour to kilowatt hour, if you look at the bottom line, should be exactly the same.
This is really a revenue neutral
Correct.
piece. The pieces, we're budgeting differently and making those adjustments in the budgeting of those components.
So we're basically just taking money that we had in one bucket and putting it in a different bucket for your budgeting purposes.
For
That's it.
accounting purposes.
For accounting
Yeah.
purposes.
Right.
Okay, thank you.
The numbers on the bill will not change.
Okay.
The FPA charges for the same usage last year will be the
Should be the
same
same.
usage in the future years.
Thank you.
But when it gets recorded accounting-wise, more is gonna go to FPPA than
Gotcha.
to the base revenues.
This makes sense now, thank you.
Next year, what this does next year, when I come to the monthly meetings or now the quarterly meetings and I talk about deviations from the budget, those deviations shouldn't be as large as the ones that were.
Gotcha.
I hope.
And I would just add the 11.49 cents represented the average residential cents per kilowatt hour in 2017.
Right, which
Okay.
goes into 2019 and we'll.
Yeah.
So it is just for illustrative purposes, but I wanted to show the one that goes up and the one that goes down, ultimately resulting in the same.
So Schedule 461 would be adjusted, where it says 2.068 would change to 2.305.
I'll call my expert in rates.
Yeah, please.
Yeah, so, thank you. So I'm gonna give you a little bit of a technical answer, but I think it's gonna clear up some of the discussion here. We pay a certain amount of money in fuel and purchase power, and by the way the FPPA tariff is written, we have to recover that exact amount of money from the customers. And we do that for a number of reasons. What Javier's describing is the incremental cost of purchase power will be included within the general rates, all general rates. So it doesn't matter what schedule you pull, it's gonna read the exact same way, and to Ms. Comstock's point, it's gonna be billed the exact same way, but it is a change. And that's the point of the illustrative example, is to show you that the all-in cents per kilowatt hour to the customer will not change. So it doesn't matter which rider or tariff you may pull from the service reg. There will be no discernible difference to the customer. But this change reflects that there is a change in fuel and purchase power costs on $1 per megawatt average.
So, I mean, a higher fixed portion and a lower variable portion?
Nope. So what I'm trying to say, and I'll recite, I think Ms. Comstock's is, you have a cent per kilowatt hour kind of on the bill, and then you have this FPPA factor that we've identified on the screen. Neither of those will change. So it's not a fixed for variable. It's none of that. All it is we're saying that we're incurring higher fuel and purchase power cost, and that higher fuel and purchase power cost will be absorbed into the general rate the way that it's published now. That's the change.
Okay, maybe I can follow up in person afterwards for clarification. Yeah.
Okay.
While we're talking about rates, can I just, I'm looking at the breakdown residential, commercial, industrial, and I realize it's different than this, but I want to make sure I understand it. Sorry, I'm in the weeds. I'm on page 41 in the draft. Residential rates, up 1.6, commercial down 0.6, industrial up 1.9. So help me understand.
This slide?
Not this slide, no.
No,
you're
sorry,
the
I'm
actual-
on page 41 of
Right.
this.
Oh.
I'm just kind of, I'm looking to understand, while we're talking about rates, and I realize it's different, Javier, so allow me, Grace, to extend the question to
Oh.
what explains the increase
So this
for
is-
residential customers in rates?
What we do here, this is an imperfect way for us to estimate rates. What we do here is how many megawatt hours or kilowatt hours were sold, or we're assuming we're going to sell,
Yep.
versus how much revenue we're receiving. So that's what generates the total
It's a pretty crude measurement, right?
Yeah.
So in other words,
This is not the rate, by the way.
Right.
It's a proxy that allows us to figure out, okay, are we staying the same? Are we selling the same amount of kilowatt hours versus the revenue we're receiving? And it gives you that stability. It's not the rate.
yes.
Very important to
Right, that's what I wanted to
Yes.
clarify. Yeah.
So, for example, in this case, we're assuming that, so from 2017 to 2018, the residential quasi rate, or this metric, went from 1147 to 1123. There wasn't a rate decrease. What happened in here most probably is we sold more kilowatt hours and we received slightly less revenue on average, and that resulted in that.
Okay, thank you.
But this is the metric we use under SD2 for the aspirational 20% below regional average, correct?
Correct. And the one we use is the one that you see down in the bars. It's a weighted average of all of our residents. And it is imperfect, but it is probably the best metric we have for us to compare to other utilities. The rate itself changes with other utilities, and so this is a way that it's equal for all. Megawatt hours, kilowatt hours, dollars are exactly the same. You get to compare utility to utility.
So what numbers reported to the EIA?
To the EIA, we report kilowatt hours and we report dollars. We report revenue, and the EIA does this calculation.
They'll have a rate, a state ranking of rates?
Yeah.
So which number are we reporting?
All of them, residential, commercial, industrial. The one we track for SD2 purposes is the aggregate, but you can see them all.
Right, thank you.
Yep.
The revenues include the service charge, the cents per kilowatt hour, the FPPA charge. Everything's in there, divided by the total kilowatt hours sold to each of those classifications of customers.
It includes pilot as well, right?
Since we're on that discussion, one of the debates that we've had for years, and it'll continue, it's in here we include the pilot payments we collect, right? Other utilities don't, right? So artificially, you could argue that our rates here might be higher than other utilities that are not including that in the revenue. We're getting down to technical aspects of SD2, but there's a lot that goes into the revenue and the kilowatt hours.
Thank you.
Yep. So going into retail revenue, this is a breakout retail revenue, and Director Moody, I think you asked that question earlier. Pretty flat residential, some increase here in commercial. What's going on in commercial? What we've added, we've reclassified some large commercial customers. There has been some growth in commercial, but most of these increased from $308 million to $314 million. It's customers that are reclassifying from either wholesale into commercial or industrial into commercial. And I would say the big change here is going from $222 million to $240 million. That is starting to show now, again, the revenue that we're expecting to see from the data center customers in Sarpy County. This is forecasted to grow year over year, and it's one of the reasons why we're trying to solve for that, along with the rest of the load growth. But this very much tells the same story that we've been telling you about load growth on the industrial side.
The $2 million decrease government muni, is that LEDs? I know it's not significant, I'm just curious.
Hard to tell. Some of it could be LEDs. Some of it could different changes in service. It's
All right.
too small. I can get back to you.
Nope, don't worry about it.
Okay. Okay, so Director Molhoff, you asked a question earlier about retail revenue. How much of our generation serves native load? Well, if this is an indication, I hope this helps answer a little bit of that. Of our $1.2 billion budget, almost $1.991 billion will come from retail customers. That's the bulk of what we do. This is not megawatt hours or megawatts necessarily, but it's revenue. $1 billion of our revenue comes from retail, and $164 million will come from wholesale. Now, of that, $66 million is going to come from NC2 participation contracts. We have half of our NC2 unit. We have 7 participants that take the power from that unit, so we categorize that as wholesale revenue. The other 97 is truly coming from the rest of our fleet that we own and that we put into the market. So when you compare $991 million of retail versus really $97 million of our, the rest of our generation into the market. It's a 10 to 1. Yeah. So something that it's not in here because we ran out of space, but these amount used to be much higher. We used to have more generation available. This is when we had Fort Calhoun, North Omaha 1, 2, and 3. We had more megawatts to sell, and we were getting paid handsome prices for those. When prices started to decline, one of the things that we did was let's rethink our generation mix. We voluntarily chose to decommission and refuel those units. Now we're selling less power into the market, and we're getting paid less dollars for those fewer megawatt hours. So if you had this graph extended another 5 years, you would see the decline in wholesale revenue to where we are today. We are relying less on that wholesale revenue, but that wholesale revenue is very volatile. Operating revenue, non-operating income, I know I'm running out of time here. The story here, you can see what happened in 2019. It's a story I've been telling every month. You see the burgundy bar and the blue bar here. These are interest earnings. The blue one, $20 million, is true investment income we got. This is true cash investment income we got. The $26 million is the mark-to-market effect of a lot of activities we've done in the district. So non-cash, it did go up, but it is really important for us to assume that in 2020, this is probably not going to continue, right? And it's non-cash. We cannot count on these. We account for it when it happens, but we don't budget for it. So what you see here in 2020 is that we don't have this piece here. We have higher investment income than in 2019. Interest rates continue to be low. There's a potential for them to stabilize or perhaps going higher, and we'll have more funds to earn that additional investment income. Other than that, pretty much everything is pretty stable. Okay, so this is one of the stories I want to tell. On operating and maintenance expense, you see this blue bar that started at $120 million in 2016? That was a purchase power amount we used to spend in 2016 when we started the rate, the no general rate increase. That has ballooned to $200 million now. Again, it's telling the same story I've been telling. This, our reliance on purchase power and off-system sales is significantly larger than it was just even 4 or 5 years ago. On the fuel side, pretty steady. In 2019, you saw a decline on fuel because we had 2 large outages in Nebraska City. We used less fuel, but it's going back up to historic levels. We have the administrative and general. We had some declines in 2016 to 2017. We had a lot of cost and process improvement initiatives trying to, take extract efficiencies and take inefficiencies out of the business. We did that very clearly, and we've been keeping an eye on increasing these at a very slow and very thoughtful way. So, for example, in here, we know Kate Brown has the humongous task of transforming our digital utility and investing in all of this information technology. Well, part of these increases that you're seeing here are going to fund some of these programs from an O&M operating and maintenance expenses. On security and cybersecurity, we have been investing in things that we were not investing as much in the past, and you see that trend going forward. Transmission and distribution, a clear increase here from, $80 million in 2016 all the way to $103 million in 2020. Great story. What have we been doing with vegetation management? What have we been doing with outages? And so Troy came to the senior management last year and again this year saying, hey, if we have reliability metrics that we want to hit, we need to make sure that we're funding our programs. This thing is not going to happen by accident. We need to be purposeful at investing, and so the team came together and said, this is a good investment on operating and maintenance dollars. Yes?
So our fuel budget has gone down for the past 4 years. Why are we projecting an increase in fuel next year?
I wouldn't.
Significant increase?
Significant increase? As I said, in 2019, we had Nebraska City 1 and 2 big outages. Those units were down for an extended period of time. We knew that we were going to use less fuel for that. So that artificially, this number, we knew it was gonna be down for that reason.
But in 2017, 2018, it was.
It's about the same as we have projected. Now,
Yeah, in
we-
17, we also had a relatively
We had
large
another
outage, too.
outage.
It was a Nebraska City 2 turbine
Right, yeah.
replacement, if I'm not mistaken. So that was out for,
And in 2016,
50
we
days,
didn't.
yeah.
So you can see the fuel in here. Now, Mary's team has a fantastic model where we lock in prices as much as we can, but we're also playing in the spot market and trying to lower the fuel costs and negotiations with transportation that will be coming here in the next few years. So we're doing everything we can to lower those costs, but these to me, it's reflective of what we've had in the past, and it doesn't cause me big concerns.
It just looks like a big increase from 157 to 188.
Right, right.
good question.
So I think that's all I have on this slide. Let me talk about the capital expenditures. This is another one that I'm really proud of. I would like to point to, you see this little sliver of BTBS in 2016? That turned into $10 million, that turned into 15.
What is BTBS for you?
Business technology and building
This
services,
is just,
IT.
this is just for people who are
So now,
listening in.
when you hear Kate Brown talk about the technological debt, this is a good example, a good illustration of what we're talking about here. We've been investing in our assets, transmission and distribution, production, and everything else. But that everything else, one of those is business technology, and we have consciously made big investments in that technology to the point that in 2020 we have tripled the amount that we were investing in 2019. Now, it's not just servers and computers, it's fiber, it's communications, it's a bunch of other things that we're doing to modernize our fleet. At the same time, one thing that I'm very proud of is that as we're increasing this investment, we are not necessarily letting go of any of the other investments. The big increase you see in 2019, $121 million in transmission and distribution, that was specifically related to big investments we did in the Sarpy transmission project. But as that project rolls out, or we completed significant portions of that project, we are not dropping funding for transmission to the level we had in 2017. We had a robust discussion with the Resource Planning Committee, the RPC, about investments we have to make in sustaining our assets and expanding our assets. And you will see here in the next slide, cable replacement. It's our second largest project. Cable replacement across the district. Significant needs for this, something that we are now ramping up on cable replacements, and Troy has one of those. I hope you didn't take that out of.
Yeah, no, that's.
I hope we don't have to replace that one. LED streetlight conversion continues really well. Distribution poles, conductors. None of these are single big, large projects. There are a ton of little projects, and it really goes into improving and hardening our system in rural and the metro area, where we're not letting go of the funding urgency we have. The largest project we have is a fiber network expansion project, something that you've heard from Kate and Troy, and before Troy, Mo Dogman on going in and really modernizing all of our fiber, where we used to have really old telecommunications. This is the last year. We've been making big improvements. 2020 marks the last year. It's not the final year, but it's the last major investment we're going to have in this category. We may have a little few things to clean up later on, but this would significantly complete that project.
Is this just fiber that connects all of our outlying offices?
Substations?
All our substations, critical infrastructure.
Substations, plants.
Down here you see repairs to the Arbor Railroad line. We own a piece of the railroad line between Nebraska City and the city of Lincoln. It needed repairs. It's something that we use, and it's part of our potential transportation strategies, and we need to make sure that we're investing in this asset that we invested in a while ago.
Will that make it fully functional at this point? I understand there was some problem with repeated loads between Lincoln.
Can't comment necessarily on that, but this is a big improvement. I don't know what categories as fully functional, but.
So this goes beyond routine maintenance?
Oh, yes.
Okay. Is the line still being used to the extent that it was? Not only necessarily by us.
I don't know,
but
15,
by-
20 years ago, but it is still being used.
We have
These
all
will,
access to the lines, correct, by other, yes, that's correct.
correct. And this will ensure that we will have access to that line for the foreseeable future if we have the strategic advantage to use it for transportation of fuel, for example. So something really important, we've already invested in this asset. It has strategic value to us, and we are continuing to invest.
There's local elevators that are using it now.
Well, and part of the, yeah, that's true, so
That's why I knew.
Midwest
Yeah.
Farmers Co-op, but
Right, the co-op is
also,
using it.
we've done some work with Gavilon as well in helping them, because they've had some other operational issues on a rail line that they had, or a spur that they had, and they've been able to partner with Mary's team to find an opportunity so they can move grain to the Gavilon areas. So it's a great little partnership to make sure that we're, creating that economic value in that region.
And from an economic development standpoint for prospects.
Correct.
Yes.
Earlier, I don't remember if it was in open session, it might have been in closed session, there was a comment about floodplains and risk. Very important here. The next item is the Nebraska City Common Levy certification. This is something that we are pursuing, that we're working with the Corps of Engineers and trying to figure out what investments we need to make down in Nebraska City to harden and to increase the resilience that we have down in that area. We are making some work. We're doing some work this year. We're completing some of that work this year that we have to complete this year, but we're planning ahead. What is it that we need to do to maintain that site protected, and that we have less probabilities of us going into the business continuity plan that we went to earlier this year.
And this is not just about the generating side, this is also about the
Correct.
Substation transmission side that has
Protecting all
pretty
of the assets
significant
within
flows.
the footprint. Thank you for that, because it is not just the generator, it's not just the intake,
Correct.
it's the big transmission assets we have in there, and things that we all worry about when we're looking at water and flooding. This is not it. There will be, very likely will be more continuation of this project in years to come, but this is our first big attempt to address that issue. Upgrade customer information system, something that in Julie's area, there's need always to upgrade and modernize our systems. This is a big uplift from business technology and customer service, something that we're already starting to plan. It's going to be a big project, and we want to make sure that we have adequate funding. And then the last one we have in here is the Energy Plaza atrium renovation. As you all noticed, the big changes we made on the 16th Street entry with the new cashier and the credit union side. There's more work to that. That was part of a comprehensive plan. Another part of this work is, I see we have some visitors today sitting here in committee. We have very limited space in this room, and one of the plans is to do a modernization of the atrium area so that we can better utilize our space downstairs to facilitate and have a much better flow of people and traffic for better public meeting type of engagement. So it's part of a long-term plan in Kate's area and business building services. As I've mentioned earlier, but I do have to show that we have issued debt in the past. However, none of these are what I would call true net new debt that is adding to our debt portfolio. In 2017, we did an advanced refunding. We issued debt to pay off all bonds. In 2018 and 2019, we paid bonds with cash and we issued new debt. All in all, the balance of our debt portfolio has not increased. But I have to show it here as we have issued debt. We are not planning, we're not budgeting for any additional inflows of cash to finance our capital program. Although, if the opportunity presents itself to continue to take advantage of market conditions, we will take advantage of that. This all brings us down to a net income. We had planned for $77 million, $69 million, $99 million, and $67 million. This is our $67 million projection for net income. What this does to us is we will end the year with enough revenues from operations and other income to meet our 2 times debt service coverage ratio. A reminder for the board and for the members of the public, this is an incredibly important metric we have in our financials. Basically what it says is that after we we receive all of our operating revenues. After we pay for all of our operating expenses, we have operating revenues that have to be equal to 2 times the amount of money we have to pay debt service. So we use 1/2 to pay debt service, and the other half we use to pay cash for all of our capital projects. That's a really, really important metric. Our legal responsibility is for that metric to be 1.4 times. That's the minimum. We have for years established that as 2 times, and that is what gives us this financial health that we are all enjoying. But this $67 million net income is a result of, this is what we need in order for us to end at 2 times debt service coverage.
That's reinforced by language in SD, right?
In SE3. That's, the access to markets. Rate stabilization account balances, we're not planning on using it. We're still planning on keeping the same $50 million in there. I'm going to just go quick on these one. I've talked about the decommissioning and benefits reserve account. We're not planning on making any more deposits in 2019, and we're not counting on any more in 2020. If we get additional revenues from the market than we expect, we will, right? But we're not planning on it. Decommissioning fund balances, this is the graph that I mentioned earlier. The balances continue to grow. The ending balance continues to grow. Next year, we're planning on depositing $124 million. These are all preliminary. Some of these may change to the December final COP. We're finalizing all the numbers that we have to take into account. But according to this graph, we would deposit $124 million into the fund. We will earn an additional $11 million in interest, and we will use $116 million to do work. This combination results in an increase in balances from $552 million to $571 million on both decommissioning trust fund combines. Any questions? I'm going really fast. Our debt ratio is expected to decline. We're not increasing the size of our debt portfolio, as I've said many times now. We are paying down existing debt as it matures. We are adding more capital. We're adding assets. Our asset base is growing. We're maintaining our cables. We're maintaining our poles. So all of those things combined result in our debt to asset ratio declining from 65% right after the Fort Calhoun decommissioning decision down to 58% in 2020. Full transparency, we have a typo in your book in pages 30 and 31, that 58%, it says here 60%, that will be corrected. It is 58%. So this will be corrected for the final COP. I just want to be completely transparent on this. There was a typo. So this is a great story. One of the questions I get is 58% where we want to be? Well, our peer utilities are typically in the mid 50% range, so this is not a bad place to be for that. Coverage ratios, I'm not going to get into these too long, but it shows that on a planning basis, we're assuming a 2 times debt service coverage ratio. This green line is really the one that we're focused on all the time. We are planning to meet that 2 times debt service coverage next year. Days cash on hand, pretty stable. This year, we are paying a lot more on purchase power. We've talked about that at length. Our cash balances are declining. We have paid more on purchase power than we have recovered in the market. It has had an effect on our cash. However, with the new change in the 2020 budget, we expect that to revert itself and to help us maintain that 223 days cash on hand that rating agencies like us to have. In your book, there's only a one-page summary from New Generation Strategies and Solutions, LLC. This is a consulting firm that has looked at our budget assumptions, our budget processes. They have data from a lot of other utilities in the nation, and they're the ones who come in and say, are your assumptions okay? Are you being too rosy? Are you being too conservative? Do you have a good budget put in place for now? This is just a one-pager that you get on the draft, on the preliminary COP. You will get a little bit lengthier letter for the final budget. But again, this is something that gives me peace of mind, and it should give the board peace of mind that it's what we're doing here is reasonable. It's commensurate with what other utilities are doing, and that we're really not burning down the ship, if you will, just in an attempt to keep rates low. That we're keeping rates low, but that we're also making good, solid investments to meet our directives.
And first timer question here, have they done similar reviews of the COP in the past?
Yes.
Yes.
How long has that been going?
Forever.
Many years.
Forever.
And Gordon Vanek actually came and spoke to us one time, I believe,
Yeah.
about this.
So, right, we've had different firms and different employees participate, but this is something we've had for a number of years.
I wanted to go back to the decommissioning fund balances slides, just a couple back. So just eyeballing it, looks like that's been going up about 10% per year, but slowed down between last year or between projected and budget.
Yep.
Are we kind of reaching where we want to be?
Yep.
Is that why that's happening?
Yes.
Thank you.
Yes. We're reaching where we want to be, and I'm not ready to talk about that in details, but I believe that it's just a matter of a couple more years, 2 or 3 more years of additional investments for us to have the funds fully funded, at which point we can turn to trust earnings and balances to pay for the remaining of the fund.
Thank you.
Yep. Yes.
There's a grant that we're working with the Nebraska Environmental Trust on battery storage, and would that be under transmission and distribution budget, or does that go, because we have to pay a portion of that, and how is that funded then if we get that grant? Does that go through production or T&D, or
So let me
where does that fit in the
let me
budget?
address this in a bigger context, not just necessarily the grant.
And I know that's way down in the weeds, but it's just something that
During the year, we will have needs for additional funding for different reasons. One that you mentioned right now is if we apply for a grant and we get a grant halfway through the year and we have to match some of that grant money, are we budgeting for that? Are we budgeting for if we have more storms than what we need? I knock on wood here, but if we have more expenses than we're forecasting, there's 2 different lines of thought here. You can budget for a lot of that and end up with a lot of money at the end of the year that you didn't use, or you can budget exactly what you think to your best guess and then have a good liquidity and a good reserves behind to help you if you need more funds. So we operate under the latter, where we have good liquidity and good reserves in the organization. If we get a grant, for example, in this case, halfway through the year, and Troy, if it's in Troy's area, or wherever it falls, or if it's in Lisa's area, depending on how we functionalize that, and Troy comes in and says, "Hey, I'm full with my budget. I'm meeting all my budget. I can't afford this additional $500,000 piece for the grant, but it's a good thing for us to pursue." We have the financial wherewithal to come in and say, yes, we can fund it. We can fund it either with savings from the remaining of the budget or with cash, and we should be able to make that work. That is a much better and much more conservative way of budgeting, as opposed to us budgeting for something that may or may not happen. Now, if these were tens or hundreds of millions of dollars, we would have a different discussion, right? But the order of magnitude of these small ones it's such that we can manage within the year in the budget.
Can I ask a follow-up question there? What if we do not get the grant? How would we be prepared to proceed anyway if we did not have that funding available?
In the same way.
In the exact same way. Either we pay a portion of it or we pay the whole thing. If it's something that it's strategically important and that we're going to go and do, we will.
How do we indicate that? Is the COP a place to indicate that, or what is the way to indicate that that pilot version of a project would be strategically important?
I would say so. I'm going to turn to Scott. This is where we management we have the ability to figure out what programs we're funding, so that then we can meet your strategic directives, right? If this particular program or this particular investment is something that furthers our advancement towards strategic directives, we'll do it, and we will be very clear when we do the monitoring report and, hey, we did X, Y, Z to further that. That's the way we would do it.
So, I mean, as we're setting what, and you're responding with how, I think it seems inappropriate to say what is complete this battery project. So I guess my question is, how do we translate, how do we expect that discussion happens between what and how on a specific project like that? Is that a discussion in systems? If so, that's
I
great.
would say through the monitoring reports. What you wanted to do, it's the SD. How we met that is the monitoring report. I am responding to you with how we would meet, and we will show you, demonstrate that we are meeting the what you asked us to do with the strategic director. That's one idea.
And that's, and that's a reactive response, because that's only a once annual monitoring report. So if the project does not proceed, I guess, sounds like systems was a good place for this discussion, so that sounds like a great thing to have.
It's a good discussion.
Yeah, let's flesh it out there.
Great, thank you.
So I was looking quickly at the 2019 corporate operating plan, and Tim, your letter talks about a 10-year strategic plan to support the 15 strategic directives, which I don't see in this letter, a mention of that, a 10-year strategic plan. I'm just prefacing the question, which is, when does Power with Purpose show up in the corporate operating plan? And how then do we as a board understand the knock-on consequences of Power with Purpose to a corporate operating plan that's a couple of years in?
What you're asking is,
So-
what's the financial consequences of our Power with Purpose
Sure.
in the future?
Yeah, but then tying it back to a once referenced 10-year strategic plan and our input to that, it's kind of the same, similar sort of question that Director Williams was just
On a
asking.
larger scale.
We have made big assumptions here on funding for strategic initiatives. And I'm happy to follow up with specific of what have we assumed further all the strategic initiatives. Power with Purpose hasn't been approved. Power with Purpose is something that's going to be on the board's desk to be approved on Thursday. When that happens, if that happens, we will make sure that that will be one of the revisions that we will come in and put in for the December final COP.
Yeah, so I understand that answer. To help you understand my question, it's I mean, the lens I'm trying to find is how to evaluate, what that Power with Purpose would mean to opportunity costs, to larger, what can we and can't we do if this one project becomes real in a future budget.
So I think and what we shared months ago is kind of what that increasing revenue stream will look like because of the growth, and what this cost piece will look like over some period of time as it's approved, and as we begin to lay it out in this 2022, 23, 24 timeframe that we shared earlier with the board, and what those implications would be from a capital or from an O&M related perspective. So specifically on the Power with Purpose, that's how we would lay it out. Once all the bids, all the execution of the agreements, what's the timing look like, then we'll begin to flesh that out in a broader financial plan that will show revenues, not just in a 1 year, but a multi-year, and what those costs look like, whether it's capital or whether it's O&M. I don't know if I'm answering that question, but you will see that as we get through, because one of the commitments and conversations that we've had and questions that we have had is, what's the financial implication of Power with Purpose? And we believe, based on what we've seen and what we see over these next 3, 4, 5, 6 years, that we would anticipate any increase in rates to move to the Power with Purpose, right? And so we'll validate that, we'll understand that once we get the bids back and understand the full scope of that. But that's what we believe today, based on some of the things we're seeing.
And fair question. Thank you for the clarification. I agree with Tim. From my perspective, my vantage point, and I appreciate we haven't shown you a full-blown financial projection on these, but we do not believe, I firmly believe that we should be able to keep our rates pretty stable with these. What we're doing with Power with Purpose, and eventually we'll do with the Pathways to Decarbonization strategies, is replacing assets we had with new assets. It's not necessarily adding new assets and new costs. We chose, very hard decision, we chose to decommission Fort Calhoun Nuclear Station 3.5 years ago, or thereabouts. We've been paying that off. We still have a little bit to go. We are replacing that asset and that cost with new technology that we're about to install. We chose to refuel North Omaha 1, 2, and 3. We are now looking, Power with Purpose proposal looks at shutting those down completely. We are replacing those costs and those assets with new assets. We have been planning for this transition for years. Very difficult for us to do this Power with Purpose transformation that we're proposing at the same time as we would be shutting down and decommissioning other assets. That would be really hard for us to do, something that would potentially need a rate increase. But the timing and the decision that this board and your predecessors made a few years ago is what's allowing us to make this transformation without necessarily requiring additional revenues from our customer owners. In my perspective, it's working out as planned, and it's not by accident. It's a lot of really hard work, but I would characterize this as a replacement of assets and costs, not an addition of. Eventually, inflation will get to us. I'm not saying that we can live with the same dollar amount for the next decade or two. Eventually, we have, salaries go up and the cost of goods and services go up. Eventually, at some point, we'll have to naturally increase rates, but not necessarily because of these big investments we're making today.
So it sounds like previous decisions in 2014, updated in 2016, and others in the past, at the time, there wasn't a specific answer to how those would be carried out, but this is a specific answer to carrying that out, but hasn't yet been reflected in any of the financial planning documents that are updated annually. So I guess looking forward, I'm curious how that process is going to be reflected. I mean, how we expect future changes to be reflected and available for review, and so we understand the full scope of the decisions that we're making at the time we make them.
There are a variety of ways of doing that. But in 2016, we did talk when the decision to decommission Fort Calhoun was made. We made also the decision to keep rates stable for 5 years.
Sure, but I guess we didn't know we didn't specifically outline at the time what additional resources would replace that, and this is the implementation of that.
Sure.
And so I guess the planning that goes from a decision that happens based on some generation assets that we have to the time when we have replacement assets available. I mean, I guess I'm also interested in seeing more clarification of how one decision impacts a future decision, because each time we make a big decision, it will have impacts on the potential to make other decisions. And so I'm curious how this decision will be reflected 2, 3, 5, 10 years into the future at other times when COPs would be presented.
Yeah, I would say as we begin to lay out the decarbonization pathway strategy, you'll be able to see very clearly how this is the impetus for that broader decarbonization strategy. And so our intent is to kind of lay out what that looks like.
So we should expect that we would have kind of a projected total annual budget for future years or total annual carbon emission for future years that is summary level, but not to the detail of a COP out of the decarbonization study? Probably
not detailed, because again, I think if we had to make this, well, to your point, if in 2015, when we made the decision on Fort Calhoun, and we didn't make the decisions on what those technology changes would be, and I'm glad we didn't.
No.
Right?
We would have never had solar as a
Probably
choice.
would never have had that in place, right? So.
Yeah, but those, sometimes you just don't know.
No.
I mean, when you're making those decisions, you say, here's the trend, here's where we're going. We didn't know solar prices would be what they
Solar
are.
prices
Didn't
would be
know.
what they are.
So all that, it's just, you don't know. So you make your best
But-
educated judgment and move ahead, but.
To address
who knows
Director
what
Williams'
we'll
comment,
find.
and this is a comment that you've made to me in the past, we are working on developing different models that should give you the right amount of information on rate projections or financial projections at a high enough level that gives you that comfort without us necessarily getting into the specifics. As you see here, the volatility we get from year over year on purchase power of system sales, this operation is very different than any other government operation where your costs are payroll and facilities, and you move forward. This is a big chunk of our budget is very volatile. We can certainly project, and we can share with you the different scenarios and sensitivity analysis, if that's what, something that would be interesting.
And the 10-year strategy was really, our intent is to build out what that 10-year financial model looks like.
Right.
Never have we really looked at that. We've looked at that in 1 or kind of 2-year increments. Our
Right.
intent is to really kind of begin to build that out and what that looks like. But I think as we specifically get to generation resources in that decarbonization pathway, you're going to see what that looks like. So as you begin to reduce carbon, here are the implications of that, one way or another, whatever that may look like. So you'll begin to see kind of what that pathway will be in the future.
With all due respect, and I appreciate your answer, so with the all due respect doesn't sound like a good start.
Thank you for
Yeah.
I appreciate that.
But we have other issues, including
Yeah.
decarbonization. So from the rural areas, I think I spoke to someone asking a question about Greenwood, which moved from a single feeder line to now have 2. And I think Greenwood was not alone as a rural area that has a single point vulnerability. Rural areas, I was just reminded in one of the committee meetings, they pay a lot of money on their bills, and they have greater resiliency concerns, I would say. And so how do we address not just decarbonization,
Yeah, right.
but other things
No doubt.
that you know, if we dive into a very big power with whatever PWP is, you know, are we somehow precluding some other action?
No.
Well,
And
No.
where's that planning?
Well, in an
for
example,
that?
right now, this month, an action item is the Metro and rural cable replacement. Metro and rural cable replacement for about
And I'm
almost
very
$3
happy
million.
to see it, and it's a
And that's in this-
continuation
that's in
of
this
an
budget.
aggressive program that I'm very happy
Yeah.
about.
So-
And yet
That's an
there's more to
example.
be done.
So I'm sorry, but I think what you asked was, by making a big decision where we can make a large commitment of financial resources, we absolutely are making choices about other things that are not available. By committing to contracts for large-scale utility solar and gas backup, yes, we are making a choice about those resources not being available for other things in the future. And I think that what we've talked about.
I disagree.
Wait a minute, hold on. Absolutely, absolutely we are. By committing to a contract, those resources are not available for other choices in the future. That's not, I'm sorry, that's
As
not
long
really a
as we
point
aren't
of,
raising rates,
Although-
you gotta
that's
find
not really a
out.
point of contention. We have decided where those resources are going to be allocated, and that means that other choices are not available. And that's what you always do. That
Well,
is
there's
what,
always something, but at the same time, I think what we're getting into is the discussion about the power
And I guess-
purchase.
I guess-
And I think
Well, where
maybe we
does-
should relay that to that. Let's keep this to the corporate
well-
operating
Well, no,
plan
he's
for
got a
next
good-
year.
and my point
It's
is
a
that
planning
Rick is highlighting
Yeah,
that
yeah.
by
I see where
making
you're
certain
going.
choices of large financial allocations in the future, other choices are not available. And that is inherent to making those choices, absolutely. And so the question is, how are we understanding what other choices could be available as we move forward, so that the next time we have a large financial decision to make, we understand all of the options that would have been available, but that when you choose one, the others are not still available. I mean, that's what happens when you make choices, is
But-
that one of the choices has been, finalized and goes to RFP and contract, and then the other options are not moving forward. And so,
You
I guess,
always have priorities, that's true. And
So
I think
I-
it's prioritization,
but I think that that's
as far
a,
as looking at.
I think that's a very relevant question to our COP,
like-
because, I mean, the fact that it's not in here now, I understand the logistic reason that that's a voting item this week, so it's obviously not included now, but
Right.
I'm curious to see what the update to this document looks like if approved on Thursday, because the impacts of a decision like that are very significant.
And you may not see them in
We're
2020.
not gonna see
Right.
it in 2020.
Right, so you may see them in
2021.
2021, 2022, 2023, but that's part of, once we get the bids back to kind of lay out what either of those PPA or capital investments look like, you'll be able to see what that looks like, right? Because we'll have the factual data to be able to do that.
And
One thing-
if I may, and going back to the COP, the way I look at these, you have established 15 strategic directives that are governing the way we do things, all the things that we are delivering. So to me, what we have put in place in the corporate operating plan is optimizing and maximizing our resources to meet each one of those. When you're talking about resources that we don't use on one place that could be used on another place, it is inherently a decision, the natural tension that you have between strategic directives.
Sure.
Do we do more on reliability? Do we do more on carbon emissions? Do we do more on employee engagement? That's management. That's what management is trying to do every single day of the working year, and that we come to you 15 times a year presenting through the monitoring report to show you how we're meeting all those and those conflicting tensions we have. But it ties very closely to the budget. It's very intense discussions I've had with Mart, and friendly discussions I've had with Mart and Julie and Lisa. They have monitoring reports that they have to present, and we're trying to figure out what are the trade-offs on those resources. So that's what I would offer in terms of how these ties to what you've asked us to do and how we're delivering on the strategic directives.
Although, just this is my opinion as a board member of what you're saying. I see what you're saying. A big decision. Does it handcuff you that you can't do other things? I think that's what you're kind of saying, right? And I guess it's a big decision you get once every 5 years or whatever the case may be from what I've seen. But I don't think it kind of completely handcuffs us from doing other things, because we all, as board members, have a decision to set those priorities, as Ann says, as we go down the road, whether it's whatever those may be. We don't know what those are yet. So to say, well, I mean, this is just a one-year operating plan. There are options out there. I mean, we act like we never have another decision again if we make, I'm not saying that, I should back that up. But it's a big decision, but there will be other opportunities to get in other directions and keep improving as we grow and learn more, and just those. So I'm just saying, I think you'll have options in the future. There's a reason these are 6-year terms for everybody, that you can think longer term. That's just my opinion.
Well, the question's a completely fair one, which is limited resources, we make choices, we make priorities. And to me, I think we should be looking at it in two ways. What is this potentially preventing us from doing? But we should also ask, what is this putting us in a better position to do?
Right.
Yeah, I think I mean, from a corporate operating plan, to your point, the impact on 2020, my perception is that it's probably pretty negligible.
Yeah.
But it's, to me, this is a conversation probably for our systems discussion.
Well, let's have a look.
That's what I thought.
Hold on, we got
Okay.
one more.
We've got
Well,
more.
one more item.
Hold on.
Mo, do I have to?
Talk too
No,
much.
I just talk to it, right? No
Hey,
slides?
Before you get to that, I've got a question about, so we've got a big, huge meeting on Thursday, obviously. We don't vote on this till, what's your ideas for giving this presentation length, deep dive or whatever? Is this on
Talking about the corporate operating plan?
Yes.
Yeah, it's
So
not
Thursday's
intended
how
to be
much?
on Thursday at all. This is
Okay.
intended.
We always have had that a month before.
I'm just telling you what the management's perspective was on this, is that this is something that the public can either watch today or come back and watch at a later date, and then whatever modifications that we would make over the next 30 days between the November and the December board meeting, we would note what those changes are, probably in an abbreviated kind of perspective, but certainly, we are always open to questions or comments or whatever that may be from the board members and certainly from the public on this kind of presentation that we would do. So
It's available online, or will
it will be, yeah, by Friday or whenever, Monday or
Sorry,
something like
what's
that.
in the video? Is that what you're asking?
No, this
Corporate operating
presentation, this meeting.
Ask that again.
So will
What
the corporate
information?
operating plan be
Yeah.
available for public review, or the preliminary
Yes.
corporate operating plan be available
It's
for
already
public?
posted at, this
Great.
particular one is
It's already
already
posted.
posted
Thank you.
for the view for today.
Well, the reason I bring it up, we've never done that before in the past.
Nice.
That I can remember.
That's right.
It's always been a good discussion on, I'm not saying I need a longer meeting, don't get me wrong. I'm just saying, we need to make darn sure we get that out there.
Yep.
We used
Thursday,
to
that it's
include,
visible.
we used to include some sensitive pricing information, which is what prevented us from sharing it publicly.
Change.
Since we've removed that so that we can then, it doesn't really add much value to the reader, but it doesn't
discussed
reveal
that.
competitive sensitive.
I think that's a great improvement.
As long as you're all
Post
comfortable.
that
I agree.
online.
So
It's a good
let,
flag, yeah.
let me,
Lisa, you want to talk
yeah,
about
one
stakeholder
other
process?
item here. So usually we wait until after this meeting is done and so forth, but I talked to the team to make sure that we can get this posted ASAP.
Thank you very much.
I have one last item. I've alluded to it many times during the presentation, and that is the resolution. This is an action item that's coming to the board on Thursday. The board, when the board approves the corporate operating plan, you basically appropriate funds for us to expend, not to exceed a certain amount during the year. That amount was $1,177,900,000 that was approved last year for us to spend in calendar year 2019. As I've mentioned before, we have been experiencing significant increases on purchase power amounts to the tune of an additional at least $35 million. We believe that amount could land anywhere between $35 and $50 million of additional expenditures that we don't have the authority from the board to expend. Now, we have thankfully also recovered revenues from the market and off-system sales, and I talked about the rate and the fuel and purchase power adjustment we're making, but this only looks at our authority to expend monies. And without this resolution, we couldn't legally go out and complete expenditures as required. So the proposal here is to increase our expenditure authority by $50 million to cover the potentially up to $50 million. We believe the value is to be close to $35 million. This is not changing budgets. Really, really important. I've talked to my team. It's not giving anyone a carte blanche or a pass. Everyone is still living with the same budgets they had before. This is strictly just a legal authority for us to go out and expend monies. We will significantly exceed our budgeted amount for purchase power, which is the main reason why we're doing this, but we're not resetting budgets. That's important to clarify. So this will be for your consideration on Thursday.
And is this going to be on the consent agenda or the action item? What is the committee's suggestion?
I don't think it's. I do too, I think.
Thank you.
Wait, there's nothing.
I just want to verify that.
Yeah, I do too. When you're changing budgets like this, it's.
To explain it to the
That-
people
that's
exactly what it is, I think
Yes,
that's
I
a
think
good
it
idea.
should.
I don't have big issues with it, I just think it needs to be a separate item.
Yeah.
Yeah.
So discussion item?
So, no, it will be, yeah.
Well, it'll be
it's-
action.
It's an action item, not a
But
consent.
not part of
Not part of the
consent
consent.
agenda.
It will be an
So
action
yeah, it'll
item.
be somewhere down in here in other action items.
Or if you published it, we can just pull it from the consent.
No, this is this year, this month.
Well, Could you just verbally
This is
pull
this
it
month.
to?
We can just make the change.
No, no.
No,
Those already on
I
top
can
of
make the
it.
change.
Make
The
it-
change for the other will change.
Yeah.
Yeah, that should be.
Any questions or comments on this?
Okay. Yeah.
Thank you very much.
So with that, I conclude the brief finance presentation. Thank you.
Thank you very much. I think we're going to break for lunch.
That's a good idea.
And you think that's a good idea? Okay, thank you.
What time do you want to be back in here, ready to go?
How much time do we want? 20 minutes? Have a break. If we could please have public information. Director Moody.
Let's do it. PI committee met on November 8th. And there were 4 items on the agenda. I'll briefly discuss 3 of them, and then I'll turn it over to Ms. Wilson to talk about SB 1300 report. We had a very brief discussion about our customer engagement process and the role of directors in public engagement efforts. I think it's fair to say that many of us have been out doing events and reaching out to constituents in anticipation of their Power with Purpose proposal. We've run into kind of a couple squish areas that we needed to discuss a little bit more to get clarity on what is a board member's role with respect to outreach to our communities, and to what extent are we acting on behalf of the district versus acting as an independent director. So we didn't get into it in depth, but fortunately Scott and the team had some discussion leading into that, and so there are some next steps which I'll hit on, and then Scott, feel free to highlight if you need to. First is to define really kind of what is black and white and gray in terms of what our role is. And they'll come back with a proposed direction about what is and what is not considered official business on the part of the board when it comes to outreach. Second, their team is going to reach out to others to see how they handle it. So that's the LPCC and Eric Douglas were two that were mentioned. And three, how can we establish something that protects board members and OPPD? So what we don't want the board to get into is a situation where we're using the district for our own political purposes, right? That's a no-no, bright line, but exactly where that line is something that I think we still need to get clear about. Anything else that?
No, you did a great job.
Okay, it was a brief conversation. There's more to come, but that was the gist of that conversation.
You know, and if I can point out, there's been comments that people have not been able to hear. So if everyone could project into the microphone when you're talking, and make sure the microphones are down, the microphones were up a little high. So Janice, if you put your.
Thank you very much.
Thank you.
Skipping to number 3, potential rate changes. The Finance Committee had kind of a similar discussion, so just reflecting a little bit on what the PI Committee, this is the first time that the PI Committee has had a discussion about what the potential block rate changes might look like and include. I'm going to back way up actually a little bit and remind everyone that the PI Committee several months ago brought forward a few different rates where we expressed customers were coming to us with concerns. This is one of those rates. And in doing so, and over the course of a couple meetings, and in discussing with senior management, we had some discussions about what the pacing for potential revisions might be. The block rate changes originally there was some potential for some of those changes to come forward yet this year. I think it's fair to say, and again, I'm totally summarizing, and many of you colleagues have seen all of the same information. It's a heck of a lot more complicated than I think we originally imagined.
Oh, yeah.
So it appears as though, at least there was a robust discussion, and so I'm trying to summarize a variety of different perspectives. Many questions remain, and I think maybe I have a question from a governance perspective. It's my perception that PI's role in this is really to raise the flag for customer concerns, but it's the Finance Committee's role to determine what the pace will be and when changes will come forward. Is that, from a governance perspective, is that true?
Yes, that's what's been outlined in the charters that you all reviewed and approved last February? March?
Yeah. So, good discussion, but I think it really kind of kicks it back to the Finance Committee to determine when we're going to take next steps and what those next steps will be. Yeah, you've got a comment.
So actually we did have a sidebar conversation with that too. We have discussed it, and again, I think you hit the nail on the head. It's more complex than everyone thought. Looking at it, there's no quick solution. So probably a suggestion would be just set aside a time, that's all we're gonna look at and have it a separate goal. With all the things going on now, it's been difficult, obviously. But say that's the goal, we're gonna look into it and make a decision one way or another, how you wanna go. But to get all that information together, there's a lot to take in. So that's my recommendation to whoever's finance chair next year.
Yeah.
And management has done a good job as far as getting all the data and everything for us, and, they've been able to explain the intricacies of this, and it's not an easy answer.
Yeah, and if anyone else on the Finance Committee has a comment, I think that sums it up. It's tough. I mean, it's a complex thing. We want to make the right decision going forward. But once you gather all the data, it's like, oh boy, what is that?
Yeah, there are a lot more people impacted. And there are potential significant impacts for certain customers.
And there's so many different customers.
Yep.
There's not just one fix. Oh yeah, that'll take care of everybody. I think that's the hard part.
Yeah, and from a PI committee, the last thing that I would add is that if we're going to make a rate change that is going to impact people, especially if it's fairly meaningful, we should do some outreach. And we want to allow time for that to happen as well. So I think more to come, but we'll let the Finance Committee kind of dictate the pace and where that goes. Rate 464, as I mentioned, I've stepped away from this conversation, so does anyone else on the PI committee want to give us a quick update on what the 464 discussion might entail?
Director Williams, if you want. I took some notes.
Yeah, rate 464 is a reminder is the standby demand rate rider, which talks about resources that in general was designed for generators, but now we have heard requests from customers about how that is being implemented relative to basically solar or intermittent distributed generation from renewables. So we talked about how rate 464 is not the same as other types of distributed generation, specifically residential distributed generation, and how the requests that we'd heard from both customers and from people who would be potentially implementing projects was specific to a kind of commercial scale, non-net metered, but behind the meter type of distributed generation, largely from rooftop solar. And that was the request, was identify whether or not this rate is hindering the ability of those projects to move forward. And so I think we got some clarification on the specific area where the request was coming from customers and from the people who would be developing those projects. And I think I think we were looking for more information from staff moving forward. Does that seem right, Rick?
Yeah, well, I think, yes, that seems right. I think for, not everyone was in the room, obviously, and so the entire committee wasn't there, but we encourage staff to consider looking at this and act urgently. Not urgent's too strong. Give it due consideration.
And if there were any changes, this would again go back to finance, to the rate, because that would be rates. This is, right now, it was the outreach and the discussion as far as customers.
Yeah.
And then again, this would move after everyone thinks that this week could be a rate change or a rate difference or a different rate, this would go to finance.
Yeah, and back to Director Moody's comments about the role of the PI committee. My sense is that the story I've been hearing is that this particular rate is seen as a barrier to the adoption of new technology. And so we kind of have to think about what is the unstated but potential perception that that OPPD is being a barrier to commercial adoption, new jobs, economic development, all kinds of good things.
Right. More to come on that one.
Okay.
Thank you.
Yeah, thanks for covering. I appreciate it. Okay, we are on to the monitoring report for Strategic Directive 13. Ms. Olson.
Great, thank you. Thank you, Director Moody. It's my pleasure to be reporting out on monitoring report SD 13. The game plan was I was hoping I'd be able to do SD 11 and 13 in the same month, but this is my second month here, so just wanted to let you know that. Another reason for 11 and 13 coming together is because last year when I was in front of you, we had done a organization kind of realignment where I had brought economic development, community outreach, and government relations all under the leadership of Tim O'Brien, affectionately called T.O., since he's our quarterback. And Lori Zagurski has been great to lead our stakeholder outreach, and then Seth Boyles in terms of our government relations and so forth, all reporting into Tim. And the reason for that, why that's important, is from this monitoring report, you're going to find that the lines are getting blurred a little bit more in terms of community outreach and stakeholders and so forth, because I'm standing here as one individual, but there are 1,800 employees that on a daily basis are out making connections with our customer owners. You're out making connections on behalf of your constituents and so forth. So just wanted to kind of set context there for that. So last year also, the PI committee had gone through and made revisions to SD 13, and this is where we had landed. I'm not going to read all of it, but I'll give you examples. And as I go through this, I have a toolkit that we use, and then I will give examples. So hang with me. And then I'm going to end with where Mary and I are going to talk about Power with Purpose. So more information. This will be a high level on that, and then Mary and I will get into the actual report out on that. So last year, we said, you know, we've been recognized as a leader in our stakeholder outreach, but we wanted to confirm and verify that. Truly, what is best in class? And so the team reached out to the International Association Public Participation 2 Spectrum, and this is really considered one of the best in classes and so forth. So this has been really helping to guide our outreach. And it's important to note that the levels stand on their own. So it's not one of those that you may start with inform, consult, involve, collaborate. You may start with inform, or you may start a project on collaborate. And that's another one of the improvements that we have made this year, and will it continue to improve in 2020, is that as the teams do their outreach, we'll sit down and say, what is it that is the outcome that we're looking for, and how can we measure that? So more to come on that. So I wanted to give you some examples. And like I said, these are the toolkits, and I'm not going to get into all of the specifics in terms of that, but live stream and committee board meetings, you know that we added that, and that has gone over extremely well. Since January, we have an average about 33 external unique people that watch the committee meetings, and then they also do watch it at a later date once it's posted. But it's been interesting. I talked about this in PI. The employees are watching. And they're averaging anywhere from 110 to 150 employees that are watching as we particularly do these committee meetings. Open houses are part of the toolkit, leader meetings, and we'll talk a little bit about that. Workshops, our online research panel, and I'll get more in depth on that. We are at capacity at 5,000 of our customers that are engaged in the online panel, and I think some of them are in the audience in the back row there. OPPD listens feedback, which, as you know, has been getting a lot of traffic with that. Social media engagement, and then the project town hall and so forth. So one of the other components that is really important is the relationships that we have with our communities. Recently, we've done about 6 CEO coffees in our communities and so forth, and it was so, I talked about this at the Fort Calhoun Station Decommissioning Oversight Committee. Tim and I and Tim O'Brien were able to sit down with the city administrators of Fort Calhoun, sitting at City Hall having coffee, and the heartfelt comments that they said that were so genuine that about how OPPD really engages with the community, engages with the employees, and even in light of making the announcement to decommission. So, and we've heard that all along the district. So those are really important, and community events, and we'll talk a little bit more about that. We get over 100 speaker bureau requests a year on that, and so we're going to be adding some new items for that. And then board and organizations and one-on-one relationships. So I'll talk a little bit more about the research, because that really is tied to SD5 in terms of customer satisfaction, and I'll talk through some of the components of that. So share context with customer owners for key decisions, and I'll give examples of that, but I just wanted to let you know some of the improvements that we've made. Approximately on social media, we have about 9,000 followers on Facebook and about 10,000 in LinkedIn. We have work to do there, averaging about 711 new users, and then we also, that's about a 30% increase. Pleased but not satisfied. So we're implementing a social media ambassador program all across the district and so forth, so that our employees can engage. But we're giving them the tools and so forth and how to do that. Actually, right now we have 54 employees that are participating in that social ambassador program, so we appreciate that. Other items is outlets, community events, letters, OPPD listens, and the technology debt. Kate knows that we have work to do on OPPD.com, and we are going to strive to keep improving that experience. So you have our commitment on that. So stakeholder outreach, I just wanted to step back and close the loop on community solar. Last year, we talked about that particular, we brought stakeholders in, and this is where Dr. Corbin probably stood up at the board meeting and said, you're moving too slow in that regard. But you know what? The beauty of that is that program sold out in 49 days because of all the work that was done from a stakeholder standpoint, and really using the inform and consult, because we listened and made changes before we rolled that out in terms of could people understand it. So really stakeholder portion of education is confirming, do people understand why we're doing it? You've heard me say this a lot. success for stakeholder, in my opinion, is that not everybody's going to be agreeable to the outcome, but they're going to understand why you make the decisions that we do. So, as you know, we kept engaging them, and we still are engaging them. And they really rallied when we said, we need your help to sell this out into the community. And hence, 49 days later, it's sold out. Next one, La Vista Transmission Project. This was a big one in terms of, this was in form. And really what we did was we worked with the mayor's office and the city administrators in La Vista and so forth to talk about what is it that they need in their area and how do you have the least amount of impact on the customers? And we'll talk a little bit about that. So as an update, the new transmission line is energized, and Director Gay, that's right down his corridor in that regard, and worked with the La Vista Public Works, presented timeline and update to city council and mayors, and the poles were removed. And Mark Pohl, who leads up that effort, has done a beautiful job. Approximately 20 structures are being removed outside of people's backyards that have been in there for years. So there was a lot that could have, we needed to get engagement of how best to do that and have the least amount of impact with those particular customer owners. So nice job, Mark and Julie and her team. Okay, this is new this year, and really what I wanted to say is we engage stakeholders beyond large-scale projects. It's the nature of our jobs. And how do we do that? We've been doing a lot more of building relationships out in the community. And as I discussed in SD 11, in terms of our community outreach and the focus that we're doing in terms of education, basic needs, community and environmental betterment. And since that last report, and I know we don't do this for the awards, but we were just announced the Corporate Partner of the Year for Habitat for Humanity, where we did Rock the Block in North Omaha, and just finished up just a few weeks ago in South Omaha. I'm telling you, it was so rewarding, and our employees and retirees engaged around that. And then we just received 2 weeks ago, it was a statewide award for Serve Nebraska Step Forward as the corporate community volunteer across the entire state. So people are taking notice. The reason I bring this up is, this is part of stakeholder, because before you even get to that engagement, as you're engaging daily and so forth, that's that trust that people talk about OPPD.
You know, and to go back to that, you know, our employees, you know, spent a lot of time and effort, you know, and coordination trying to do these Rock the Blocks. And, you know, I remember they were talking about it, like, I was down in Nebraska City too, and they were talking about Rock the Block, about going to North Omaha. I mean, people are planning this, and, you know, it's amazing the positive effect that they have on the community.
And it builds the trust.
And about how many, can you explain just for people exactly what they did, for example, down in South Omaha, as far as the...
Well, actually, we took a whole entire block right off of, on the other side of the interstate from Henry Dorley Zoo. And what was the beauty of this also was we had project managers that signed up, which they could get a skill set for that, to meet with those homeowners and engage to say, from a homeowner standpoint, what is it that you're looking for? I know a lot of our employees built new porches, put new cement pathways in, cleaned up debris. Oh my gosh, Tim was even out there too, and it probably took me about 2 days I was on the wheelbarrow, so it took me about 2 days to recover from that.
And I wasn't in the wheelbarrow, but no, I was.
This took a lot of planning ahead of time.
Absolutely.
It's just not one day of volunteering and everybody come and show up for 8 hours. This took a lot of time.
Yeah, and actually, we're using it as a development initiative for our employees as well for project management, since we're going down that path a lot more, and they did a beautiful job, and the homeowners were just so appreciative. So the pride that we're getting back into the community.
And congratulations on the award too.
No, hey, it goes to all of these. And then one other item, we're such a humble organization, but I want our employees to get recognition. The APPA honored OPPD with the Medal of Excellence because we're telling that story of what our employees and our board and so forth are doing behind the scenes. So you're going to be seeing a lot more of that in 2020 and beyond. So I wanted to tie this back to SD5, customer satisfaction. And the reason I put this up here is because the outcomes of strong stakeholder outreach and engagement are far-reaching and sometimes difficult to measure. However, with that being said, 30% of J.D. Power scores are made up out of these two categories: communication, how do we communicate, and then our corporate citizenship and so forth. From a marketing standpoint, the team and Kate and her team have been targeting messaging along these particular areas, and we're seeing that the needle is starting to move. Pleased, but not satisfied, so more to come on that. Now, I'm just going to quickly go through this because these are the things that we do day to day, and this will be online too, but LED streetlights, big success. We informed and involved, told the particular stakeholders what was going on, when it was going to go on, and how it was going to go on, and got their engagement on that. So Steve Fanslaw and Julie's team did a great job on that, and that's more to come on that. As you know, that's a 5-year conversion.
Can I say something about that? This project saves Ashland, Nebraska about $10,000 a year on their streetlight bill, which is huge for a city with a budget the size of Ashland. So I just wanted to mention that.
Well, thank you for that. So, the next one is pole inspection, treatment, and maintenance was informed. Well, we talked about investments and so forth. How we interact with the customers as they're trying to get in people's backyards and so forth is crucial. So the teams have been working really, really closely together on that, and we'll continue. Julie and I and Troy meet on a constant basis with our leadership team to make sure the lines of communication are open. Planned outages. Inform and consult. Contact customers regarding those planned outages. If you tell them beforehand what's going on, they tend to feel more engaged with the process and so forth. And then in the case, here's an example of the downtown Omaha outage. The teams, they went door to door. So it's one of those items that we're going to continue to find technology ways as well, but then also sit down with the customers and communicate with them. Underground cable replacements, inform and consult. That's another one that our teams have been working closely together. Tree trimming, inform and consult. This one's really exciting from a marketing standpoint too. This year we engaged Midtown and Field Club neighborhood associations to help with the education and delivering. And we're working on a door hanger that can put on that it's a giraffe that we can let them know that we're going to be sending the trimmings off to the zoo. So pretty excited about that one. This one is near and dear to people's hearts because people were so devastated by the flood. And our teams rallied to make sure that we got out to those areas that were impacted. Did community outreach along with the emergency planning individuals, gave out bags of hand sanitizer and tips in terms of how to make sure that the disconnect and reconnect process was good. We developed a empathy video on OPPD.com so that people could understand because Director McGuire, it was devastating and people needed a place to go and talk through how can you be safe in that regard. So we are putting a process together in place so that it's a toolkit. So when unfortunate things happen like this, that we can pull that toolkit out and get the right appropriate people involved.
No, that's an important thing because, you guys, at the beginning when people had the flooding, they didn't know exactly how to handle the electrical there.
Right.
And you immediately got that out. And I think it's a good idea to have a toolkit on hand in the future for that because
Absolutely.
this may be happening more frequently.
Yeah, and it was great because city administrators, mayors reached out to us and vice versa. So we were pretty much one of their first calls, and we were right there. Product development, Julie's team and our team work closely together in terms of product development, and you're going to be seeing a lot more of that engagement as well as Julie's team develops new products and services, and how can we look at the market research and engage customers in what's important to them. So I want to close with SARPI Transmission Project. As we said, this was a major effort. We had implemented research along the 4 phases I will say, and Mark Pohl and I were talking about this along with Lori Zagorski, we've benchmarked this, and there are not a lot of utilities that go through and put different research phases to hear what the voice of the customer is. So just wanted to let you know, we're in phase 3. The right-of-way agents work directly with the landowners, receive positive feedback, and just for that, the board will appreciate this. On this particular phase, 100% voluntary easement acquisition. Did not have to use eminent domain. That's huge. So, and that goes to the work that the men and women do as they're sitting down with the customers and saying, how can we make this a good experience for you? So the last phase is going to be line energize and property restorations, which is a hot topic because after we put the lines in, did we bring the earth back to the appropriate level and so forth? So that's really important. This is groundbreaking, you guys, from a stakeholder standpoint. So thank you for that commitment to hang with us over those several months and years. Last but not least, but the freshest, is Power with Purpose. As we know, it was Inform. We appreciate the board's commitment and a lot of our stakeholders to give us the opportunity to talk to our employees. It was so important that they heard what was going on from senior management and so forth. And so you'll hear more about this, but we made sure that Mary and the team went out to every plant. We did a live stream to all the rest of the employees during that time frame as well, and then even talked about it at the retiree meeting to bring them up to speed on it. So that part was really, really important. And so I'll report out a little bit more on this during our next presentation, but we're not done. As we said, we're putting the foundation together for our plan for the decarbonization, and that's where we will be doing extensive collaborative stakeholder outreach and building those programs so that we have multiple touch points over the next several months and 18 to 24 months. So I close with saying we're continuously evaluating to improve its outreach and engagements. It's important that we continue to look at new ways, but it's important to also say it's just not the stakeholder group that is doing this. 1,800 customers, and including yourself, are engaging with customers and various stakeholders every day. So you also have my commitment, and Julie and I talked about this, that as projects come up and we collaborate a lot more, is how do we put that, what's the outcome going to be, and then how do we measure that for those various programs and so forth. So, Director Moody, I'm going to pass it back to you.
That's the PI committee recommendation. Open to questions, additional questions or comments from the board?
I was, if you want to.
Oh, I'm all in favor of thumbs up on this, but I would say in the last year or so, I mean, I've had more stakeholders reach out to me to get things done, and I've never been more pleased with what happens. I mean, just this week, 3 things involved. Mark did a great job. I heard, oh my gosh, you're doing so great. Steve Fanslow, Julie, I mean, Tim O'Brien helping county. I had lunch with the La Vista mayor on that transmission project you're doing, which ran a lot of it through La Vista. He couldn't say enough good things. So, I mean, I gotta say, I think you guys all do a great job, and it's very nice to hear these great comments. And like I say, I don't know what it is, but in the last year and a half, I've just had a ton of good feedback, which you don't get a lot of times with public kind of entities. So definitely do a great job, and thank you for doing it.
Yeah, I'll just quickly, before, I just want to echo that. The responsiveness with which, at least my experience is when I send, something comes to us, we send it to your team, whoever that is. It's quick, it's on point, it's always been a really good response. And it's,
thanks.
To Tim's point, the pace has been hastening as well. So thank you for that work. Other comments?
So, if you go back a slide just to that spectrum that you shared with us, a lot of the examples you gave were they inform and consult. Can you help me understand how you choose, which of these areas you're going to use for the project at hand?
Yep. greatly appreciate that, because I will tell you, we have a very robust conversation on this, and are very respectful with each other in terms of just, we don't take it lightly if we say, let's do inform. We use these words to heart. For instance, with consult, we will keep you informed, listen, and acknowledge concerns and aspirations. We'll always do that. But we took it to heart to say, on how public input influenced the decision. And for Power with Purpose, we didn't want to be disingenuous.
Right.
It's really important because we've worked so hard to gather that trust and so forth. I would say we went back and forth on this because we really did listen, and you'll hear in my next presentation with the environmental stakeholders. We took all of their feedback, and that's really what made it a richer conversation going forward, even to the point with the employees and so forth. So, and there were objectives with that. With, I would say, involve, we will work with you to ensure that your concerns and aspirations are directly reflected in the development and provide feedback on how the public input influenced the decision. And then the last one here, I would say, empowered is we will implement what you decide. That's very complicated, very complicated, because as you know, with Power with Purpose, a lot of modeling went into that in that regard. Now, going forward with the pathways to decarbonization, probably going to be well, it will be a different conversation, right?
Yeah, so, I mean, maybe describe that a little bit, and which bucket do you think that decarbonization will fall in? And sorry if that was already
I know, and
in there. Please just repeat it.
Absolutely, in that regard. Until I get the team all together, because we're in the infancy stages of this, and also what that conversation in the community is going to look like, that's a step that we have not taken before. So we're going to have to take that into consideration. But there's probably about 10 of us that sit down in a war room and go through what the definition is, how are we going to measure it, and so forth. And then we come to a consensus of exactly which avenue we're going to take on this. So one size does not fit all. I wish I could be
Sure.
more clear with you, but we do have a robust discussion about it.
Okay.
Other comments from the PI committee?
So I think there were definitely areas of great success this year. A major one was with the flood. I heard nothing but great things back from people who were impacted and then received response, and both communication and response as we carried that out within our own operations, but in the way that it impacted people. So I think that's an area of great engagement and success in an extremely challenging time. With the Sarpy Transmission Project, again, that sounds, the engagement there led to great outcomes. Very glad to hear about that. I think there are areas where, as you mentioned, pleased but not satisfied. I think there are some areas where improvement has been identified as possible.
Yep.
Website and social media improvement, I think those are good things to identify. That there is more that can be done there, and that's great to know that we recognize that that is an area where improvement is necessary. With the new product development, I would like to see more proactive encouragement of some of the new stuff moving forward, specifically in the area of distributed generation and EVs. I know that we recognize those are potential potential products that are available, and we have identified rates for them and other technological backing. But to date, I haven't really seen very much proactive encouragement of participation in those innovative new things that people can do on their own level, or on their own home, or on their own businesses. And so I think that's an area where, making it available for people to come get it if they would like to is one form, but more proactively saying, here are things that can be beneficial. And I would say particularly in the area of EVs, that is a revenue opportunity, and I think that we have more work to do in saying we recognize that this can be very beneficial through existing infrastructure to generate revenue for our organization, but that to date we haven't really been as proactive in encouraging people to do that as I would like to see. And then lastly, the biggest one, the biggest engagement opportunity of the year, in my opinion, was the Power with Purpose. And I would say that I think room for improvement is kind of, that would be my general interpretation of the way that that entire process moved forward. Specifically, the original presentation in September for the board was recommended that it was, that it was a October type of timeline between Tuesday and Thursday, and I think customer engagement in that original presentation would have been extremely limited. So modifying to presentation in October and then move the vote to November, I think was a big step forward. But the idea that the level of engagement that we would need from our customer owners for something of this scope and scale, I think was an area where originally it would have been nice to see that recognized as core to how this decision was being made, because it amounts to essentially resource planning. And the last time we did that was in, I believe, 2014. And so, I'm sorry, with the IRP, I'm sorry. But before that, I can't remember the 2014 version that talked about North Omaha.
2014.
Yeah, and so there was a robust engagement process there with stakeholder meetings and feedback, and I guess not having quite as much proactive outreach on this type of decision based on, again, the scale of the impacts to our organization now and in the future feels like there could have been more planned. I don't believe we had any open houses where we proactively presented information other than the stakeholder meeting. And from the stakeholders, asking them to carry that information forward, I think I received 2 emails from 2 of the groups who were there, but it didn't trickle out into additional outreach in a very extensive way from the stakeholders who were there. So I feel like saying they had the opportunity to carry that information forward, again, leaves something to be desired in how much of that information actually got to people in the end. And I feel like there are several areas where we've seen that will be covered by the decarbonization process as a response to questions that we've had. And I mean, since the decision is being made now on a very large scale investment, I feel like saying that the additional engagement through the decarbonization process, that feels relevant to future decisions that will be made, but not really relevant to the decision that we are asked to be making on Thursday. And so in general, I feel like this is an area where more stakeholder engagement would have been beneficial to allow us to have more robust information back from them about how they feel about this before basically we were saying this is the final presentation and now we're preparing to put it on the agenda for approval.
So, great job, Lisa. This is awesome. But I think what we have to do is be really clear about when we do customer engagement, what the outcome of that is, and making sure that the public understands that with this process, with Power with Purpose, our job was to inform, and we really didn't intend to consider that we would look for them for advice, and we weren't looking to them for implementing what they decided, and making sure that when we're doing this outreach, that the ultimate goal is really clear. And then we as a board have to make sure that when we look at SD9, that we outline what we expect in these types of decisions on what that outreach would be. And so if we expect that these kinds of decisions would require a more robust IRP type process, then we have to make that clear in our SDs. But I just think that it's important for people to know, and then again, the public needs to understand that in this in this time frame between last board and this board, there has been outreach, and there has been between the board of directors, all OPPD staff, we made ourselves available for comments, and the amount of comments that we got, I think, was exceptional, and the amount of engagement from the public was exceptional, and really do appreciate that. So,
Well, and you'll get more, and we appreciate that. You'll get more of the details and so forth, but I would say of all the years that I've been doing this, this one has probably been covered more than from every media outlet and so forth, and you'll hear some of the additional engagement that we've done from outreach to chambers, to city administrators, and so forth, so.
You know, this is a whole new world, and I think it's because, you know, the whole utility system is going from a sleepy old utility system that there's no change, that there's lots of change. And I look back when Lisa Olson came, the first time that she walked in was the flood. And she was the first one to really start.
I had
any
nothing
type-
to do with that, despite what President Burke says.
It might have been the brain, I don't know. But she was the first one who initially started any type of really stakeholder outreach. And then we started in 2014. That was the first time that the utility did anything as far as having research and bringing in people and bringing in, a robust research. And it's growing each time, as I think it might be because of the internet and everything else, as far as social media has expanded, that people are demanding more and more of this, and I think it'll continue. We have lessons learned from the last thing as far as power with purpose. We should have probably been a little bit more prepared on that as far as notifying people. But I think the company is way ahead of a lot of other companies, actually. I think if you would benchmark stakeholder processes with other companies, we're far ahead. I also think, and I want to thank our public, because this is public power, and the public is getting more and more engaged. And as they become more and more engaged, they're demanding more and more information. And we're trying to keep up with that and provide that. So I thank you.
Well,
and there's always room for improvement, but I think you've done a great job.
Well, Chair McGuire, we greatly appreciate it. I do want to honor the past, because OPPD has been known for outreach for a lot of years and all of the great work that they've done. We've just put more focus on it and so forth, so definitely more to come. So,
Thank you.
Director Molhoff, I appreciate your comment on how can we structure the stakeholder outreach that's needed for resource decisions in SD9. I think that's that's something we're going to have to talk about, obviously, and it's not meant. I don't think we need to replace SD13. Not talking about that at all, but I think there might be some measure of discussion about what's required. Because in my opinion, I think the informed goal for Power with Purpose is what you were left with during the time. And it was where I would really like to see a project that big seek to get informed public consent. I mean, yes, it's a different time, but I think in terms of spending the public's money, we have always had this responsibility to get informed public consent. And thank goodness for social media. Even though I'm not sure whether it was a wince or a grimace over here, but I mean, we got so much information back, and I really am happy that we have that channel and that you're using it more.
yeah. And the employees are completely engaged in being responsive.
Yeah, that's all terrific. And I mean, this is kind of the end of my third year here, and I've seen continual improvement on you and your team on SD13.
Appreciate that.
So I really appreciate that. I do. So I guess moving forward, the idea is that SD9 will have to have some kind of structure, metric, whatever, on what a minimum level of activity should be. And back to that 2014 comment for the retirement at North O, according to the documents that I've seen in Diligent, I wasn't here at the time, it was a February start on that process of public engagement, a report out to the board in May, and then a vote was in June. So that would be more on the order of what I would expect for something of power with purpose.
Yeah, and I certainly don't disagree with that. I think as we think about the decarbonization pathway, I mean, we're certainly aligned with that very clearly as we move forward. I think part of it was even less about the time, but really an identification of the situation we're trying to solve and the limited options there are to solve that issue. Now, others may disagree on whether or not there's other options to solve those issues, but as we went through the analysis and the deep review, we didn't feel that there were multiple options like we did in 2014, where we were looking at customers to give us a perspective on retrofitting, refueling, retiring, And what came out of that feedback was there was no demand side management kind of initiative or component of that solution. And so when we came back with what we heard in the outreach to begin to limit carbon reduction in urban areas, that came the recommendation on units 1, 2, and 3 to go from natural gas to from coal to natural gas to retrofit 4 and 5 to reduce emissions. And then came the 300 megawatt demand side management kind of goal and objective that we're still pursuing down that path. So I think part of it is, are there alternatives that allows customers to weigh in on? And there we had a very clear kind of piece on, here's the economic impact of each one of these options. And we were able to have them evaluate and rate them and identify them, and we did them in focus groups, and so, and a number of other different pieces. So I think part of it is maybe the time, but I think part of it is what we really felt were the solutions to the ultimate problem we were trying to solve. And I know we may have some disagreements on, are there other solutions around that, but we felt from a senior team, from an organization, there were limited solutions to solve this immediate problem that we have in front of us. And certainly, as we look forward, to the decarbonization pathway, there'll be a variety of alternatives to begin to think about, and for the customers to weigh in each one of those alternatives. And so I think we'll see that. I think it'll be far closer and probably even longer than 2014, maybe even multiple kind of stakeholder initiatives to get kind of a framing, some context, and then ultimate evaluation of what that looks like from the public. So I think we've heard you fairly well on this topic, and so I think you'll see something very clear coming forward with the decarbonization pathway.
And I think that very much addressed my question about how do you choose which path, and we know that not every decision we make can fall in that empower category, right? So, but then as we're doing this monitoring report, if we look in the rearview mirror and say, okay, we did only inform in this area, how could we have moved that forward to a consult? What would have been needed? I mean, and maybe
that's fair.
If you want to just touch on that real quick, because I think that's where the learning happens as we're looking at these monitoring reports, and how are we going to do things differently in the future. So do you want to address that at all?
I do. Thank you for that. We talked a lot about, and we're going to go back to our colleagues and so forth to say, for the most part, where does a lot of the stakeholder category land and so forth. So you have my commitment that I'll get back to you on that. But I do accept that challenge to say, when we're looking at it as a team, to say, okay, how could we move it to the next level and so forth. So I'll take that back.
Okay. And I'll just give you a great example on 2 different transmission projects, right? The La Vista transmission project was very clear. It was a request from the city about, as they begin to think about their development on 84th Street, how can we move this transmission structure, that this 345 H-frame line that runs through these neighborhoods, how can we remove that? And their recommendation was to identify it in a different solution. So we certainly kind of informed. We certainly did consult with the city on it, and the city held public hearings on it because they were driving the project. And we were certainly engaging the stakeholders in the process about implications about where these structures would be on property and on right-of-way and those kinds of things. Versus, I think, when we do a project in Sarpy County where we say, I need a 161, 340 line from point A to point B. We are deeply involved in the consulting piece of that, right? We're asking customers, so give us some insight. Where do you not want these structures?
And that goes into the involved stage.
Exactly, and it moves right into the involved and ultimately gets into the collaborate. Because when we get to an individual property, customers are saying, hey, if I know I don't have anything on this property today, but my original plan was to have a driveway or an entrance in this area, can I move it 15 feet this way, and would it impact the project? And we've done a number of those kinds of things in the process. So we kind of look at it based on kind of what those projects look like and try to evaluate that. And so hopefully that
Yeah.
at least explains how we look at it and how we'll continue to look at
And
our
remember
engagement.
when I started this presentation to say that there's different levels of engagement based on the phase of the project, and that one level doesn't necessarily lead to the next one, so.
Sure.
But duly noted, thank you.
Yeah, thank you, Lisa.
Okay, I'm gonna make a couple final comments. One is I wanna echo, in the 3 years that I've been on the board, I've seen dramatic improvement. Not that it was bad before, right? But like the measures that you've taken, Tim mentioned some transmission project lines. I'm reflecting on the Elkhorn, right? And
Yeah.
the way in which you've done SARPI differently is phenomenal. Every project is different. And so every time we get something big new coming at us, the way in which your team sort of looks at it and says, what's the right path, what's the right approach, I think is really good. You talk a little bit about continuous improvement. That's the last bullet in the
Yep.
SD.
Right.
That's why it's there.
Yep.
So that's part of how we're gonna do it. So good job on the part of your team. I think this is on consent agenda for Thursday.
Can I ask a logistics question on the motion itself, sufficiently compliant? Can you remind us of how the options, Scott, when we look at SDs, that they're sufficiently compliant? Are there other ways that we express overall feelings of the recommendation on a strategic directive?
Yeah, there's really three that we envisioned when we set out with the type of resolution that will result from here. And one of them we've not used yet. Sufficiently is the sort of the highest level of, generally speaking, this is fulfilling the what we envisioned with the strategic directive, or is materially meeting sufficiently. Because initially we had, hey, it's compliant, and the question became, well, can you really say fully compliant for the very nature of the discussion today? And then there's the second piece. I don't have the words directly in front of me, but it's really to the degree that you understand we're not sufficiently compliant, but technically we're moving in a direction that is to the satisfaction of the board. So a couple of examples where that's come up before. Kate, when she's talking about the information management and security, that's one where clearly meaningful movement has been made. It's not fully sufficiently in compliant, but the board does recognize that direction, that the actions being taken are leading in that direction.
It's like taking reasonable measures to achieve.
Taking reasonable measures, yes, I think is exactly right. And then the last one, which we've not even necessarily formalized, would be this notion of you're not in compliant, you're not taking sufficient. In fact, this is really we don't have the words yet.
We don't want to.
We don't want to have to create that, but it would really be, there are, Houston, we have some very significant problems here, and I would hope that long before a monitoring report, we'd be very well aware of that and a need to address that in a material way. So,
Good question.
is that helpful?
Yeah, and I mean, I guess the reason I ask is that in a couple different places we talked about, as was mentioned, pleased but not satisfied. And so in looking at three choices, how do we express that, the idea of pleased but not satisfied, if there's only really one motion to vote? I mean, I'm curious to how to find a finer.
Well,
expression
I'll
of
explain. The
opinion on this.
pleased and not satisfied is our belief of this continuous improvement and excellence. It's beyond just sufficiently in compliance. It's about excellence that we want to get to.
And to resource
so
it.
I think that's when Lisa says, I'm pleased that we are sufficiently compliant, but I'm not satisfied that we're doing all the things that we can do, and that our level of excellence around this one is things that we just continually need to improve on, and that we're taking
And
steps to do
the
that.
beauty of this is my colleagues are helping to resource this so that the teams are getting the talent as well to build off of the great talent that we already have here, because it is a new day, right? And we want to do business in a different way, so that's what I meant by that.
If I may add, Director Williams, too, I think the notion sufficiently in compliance was an effort to really capture the essence of the continuous improvement notion, that there's always opportunities to improve, that this would invite discussion from the board to identify those, without it being less than satisfactory kind of judgment in terms of compliance. We also recognize that there will always be those opportunities, so we didn't want to have, hey, you're perfectly in compliant with the intention. That would have been a fourth level of grading, and I would imagine that given the ever-present opportunities for continuous improvement, I would challenge us to ever reach that level. So sufficiently was to create enough bumpers in the bowling alley without it being prescriptive.
Yeah, that's a good way to describe it. Okay. Thank you, Ms. Olson.
Thank
Well
you.
done. That concludes the Public Information Committee report.
Okay. Do we need to stand up before we begin systems? Just stand, stretch, and sit down. All for
That's in order.
stand, stretch.
Sing a song.
Seventh inning stretch.
This is a seventh inning stretch.
Yeah, partially stretch.
There might be extra
the
innings,
fifth inning.
so I think seventh inning stretch. Oh, yeah.
So noted, documented. We'll see if you're, we'll see if you're, yeah, we'll see if you're sufficiently compliant, yeah, with your 15 minutes.
Yeah, right. Hey, Dennis, I know I have to make my call today, so I'll do that. Okay, thanks. I have to, we do an emergency intergovernmental call that I need to for. I got to log it as part of our emergency management process, and so I got to do it quarterly.
the vanilla wafers until I got guilty. Director Yoder, Systems Management, maybe the pre-committee meeting.
Thank you very much. The pre-committee meeting was Wednesday, November 6th, bright and early in the morning, and we talked about SD7 and the potential capacity update power with purpose. So SD7 has been drafted, redrafted, edited, and it's been put out for public comment. We've gotten, thanks to everybody who makes these things happen, it's gotten plenty of public comment. The committee's sense is that SD7 comments were largely positive. They seem to be focused mostly on the zero net carbon by 2050. And we're very happy with the way that it's gone and the current wording. There was one wording change that was brought up in committee. And if you look at the language, it went from energy conservation to energy conservation and efficiency. That was not deemed sufficient to go back out for more public comment. So we're happy to move that forward for
Great.
approval by the board. I personally am thrilled that we got rid of what I felt was the inherently confusing by itself, CO2 intensity metric. So this is good. I'm very thrilled that at all the measurement that's in there. And the committee, we did have some discussion about perhaps working on some like legislative intent language that the board could offer to SMT on what we might expect to see in the annual reporting, the annual report outs. So I think we'll have that discussion. Anything else that I missed on SD7, committee members?
And is this on the consent agenda or not? Have you discussed that?
Well, I believe it's on the consent agenda, but I'm open to any comment.
So we did talk briefly about what the expected monitoring report might look like and how the first year is expected to help set a baseline and understand how we change the metric from carbon intensity and percentage renewable over to the total carbon, looking at a goal of net zero carbon 2050. And so I'm looking forward to more discussions kind of early on so we can help understand, because the specifics in the strategic directive do not exactly reflect what we think we will see in a first annual monitoring report. And so I think discussing that and giving good expectations of here's what we understand to be the language of what this says relative to what we think we're going to see in the monitoring report is really important. And so I think that's an area that we identified as ongoing discussion. I don't know how much of that there needs to be, but something that we should definitely keep in mind as we move to this new kind of metric related to carbon.
So that's an action item internally
Yeah,
to the committee.
Yes, at the committee, I mean, maybe once or twice over the next 6 months, we just make sure that we kind of understand, here's what we think the monitoring report will look like, although because this is kind of a different baseline, different metric. And I think we covered that pretty sufficiently. I talked to Mary about it a little bit, and I think that we understand that that's kind of something important to set at the beginning as we adopt the new language, so that a year from now, when we see the monitoring report, it matches what we were expecting to see from the language when originally written.
Almost sounds like the takeaway is management to come back with kind of a visual about what that looks like.
Well, that'd be all right.
Yeah.
Yep.
So once again, many thanks for staff, management that made it possible to get all of those public comments, and also for working so hard on capturing what we first said in our work with Eric this summer and working on the language. So many thanks on that.
And I just have one additional comment. by 2050, but the expectation is that will be incremental, and that we won't just be going from 30% now to, 2049 and then dropping to 2050, but this will be incremental, and that we really expect that, given the new reports coming out almost every month about how critical it is that we address carbon emissions in relation to climate change, that we, as we're going through the decarbonization study, that we work as hard as we can to get there faster, if possible. And I know that in the past, when this SD7 has set a goal, OPPD has exceeded expectations, and I have no reason to believe that that will be different with this one.
Very good.
So we decide this is consent agenda?
Yes.
Yes.
I did want to clarify, as we talked about in the systems committee, that this first year is really about establishing this baseline, right? And then the second year, we will, and beyond, we will start seeing, how are we affecting that? And so I think the first year report out, it's important for us to all get on the same page, and I think that's what we were referring to in terms of, how do we bring that all together and make sure that we're monitoring things in the way that makes sense for going forward. So I just want to make sure that was clear.
I appreciate that. Thank you so much. Then the committee spoke, or got the presentation, got a short presentation about Power with Purpose, and we had some discussion about potential language changes. One of the language changes that was put into the documentation was, help me, Mary, if you would, please. It's not just to have natural gas for the 350 megawatts, but the natural gas and other or alternative fuels. Is
That
that
we
correct?
would put in an option for alternative fuels to be considered.
Yeah, so that came out of committee. Thank you very much. There were a couple of other discussions about potential amendments that did not get the support of the full committee. One was about language that sets up within the resolution that has the board delegating authority to issue an RFP to negotiate and to award. And so there's some concern, some discussion within the committee to change that. I think that we may see that again. There may be an amendment on that come Thursday.
But there was not a consensus from your committee on that?
Absolutely not a consensus.
For the board to negotiate what?
Not to negotiate.
That's what you said.
Then I apologize. So move from RFP negotiation and award to authorize RFP and negotiation, and then the award would be a separate action.
The other clarification that we made,
Yeah, please.
was in the original, it said there was some language about an approximate amount of generation from gas, and we did
right.
change that
Yeah.
to a more finite amount, so.
Yeah, now it says not to exceed.
Now it says not to exceed, so we felt that that was important, that the board set a limit on that.
And what was that number? Can you?
It's not to
Exactly how it's
exceed
stated?
250 and then 350.
Right, so the original resolution as
254
it came
the
to the
North
Systems
Omaha.
Committee says 400 to
Just-
600 for solar. That
Yeah.
didn't change, but to be integrated with 350 megawatts.
Approximately,
It said approximately, it now says not to exceed.
not to
It
exceed.
says up to.
Thank you,
Up
up
to.
to,
Up
yes.
to. Okay.
So that was the only other thing that we changed.
And you sort of separated out the North Omaha versus
Yeah.
the
Well, that
the
came,
other two.
yeah. And then
That was
250 for North Omaha,
Okay.
up to.
Up to 250 for North Omaha and up to 350 for the other backup. Okay.
And we're going to be discussing that. I don't want to jump ahead too much, but you got to address that, and everyone's okay with that change on the wording.
Yeah.
It's not bad.
Yeah. Did you have a presentation on this? Well, let's
Really?
see that.
I wonder why she had a presentation.
Let's see that, and then we might have some further comment.
It's
Oh, it is?
after.
All
Let's
right.
go through, and let's go.
It's later.
Troy's right there.
Troy. So, very good.
And he's
So
got his
Troy
cable.
has an action item for us that was not presented to the systems committee, wasn't necessary. It's best to have it out for the board as a whole, so what's up?
So I know this is why you all showed up today, to talk about cable.
But this is important.
It is, it's very important.
We've already referenced it once, didn't
We
we?
referenced it already in the
One of
corporate.
the things, since we're talking about a cable replacement contract, I wanted to at least show what the cable kind of looks like, that the labor contract will be replacing, so if you want to pass that down. If you go to our engineering floor, you'll find all kinds of pieces of equipment like that laying around that we use for discussion props, so.
So is this what you're taking out
Safe.
or what you're putting in? Is this what you're taking out or what you're putting in?
Well, that's a new piece.
Oh, okay.
So,
All right.
yes. We do have some that was burned and has been cut out and spliced, but it's not safe because it has jagged edges on it, so I didn't feel like I should bring that with me today. And so, over the last couple of years, we worked to kind of ramp up this planned, and I'm gonna highlight that planned primary cable replacement program here at OPPD, and we're doing that to enhance the reliability within our system. From 2014 to 17, we saw a continual increase in the number of outages related to cables. And so we started a program to make sure we're getting some of that cable out before it becomes problematic. And so when a cable fails, especially primary cable like this, you can have hundreds, if not sometimes even 1,000 people out. And it takes a while for us to find the issue and replace it and to get the service back in place. So having a proactive replacement program, especially when we identify certain types of cable that tend to be problematic, is really important for us. And this is what this contract allows us to do. Now, cable can fail for a lot of different reasons. You know, age is a really good one. As it gets older, it degrades. Your earth can shape or can shift a little bit, causing little micro fractures in the side of your cable. And then probably most frequently, somebody hits it. So you got a contractor that's digging someplace. They can either nick the outside layer, which then allows water to get deeper into cable over time, or they hit it to such that it has to be spliced and changed at that time. And so we utilize outside labor for the planned activities. And that's because our internal labor is focused on kind of our customer growth and the emergent issues that come into play, as well as other maintenance activities. We currently aren't staffed to maintain the type of rate we have right now for cable replacement. And so this outside contract for labor has been very beneficial for us. What this particular contract set up to do, it's a 3-year contract. It also has the option to extend 1 year at a time for an additional 3 years if we determine that we still need that. The particular contract also provides us a lot of flexibility with planning of work, as it's based on time and labor. So if we feel like we need to ramp things up a little bit, we can do that based upon this contract. If we feel like we need to ramp things down, you know, we have an economy here that changes, and the workload that our internal employees have changes, and so this allows us a lot of flexibility around that. It also has an annual adjustment based on CPI, and so it can go up or down based upon the CPI index. But it does have a maximum increase limit of 3%. So even if CPI were to jump up above that, that's the maximum you can move from year to year. We had 2 different proposals for this. Both were legally and technically responsive. We kind of assumed we would see at least double that as far as the number of responses. But as I reflect, you know, over the last year, as we brought more and more contracts here for approval, we've had fewer and fewer folks providing offers, and I think it's a testament to the amount of work that's going on in the not just our area, but in the United States as a whole, and specifically seeing a lot of that drain is due to what's taking place in California right now, where they're bringing in thousands of additional workers to redo systems out there. We had a conversation with one of our vegetation management groups this week, and they have been notified that PG&E and some of those other companies are going to need more veg management folks going forward too. So just an example of how these keep building on one another. In this particular case, Nielsen was the lowest and best offer, had a super competitive bid. Likely that's based upon the fact that they've worked with us for years and they've replaced cable for us. They know exactly what the work looks like. When you know that, you don't put escalators in there for unknowns. And so they had a really competitive bid. And we've used them on other projects before too, so it's not just cable replacement. They've worked on street lights, they've worked on other things for us. So we've had a good working relationship for them for about 10 years.
Far be it to question that, but the difference between the estimate and bid on the low side and the estimate and the bid on the other contractor on the high side, can you help us understand what the variability is? I mean, this is, one of them is triple the other bid. I don't understand how we got bids that are that divergent.
Well, again, some of it's unknown. So when you haven't worked in that environment and you haven't done the work for the utility, it's not as clear to you on what kind of adders should I have for contingencies, right?
So we have worked with Nielsen. We have not worked with MP Next Level then?
I think it's been a while, maybe.
Okay.
We've never worked with them. We have not? Okay.
This was a sealed bid too, so we
Right.
couldn't really negotiate to ask questions.
Right, and then you don't know what other companies are, so I don't know what their workload looks like. Sometimes you'll have folks that'll come up and throw high bids. They're busy, I'm gonna go ahead and throw something out here, I'll throw a high number out, and if they take it, I'll run with it. But when we look down the categories of what drove their cost, basically they were higher on everything by a considerable amount.
Were we surprised there weren't more bids?
Yes, we assumed there would probably be at least 2 others, but again, because of all the work going on, we're assuming that's the reason why. After this, just like most of our other contracts, we'll go back and have some conversations with individuals who have bid in the past to kind of understand, why did they choose not to this go around. So that's part of our normal process to make sure we just kind of understand the state of the contracting that's available out in the marketplace. And I'll tell you, I mean, utilities are having trouble keeping people too. So I recently went to the Nebraska Lineman's Rodeo, and there was all kinds of discussions about Ameren and several other utilities who are having very difficult times keeping linemen and craft within their organizations, and they're having to take additional steps. Fortunately, we haven't been there, but again, that's just the environment we're in with the amount of economic development going on, with the stuff that's taking place in California, driving a lot of that workforce in other areas. And when that happens, it's a supply and demand thing, right? So as the demand goes up, the expectation of some of these folks is, I'm gonna make more money on it. I'm gonna add more adders to my offers. But again, we've got a really good relationship with Nielsen. I think the collaboration between our 2 groups is really good, and so relationships matter in some of these cases.
So a quick question building on that, I think kind of connected to Eric's question. I'm less concerned about the difference between low bid and high bid, but the difference between the bid and the engineer's estimate.
Right.
Are you comfortable and confident that there's nothing missing, that they're going to deliver the work, that the scope of work is known, it's all straightforward?
They're doing the work right now.
Okay.
So they understand it really, really well. So I don't have a concern about that. The engineer's estimate, when we look at what's going on in the marketplace, you start adding some of that into it. And we just didn't see that show up in the bid at this point in time.
And it's even fresh in my mind, have we already purchased the cable, or is that usually an action item, purchase of the actual cable, or is that usually a?
I don't remember if we.
No, not typically for this. For transmission, it may be, but because it includes cable and other infrastructure, but typically.
We keep a lot of this on,
You keep it on.
because we have failures, and so, like for instance, for next year, we're planning on 46 miles in the rural of replacement, 40 miles in the metro. That's our goal. But on top of that, we know there'll probably be another 25 to 35 miles of failures, things that we have to replace and failures during the course of the year. So.
I can just real quick on the supply chain side. So we, as Troy said, we've got like 100.
Introduce yourself.
Oh, John Buckley, Director of Work Management. So we've got over 150 plus miles that we're going to be doing next year. We work with Tim macro maybe on supply chain, we forecast out that work, we build a schedule together throughout the year, so we give them an idea of when we're going to be doing which projects, and so we kind of get that cadence put together on ordering that cable. So it's a pretty standard cable used throughout the industry, and so it just follows our normal supply chain processes.
Yeah, and as far as that standard cable, this is a different cable than what was put in 20 years ago or 25 years ago, which is now deteriorated.
Right, so one way to look at it is 20 or 30 years ago, it was the best stuff that was out there. And, but the materials and the manufacturing processes were what they were back then. It's degraded. Now we have much better manufacturing processes, much better materials, so we expect longer life for this new cable that we're putting in. And you're right, we're replacing cable that has worn out a little bit earlier than we anticipated.
And some of that cable, specifically ones that we're targeting, about 87% of the outages that we see from cable is due to one type of cable. And so we're definitely focused on getting that cable out first, which makes the most sense because that's your power quality that your customers are seeing. So.
And is Nielsen able to work both on rural and metro at the same
Yes.
time? So you can prioritize what cable failures you think are might be there ahead of time as far as.
And again, so of the stuff that I'm talking about, the 87% of the outages caused by it's actually an unjacketed cable. We have around 850 miles of it in our service territory, and about half of that's rural and half of it's metro. And so that's why we're kind of breaking it up between the two. And in the RFP, we allowed the bidders to break it up. So like if you had someone who come in and said, hey, I just want to do the rural, they could have bid it that way. The way it was bid, though, that they both did metro and rural.
Help me understand, since this was sealed bid, what if Nielsen gets into the project and this is not the lump sum that's gonna work for them? Do they have any ability to come back and ask for a change order, or what's that process look like?
I'll probably have John come back up. Again, this defines, the contract defines time and labor, right? So it's very close to what they're doing now.
Okay.
And it's based upon a volume of work. So we work together with them, say this is what we plan for next year, here's the volume of work. They make sure that they can source it, that they have the people on hand to do that. And so that kind of collaboration takes place.
Mm-hmm.
Again, they've been working on cable for us for years, and so we don't see that being problematic.
Okay.
Now, whether or not they have an issue with the sourcing of, craft, that's where we have to have the collaboration together.
Would the bond make both cover that, or could they just do the bid process?
I think there's a bond.
So this is a time and materials contract, so we have specific activities. So we have, in the rural, they have a blade they put and they plow that cable direct bury. In the metro, they have boring machines. You've seen those all over town for 5G and other things. So that's what we do in the metro area. So there's unit prices for all those different activities. And so that's what they're locked into.
Okay.
And so if they decide that they can't perform the contract, or we decide that they aren't performing to that, so they can't staff it, they can't source it, then we have provisions in the contract that we can ask them to leave, we can bring somebody else in to replace them, and they have to pay for it. So there's a lot of contractual things that we can work through if they don't perform. But as Troy said, we've got a great relationship with them. They've been doing 46 miles a year for the last 3 years in the South Rural, in the North Rural, and 16 miles in the Metro. So we're doubling the Metro up a little bit more, up to 40. But so we're going to have more crews. We're kind of constrained to the nice weather months. Mm-hmm. But we've given Nielsen a forecast on this is a multi-year effort. It's 6 to 8 years before we get all this cable out. So we've given them all that information up front, and based on our experience with them, I'm confident that they'll be able to perform.
Okay. Just wanted to understand what that might look like in the event that 1.6 for the rural is not going to work for them, or what's the contractual leeway we have versus what they have. So.
Well, and again, the rule's the same exact volume they're doing now. If they came back to us and let's say their bid was half the cost of what they're doing right now for us, then it would be like, well, hold on. but it's very close to what we're currently paying them for the work that they're doing on a per volume basis.
Yeah, I guess just one more thing. This is a good news story, and this is similar to how the LED streetlight conversion project went, where Superior Lighting was doing our maintenance work, and they came in with a bid that looked very low. We analyzed it. We looked at what they were doing for us today. Their costs were in line with what we were paying, and their performance matched what they had done with us in the past. So it's been very successful this year. We anticipate the same outcome in future years with Nielsen. So we'll be setting up a schedule. We'll be outlining production on a weekly basis. We'll be meeting with them. We'll be managing that progress to ensure that we stay on our targeted goals to get this cable out.
Okay, thank you.
Yeah, thank you for the LED street lighting project. It's moving along.
Well, there's a lot of people involved in that. It's just not me.
Anything else in there, Mr.
Nope.
I thought that was gonna be easy, didn't you?
I really did. So, yep.
Prepared. I saw a map on there on this one the other day.
The only thing I would share is that the project work for 2020, roughly $3 million for the labor for that year. So again, it goes up and down depending on the volume of work that we have planned each year.
This is, and it's critical work. I mean, I heard about this from our neighbors. I don't know if you guys are here in town, but I haven't heard about it from my neighbors in quite a while. So but I know it's important.
Well, I'd mentioned earlier, we had this increasing number of failures going up starting in 2014 through 17. We really started ramping this back up in 18. We saw it kind of level off a little bit, and it's leveled off into 19 also because of the work that's taking place. And we're further ramping this up, and I think the fact that we're proactively replacing and we're focused on the type of cable that's shown to fail is really having an impact to our customers. And cable outages are roughly 16% of the outages that you see on an annual basis, between 16 and 20% of our outages. So it's pretty meaningful for us to attack this.
While we're on this thing of reliability, your tree trimming budget next year, is it the same as this year? Or what is your tree trimming budget this year?
It's more or less the same. So if you remember, we had gained an additional $2 million last year.
Right.
Added many different crews. We're adding lots of miles of trimming. That continues into 2020.
Troy, can you mention, while you mentioned that you added $2 million for the year, that is up from, what was it?
$7.5 million roughly. We added about $2 million. It depends on which year.
It's about a 25% increase.
Yeah, so that's so important. Once again, you said the cable outages are 16 to 18%. Distribution, transmission, that's where the bulk of our reliability problems are.
Yep.
And so I'm very happy to see it. This will be on the consent agenda. Okay. Ms. Fisher, what's coming out? And after she's done with the nuclear oversight committee report, those of you who visited, we'd like to hear from that too.
Okay. Nuclear oversight, just a few things. We continue to load spent fuel into canisters and move them out to the independent spent fuel storage installation, moving them from wet storage in our pool to dry storage out on the cask, out on the ISFC pad. We have 4 canisters installed as of last week. We're working on the 5th this week, making good progress, steady, reliable, making sure that they're doing all the things right as we move this fuel. In terms of the fuel canisters themselves, 15 of the 30 baskets have been inserted, but only 7 have been delivered to the site. There's still lots of things to be done with those canisters once the baskets have been inserted. And I'll talk a minute about the Decommissioning Oversight Committee. This is one of the discussions that we had at the Decommissioning Oversight Committee, so I'll talk about that in a little more depth here in just a second. And then the other thing that's going on, and then the major thing that's going on, is the construction of the independent spent fuel storage installation operations facility. So as we move to an ISFSI-only site and shrink our protected area down to just the ISFSI itself, we're making lots of different changes up there, getting staff ready, working with Martin, her group, to come up with what the staffing plan is going to be for security, putting processes and procedures in place, different things that we have into the commission themselves in order to get approvals coming back. And so why the construction is ongoing, and we've obviously had some adverse weather up there in terms of flooding, and now with the snow and the cold. Still think we'll be on schedule. We may be maybe a week late, but at this point in time, it seems to be moving along fairly well. I'll talk a little bit about the Decommissioning Oversight Committee meeting last week. Our Decommissioning Oversight Committee came in last week. We had 3 individuals that come in periodically to assess different areas of how we're doing our work, whether or not we're doing it appropriately. Several members of the senior management team attended, as well as 4 of the board of directors, so I want to thank all of them for their support. One of the challenges that I had as we got out of that Decommissioning Oversight Committee from the board of directors, specifically Director Williams and Director Moody, was to talk a little bit more about what's going on up there. So I'm going to do that today, and then really ask that you join in. So I'm just going to pull some snippets out of the report. Marty Virgilio, who is ex-NRC and does many nuclear oversight committee meeting or oversight activities, both on operating plants as well as decommissioning plants, looked at several areas. One of them was industrial safety. And some of his comments were, while the number of safety observations have increased, there's variability in the quality and the untapped potential to improve the effectiveness of these observations. So there's an opportunity. This is their job, is to bring us opportunities. There's an opportunity in setting and reinforcing expectations about the observer's role in that, and what the observers need to do. So they need to look at work packages and guiding principles or procedures before they conduct the observation, so they can compare that. And then another opportunity was just to make sure that once those are put in, that they're documented, and that they're documented in a quality way, and so that those expectations are being met. He also went into and looked at our security area. He noted that while the staffing numbers are below the authorized level, we have a lot of attrition going on with our security officers at this time, the department is functioning acceptably and meeting its commitments. Nuclear oversight, he said the nuclear oversight continues to provide value to the station through its independent performance of assessments and audits. And I'm not going to go through all these, but I do want to go through some of them. Licensing and our corrective action program. The MRC, which is the Management Review Committee that looks at all of the corrective actions that are put into the system by any number of individuals. It can be contractors, it can be employees, everybody can report into that. The MRC, or the Management Review Committee members, found several CRs that did not contain enough information to convey the significance of the problem. The MRC should consider if this trend is requiring either an action to reinforce expectations or a refresher. So again, what can we do to retrain people? The number of CRs that are being generated, corrective action reports, are being generated is high. The tools being used to investigate the problems are appropriate, and the backlog of the CAs is currently at 0, which was a great improvement over what it had been historically.
And he also liked the increased number of CRs. He says that is a good thing. I thought that was important to him. Those increasing CRs.
Corrective
Corrective action.
So see, that's CA.
Corrective action report.
Corrective
Okay,
action
thank you.
CRA.
In emergency response, he noted that the emergency response program owners in the licensing and regulatory assurance department and their partners in operations radiation protection have developed and are maintaining a strong emergency response capability. So those were the areas that Marty looked at. In terms of Todd Smith, Todd came from the main Yankee, Vermont Yankee, so the Yankee Row plants where they did decommissioning out there. His particular expertise is around project management. And so we had him look at the pool to pad project. What he said was the number of unusual events that impact fuel loading, whether that be flood, snow, sleet. He was very pleased to see a formalized weather plan that had developed formalized weather plan had been developed with clear command and control assigned to the shift manager. And so that was an improvement. One of the things that they asked at the last DOC for us to do.
He also said that we should be benchmarking with other companies because we've got such a good, robust plan on that.
He did suggest that he tells us that other companies should come and do, see what we're doing. As well as Marty. Marty said the same thing. That we establish the fabrication of the canisters and the fuel loading production are scheduled at one per week, which we are currently doing. But he's noting that there is very slim
margin of
error. Yeah, very slim margin for error. But what he means by that is that we don't have a number of canisters on site, and so we have to keep both the manufacturing as well as the fuel loading on track to make sure that we have those canisters when we need them.
And that had to be with documentation, and I believe that Marty brought that up, is documentation. Is that what you're going to talk about with the canisters?
I was not, but part of the documentation problem, if I can give you maybe an idea of what that means. In the nuclear world, documentation is everything. So you track from the metal itself, where it gets made and tracked. You track that all the way to the fabrication, the end fabrication, and then transfer it back. So lots of different handling. And what we're seeing in some of the documentation, and I would be remiss if I didn't mention Jerry Beasley and the work that he's doing. One of these packages can contain anywhere from 800 to 1,000 pages. He goes through detail by detail by detail by detail. He has typically, I would say, somewhere between 5 to 10 pages of errors that he finds in these packages and provides that back to the manufacturer. The manufacturer goes in, they correct them, they send it back out. He has to re-look at that 800,000 pages. He's done that on several packages where he's had to do that 3 times to make sure that everything was appropriate. And the importance of that is when we want to move, or when we can move the fuel from the independent spent fuel storage installation to the Department of Energy, that all of that information has got to be transferred and it has to be accurate. And if we don't maintain that and we don't have that, then we will have issues with transferring that fuel at a later date. And so it's critically important that this get done in an acceptable manner. And so he has been just very thorough, extremely dedicated, working to meet schedules on weekends and nights, and traveling back and forth out to the facility to work with the manufacturer, and then coming back and looking at packages. And so I can't say enough about the work that he's been doing. In terms of project controls, Todd noted that the team continues to refine the key performance indicators in order to identify the best indicators possible to proactively manage the decommissioning of Fort Calhoun. This is a transition from a safe store to a decommissioning or a deconstruction project, so we're having to re-look at all of our key performance indicators. He also looked at the independent. He also looked at the security facility that we're building out there. Had some suggestions, but I think I already covered that one previously. The last one that I wanted to mention was Wayne Norton. Wayne comes to us with significant experience in doing and being in charge of the 3 Yankee plants as they decommissioned. Has been with us from the start when we were trying to make this decision, and is the chair of the Oversight Committee. His comments started with progress towards the development of the deconstruction project is noteworthy, and the transition from dormancy to ISFAC and deconstruction appears to be on track. Progress on several recommendations since the last visit has been notable, so we're taking their comments, and we're putting those into actions. He did say further attention is required to define the final end state. Timely abandonment of our systems, evacuating or clearing out our facilities. We need to challenge the need to keep anything, and so he's really challenging us to try to figure out how to move that forward. He also looked at engineering, he looked at environmental site characterization, he looked at the ISVC transition and going from shrinking that PA down to a security or a ISVC only PA. In the terms of radiation safety and waste management, which I think is, if you think about decommissioning, that is the bulk of the project. He said there's no concerns identified at this time. The site needs to re-estimate the final project dose, recognizing the transition from decon to safe start. Because obviously if you're going to do more work, you're going to have more exposures. You need to take a quick look at that and make sure that it's still appropriate. System abandonment, he said, continued the system to challenge the process improvements and in progress, including alignment with energy solutions. The abandonment and building of the infrastructure projects need to constantly challenge why we need anything after the fuel is on the pad. And reactor vessel and reactor vessel internals, those need to be segmented. That is the highest radioactive components that we will be managing subsequent to the fuel. He said the plan is thorough and logical. There's a schedule out there that is 46 months long. He said that is timely and best in class, and he wants us to see if we can actually do it.
Yeah.
So there's a challenge there.
said
He
you've done
recognizes
everything
that.
you said you'd do so far.
He
Threw down the
recognizes
gauntlet.
that. And that comes from somebody who's done it. The only other thing that I would say is that, basically there were no other concerns identified. He thought that the deconstruction is appropriate and appears to be progressing logically and seems to be on track. So just to give you a little bit better overview of what went on at the Oversight Committee, and that concludes my report.
Thank you very much. I'm so thankful for you and the team that you work with out there that keeps this on track and actually performs so well that people are asking you to offer your services to others who should be benchmarked. Other board members that visited out there?
Sure, I'll go first. So once again, this is my second time out there, and both times I just really want to commend the professionalism and the dedication and the integration of that team up there with Energy Solutions and how they really have worked together to be a model for others, to be best in practice for the industry. Those two statements just really say a lot. And noting that they've been doing this while dealing with significant water management issues. So, and then the other thing is really extending their striving for excellence to the entire enterprise, and the fact that our employees who used to work at Fort Calhoun, who have moved over into other areas of the district, really bring with them that professionalism, that commitment, that sense of excellence, and I saw that when I visited the Sarpy County station, and how those employees who were formerly at Fort Calhoun have really brought a different perspective and a different, really setting the bar higher for the entire district to be best in practice in the industry. So that's good work. Thank you.
Thank you. Others?
I wanted to talk about the Energy Solutions, to elaborate on that. When they first came, this is my third meeting since Energy Solutions has been there, and they seem far more involved now with the deconstruction. And an example was they're going to have they're looking into a virtual reality tool to figure out exactly what the doses would be for system abandonment, and what is the best way to do that and the safest way to do that. And how, afterwards I was talking, and immediately the systems management guy is there with an OPPD guy, and they're working together and discussing things together, and like the cohort was there, which I think is really good. I wanted to mention that Marty Vertilio has been visiting the nuclear station since 2013. He came in after the flood, so he has seen us. He was first there as an NRC member, looking at us and saying, "Hey, clean up your act." and has seen the progress. And that's when he said there are no corrective actions out there anymore. You know, he was going, whoa, compared to what there used to be. And he's just, he can always see the accomplishments that we have continued to make. I wanted to mention the security force. There has been a change there. It was in the director's update and everything about how now, because we've had a loss in numbers of security force, there was, maybe if you can talk about that as far as labor relations and how you discussed with labor how we're going to have this outside contractor. However, those outside contractors are the first ones to leave. Our security force stays there. If you can just sort of mention that a little bit. There you had an agreement, a discussion with the unions on that.
So as we move from the situation where we are today and we go to an ISFAC only, we shrink that protected area. And because we're doing that in June or July when all the fuel is out on the pad, we have told employees now for a couple of years that there will be a layoff. And that layoff will hit the security workforce pretty significantly. And so we've done a number of things. One is just to let them know that, right? To let them know that that's coming. Two is as they start to attrit out, we've been trying to support them to say if they, they want to do education, they want to do other things. We've been trying to support them to be able to accommodate that. But as they trit out, the folks that are left are working significant overtime, right? Because we still have to have a number of people. And so we had a contract, but as we've gone through a number of times with a vendor, we were not getting the people that we needed. We would bring in 10 people and maybe we would end up getting one on shift. And so it was really difficult for us to be able to plan to try to get some of the overtime taken care of by bringing in contractors. So we went out for a bid. We got a different contractor in. We've been working with that contractor to bring in hopefully higher quality employees to come in and to backfit some of the overtime that we're seeing. And really what they're doing is they're actually targeting them to put them in places where we can train them quickly and get them on shift quickly. And so we started with 20, we're down to 19, so much better. And they're getting through, they have to go through significant training and they have to pass, our general employee training. And so there's a number of hurdles and background. They have to go through background checks. Number of different hurdles that they need to go through. But it all looks fairly positive. So that will help. And then in terms of working with Martin Her Group, we went out to the labor union and we 1483 and we had a discussion with them about how should we staff this in terms of, should we do postings, should we do by seniority. We've come to an agreement with them that it'll be by seniority. The union has voted on that and that's where this fell. And so we'll be staffing that pretty quickly, probably in the first quarter, so that people know, how that's going to fall out. They can look at the seniority list today. They kind of see that. But we do also have some positions that we will post because they're outside of the union. They're not union positions. And so we want to get that staffed as well. And so we'll be doing that probably in the first quarter time frame. And really happy to have the memorandum of understanding with the labor union so that people can look at it and they can figure out where they're going to land.
And one other thing is kudos to security for all the overtime they're serving. I appreciate their service. And there was an emergency response graded exercise that for the NRC that they passed and did a great job, correct?
Absolutely.
Yeah.
Absolutely. So we had a number, I think this is the, knock on fake wood as you said, the third time in a row that the NRC has come in and we've had no violations, even minor comments coming back from the commission, really looking at the things that we're doing and making sure that we're doing them. Always suggestions for improvement, and that's great because we can take those and implement them. So.
And I loved it. I think Wayne Norton said, it's as good as it gets. I said, whoa. So that's as good as it gets right now, so that's good. Keep up the good work for the whole team.
Dr. Moody?
I'll be really quick. Thank you for the fuller report out, Mary. It's always rich content, and I appreciate you bringing it back to the board, so thank you for doing that. As always, I'm always impressed when I'm out there. It's just such a high-functioning team. It's just on the ball, passionate about their work. So again, I think that was great to see. It really continues to underscore how valuable the DOC is for us as well. Like, I hope we're getting them a good Christmas gift, because like the value that they add in that week that they're there is so great. I like what you said, Janice, about how the nuclear team is kind of infiltrating the rest of the organization. The other thing that struck me while we were there is the frequency with which the nuclear team is leaning on the rest of the organization as well to provide input and insight. Like, it's really well integrated, is my perception, and I think that's great. The last thing I would say is Wayne did mention, starting to think about what the long-term plan is for the site. So that just kind of caught my ear from a long-term vision standpoint. We don't need, I'm certainly interested in where that goes. We don't need to have that conversation now, but that was an interesting thing for him to bring up on the meeting.
Thank you. Anybody else want to talk?
Eric, did you have anything?
I was there first time. Brief comments that was highlighted the backlog of CRs, the schedule, and the budget were all going very well. So I asked that we make sure we find opportunities to complement the team in general more widely as we identify successes in all of those areas, so that people know how successful this has been in the interim prior to the end of the overall project, where everything is concluded. We make sure to find times to say we got a really great report, things are going really well. It speaks to the dedication of everyone involved. So yeah, thanks very much to everybody.
All right, thank you. That would be the end of the nuclear. On to SD7. I introduced that earlier. Any comments from other board members at this point? Have you had a chance to look at the changes and what's available?
I thank the public for
Oh my
their
gosh.
outreach. It was excellent. We got a lot of numbers on that. I don't know how the exact amount of, I don't know where they were coming in. We get 24/7 any type of board input. I don't know if the public knows that, but the minute somebody sends something in, we immediately get it in our email. So 24/7.
Right.
At first, I thought Mo was doing that at 2 o'clock in the morning. We went, whoa, Mo, should you be up?
It's our website.
It's the website,
Yeah,
which is an improvement, by the way.
it is indeed. Other comments? Will be on the consent agenda. All right, very good. Back to Ms. Fisher, I believe.
Yes.
Well, good afternoon.
Good afternoon. Good.
I am going to talk a little bit about Power with Purpose. And so apparently I need to get through this presentation on SD7.
Yeah, it's in a different format.
Oh, okay. Okay, you need to bring it up, okay. I'll just start while Mo's doing that. The thing I wanted to start with was a thank you. From the board on down, right? There has been tremendous time put in by the board. 4 4-hour training sessions, numerous committee meetings, lots of questions going back and forth, lots of reading, lots of different things. So I wanted to say thank you to the board for your time and your engagement. Secondly, I want to say thank you to the staff that has been working on this diligently, consistently, dedicated, hardworking. And for all of those that have worked on it in the room, stand up, please, and be recognized. Yeah. And there's lots and lots of people behind them. Now, the reason I have them in the room is as I go through this, I can phone a friend. So they all know that they're gonna get called upon perhaps as we go through this. And then last, the senior management team that's been leading this effort and been supportive in every way. So I just want to say thank you to all of you. So I think we're ready to go. Last but not least, I'm going to say thank you to Mo. She's been keeping us all on track. I really appreciate it. Thank you. Okay. Setting the stage. This is going to be our agenda today. What guides our decisions, taking the next steps, what to expect. Request for proposal overview. We're going to give you a little bit of a taste of that, which we haven't done publicly. And then Lisa is going to get up and tag team with me, and she's going to do the stakeholder outreach input and what's next, where are we going from here. So, setting the stage. I'm going to go through this fairly quickly. We've seen this a number of times, but I just want to remind people about where we've been and what we've been working on. So the first thing I want to remind you is back in 2010, we went out for wind contracts. We purchased a 60 megawatt wind contract from Flatwater in December of 2010. So that was our first foot or toe in the water on renewables. From that point forward, we've been focused on a number of different things, but in 2014, we joined the SPP market. And so that's really changed the complexion of the business that we're engaged in. Also in 2014, we announced that North Omaha Station, units 1, 2, and 3 would retire. That was subsequently changed in the 2016 Fort Calhoun decision. And that our units 4 and 5 by the end of 2023, and I want to be specific, we're trying to make some specificity around this in order to send the messages to our employees about what the timing is. And so while a board resolution may say in 2023, I'm trying to signal to them and give them a message. By the end of 2023, units 4 and 5 will be refueled to natural gas. And units 1, 2, and 3 will be retired. I skipped one there. And then we also established the power panel. So we did a lot in 2014. I think as you heard about, we went out, we talked to folks, we got their input, we got their suggestions, we figured out where it was we needed to go, and we rebalanced our portfolio based on the input from our customer owners. We also established in 2015, the board, our strategic directives. So we've had a lot of conversation about those over the course of the day. Those 15 directives guide our work. And so it is critically important to us. It is the engagement between the board and the senior management. It is that North Star that we look at. These are the things that we deem in terms of the senior management team to be successful in our work or not. So in 2016, North Omaha Station went from a retired units to we're going to maintain those units for capacity. So they retired from coal. They've been operated on gas since that time. We did that specifically as we shut down Fort Calhoun. We wanted to make sure that we had enough accredited capacity on the system, and so we kept those on the system. In 2016, we made the hard decision that we were going to shut down Fort Calhoun. It did cease operations on October 24th of 2016. And we announced that we were going to go into a no general rate increase for 5 years. We're in the 4th year of that, or we will be in 2020. We will be in the 4th year of that. I'm thinking we're already in 2020, so the year is coming to a close. What's that?
It feels like it.
It does feel like it. Thank you, Lisa. And then we also did the Midwest Transmission Project, and that came into service at the end of 2016. So lots of activity, not only in 2014 but 2016 as well. And then as we went forward, we did the Elkhorn River Valley Transmission Project in April of 2019. Community solar sold out, as Lisa said earlier today, in 49 days. Quite the feat. Now, I know there's some comments out there about community solar. Community solar is in a floodplain, and so what we're doing is we're really having some issues with the construction of community solar, and I want to be clear about the construction of community solar. Once the community solar is up and operating, it will operate in the floodplain. It's high enough out of the floodplain that it should not be affected going forward. It's the construction piece of this that we're dealing with. It was due to come online, COD, no later than June of 2019. We've obviously missed that date due to the flooding, but we are hopeful that we will have it online before the end of the year. Shoals Wind Farm, we talked a little bit about earlier. That did come online. Its COD date was earlier this month. And so we're happy to have the Shoals Wind Farm into our renewable portfolio at this time. And then the Sarpy County Transmission Project that we talked about a little bit earlier. Lots of progress that's been done there, lots of construction. If you drive out on Highway 50, you can get an idea of all of the things that are going on out there. Significant work for the district to bring that project. And it should be all in service by the end of the year, right?
Mary, just now that the Shoals is online, what's the exact amount of megawatts we have on wind?
I believe it's 160 megawatts. I don't. I'm sorry.
Just shy of 1,000.
Oh, just shy of 1,000. I'm sorry. I thought you said Shoals. Yeah. Yeah, I want to say it's 976 is the number I believe that we are for wind. 971. Okay. So yes, just shy of 1,000 megawatts total wind in the district once Shoals has come online. Now that Shoals is online.
But you have WAPA, you have ELF.
Yeah.
Some other renewable sources.
We have
Right,
other
which takes
renewables.
you up over 1,000 megawatts of renewable. So thank you, Troy. I appreciate that. So having gone through the history, what's our next steps? Where are we headed with this? We have made a request to the Board of Directors to build one of the largest utility scale solar additions in the region. And we need the natural gas to back that up. So as we go into this, solar only gets accredited in the summer by SPP rules. It does not have any accreditation in the winter. And so when I talk about backup to solar, it's really backing up that accreditation in those months where we do not get solar accredited. That doesn't mean that the solar is not operating. I want to be clear about that. That is not what that means. It means that this is an accreditation or a rule within the SPP that we have to follow. And so it's really helping to back up that accreditation. Modernized low-emitting natural gas assets, replacement for North Omaha 1, 2, and 3. I said in 2014, we said we were going to retire those units. As we retire those units, we want to replace them with modernized gas units. And then voltage support where we would need it.
Mary, can you explain the difference between the modernized gas units and the gas units that we have up at North Omaha right now?
Yes, thank you for that question. So the units 1, 2, and 3 that we have online today are some of the oldest units that we have on the system. And they were really built to be coal-fired units. And so when you build a coal-fired unit, it is a larger unit and it has considerable time. If you go from a cold start up to full load, it can take anywhere from 18 to 24 hours to get it to full load. If you start from a warm start, it can take anywhere from 10 to 12 hours to go from what would be a low load or a warm start up to full load. When I talked about modernized gas has the ability to go from 0 to push a button and come online at full load in about 20 minutes. So that's what we mean by modernized gas assets. It really creates that flexibility for us on the system. It comes up much quicker so that we're not burning a lot of gas while we're warming up the boiler to be able to go into full load on a unit like 1, 2, or 3 at North Omaha.
So you're emitting less carbon, in other words, compared to the two also.
So we would be emitting less carbon just during the startup
during the
period.
startup,
Once you
what I'm
get
saying.
up and at full load, they have a heat rate that's approximately the same, so that would be approximately the same. But during that 18 to 24 months, we would be emitting, hours.
Thank God
We
it's
would
not
be emitting less carbon by just coming up to speed within the 20 minutes. So that would be the savings that would occur through those units. Did you have some?
Yeah, so in these larger units, North Omaha units, once you bring them on, you usually leave them on for a day or so.
The old
They weren't
ones.
made to come up and come right down. And so
Yeah.
not only are you saving on your gas coming up, but you only run the unit when you actually need it, which may be a 2 to 3 or 4 hour period, and then you can turn it back off. So there's that flexibility too.
On the modernized
On the
gas, you can
modernized
turn it
gas.
off when you don't need it any longer on
And
the system.
eventually, this means lower operating and maintenance costs, lower capital replacement costs, because you are operating a unit that was designed to do that, as opposed to having to put in a lot more money in updating a unit that wasn't designed to do that type of work. So long-term benefits from a financial perspective.
So, but North Omaha 4 and 5, once they're converted from coal to natural gas, they will function the same way that 1, 2, and 3 does now?
They will.
Is that correct? Okay.
They will. And so getting to that, we also want to fulfill the rest of that plan, and that is to not only retire North Omaha 1 through 3, but also refuel 4 and 5 before the end of 2023. And that was the commitment that we made back in 2014. We want to continue with that commitment and make sure that we meet that commitment in the future. So by implementing those changes, along with adding utility scale solar and the backup for the solar, we expect that at the North Omaha facility that we will be reducing our carbon footprint at that facility by 80 to 90%. That includes the component of gas that we will be burning in the modernized units. So we've taken that into account. So there's more of a reduction out of 1, 2, and 3, and the refueling of 4 and 5, and then we've added that little bit back that we would be putting back into modernized units 1, 2, and 3's replacements. So that's all been accounted for in that number, and we have those estimates to be somewhere between 80 to 90%. What that does overall for our fleet from the time from 2010 through 2024, when all of this takes place, January of 2024, that we would have reduced our carbon footprint by about 30% is what we're anticipating at the end of 2023.
Mary, is that comparing year over year, 2010 versus 24, or is that cumulative over that time frame?
No, I think that's comparing year over year, and I'll phone a friend because Mr. Baker said he can suggest.
Yes, that would be year over year.
Yes.
And it's from, say that again, from which year to which year?
From 2010 until 2024. The reason we select 2010 is because Nebraska City 2 came online in 2009, and we think that we should be including all of the carbon from Nebraska City 2, and so we picked the first full year of operation of Nebraska City 2 as our baseline.
Sorry, roughly, how do our annual emissions today compare to what they were in 2010?
I have to think about that. I'm sure they're down because we've converted 1, 2, and 3 at North Omaha, and I would say, I don't know, Russ is looking up the numbers, so we'll get back with you.
Okay.
That's why I have them in here, so I can phone the friend.
I think a percentage that is often overlooked is the one that Mary talked about earlier, the 80 to 90% reduction.
Sure.
This Power with Purpose solution is looking at a part of the system, not at the full system. That's the path to decarbonization. Eventually, we'll get there in a longer time. But at this slice of the system, achieving a reduction of 80 to 90% in carbon emissions from comparing North Omaha 1, 2, 3, 4, 5, and the new gas that we're looking at, it's significant. It's almost eliminating. Almost, not quite, right? And this is where we need that gas peaker for the winter. But it's an 80 to 90% reduction in emissions on that part of the system. That to me is remarkable.
Well, to double down on that, I know going back to 2014, if I recall, part of the conversation was about concerns of pollutants over North Omaha. And so naturally, you're seeing some of the same sort of reductions, I assume, and some of those other pollutants beyond.
Yes, we are.
Yeah, for sure.
And Russ is flashing, it's about 10% of a reduction. Go ahead.
Correct, which are primarily attributable to the North Omaha units fuel switching in 2015. Yeah, about 10% reduction so far.
So Mary, is the 80 to 90%, is that reduction from when they were all producing on coal, or is that a reduction from now until we do the conversion?
That is a reduction overall, I believe, at that facility. No, he's shaking his head no, okay. As you can tell, Russ did the numbers.
Okay.
So the 80 to 90% reduction is from 2018 operating, so that was with units 1, 2, and 3 on natural gas. We're seeing 80 to 90% reduction roughly. It would be closer to 95% reduction if you went back to when 1, 2, and 3 were on coal.
And that's what I thought, so
Yeah.
I think that's
Thank you.
important to know.
Well, so hang on, that's not just the technology, that's the expected runtime too, right?
That's
Right.
correct.
Yeah.
Right.
That's correct.
And I think that's the point that I was trying to make and emphasize, that it's not just the technology, but the runtime, how we're expecting to run these units. I understand when you talk about gas, it's a fossil fuel, it may not necessarily sit well with some customer owners that don't want to see any more fossil fuel, but the usage time, the runtime is incredibly important. To know that we will have those units there, but they will be run significantly less than the units that we have today. So it's huge. It's that 80 to 90% reduction from last year to when we convert and we have all these things all done for that slice of the system.
So just to make, I think this is obvious, but I'm gonna ask it anyway, so just to make sure it's clear, 80 to 90% in that specific location. Thank you for that clarity, Javier. I assume that doesn't mean that we're creating balloons of emissions elsewhere as a result of reducing there?
No.
Right?
No.
Matter of fact, it
No.
includes that additional
The-
generation that we
it-
need, the modernized generation and the estimated runtime of that new generation.
Yes.
So it includes both that.
Right, so that's why we're not at the, 90 to 95%. We're estimating.
Yeah.
The reason we're estimating is because we want to make sure we understand the gas units that we bring on and what their emissions profile are, so we're giving a range of what we believe it will be.
So, the accomplishment of fully removing coal from North Omaha is excellent. I'm very glad to see that. And I've mentioned a couple times in the past the idea of how this investment allows us to leverage decarbonization, and we've talked about that a few times recently. But specifically, this allows us to carry out the decarbonization which was planned in 2016, but that at the time did not have a specific resource answer. And so this is an answer for a past decision that was made and allows that decarbonization to be carried forward. And I guess I'm going to ask again when we talk about the future of how this additionally allows us to leverage decarbonization looking forward. But the ability to carry out the previously outlined plan of removing coal from North Omaha and shutting off 1, 2, and 3, I think is an excellent accomplishment. And people have been telling me that because this station is in my sub-district, and so I think there will be people there on Thursday to applaud our ability to carry out this particular transition because of the both carbon emissions and other related emissions that have been in that location for many years. So thank you.
So thank you for that comment. And I was just going to go to the decarbonization study. It is true that, at least in the way that I think about this, that when I think about how these two things are linked, I've had several questions. So, what do you think about where we're going and how we link these two things together? And here's the way at least I think about it, and I put it in perspective. For me, we need to have a foundation, and that foundation needs to be strong. And in the next couple of slides, I'll be talking a little bit about resiliency. Resiliency in our system is the ability to bounce back from a shock, and that tells us what the strength of our system is. We are asking the board to approve this so that we can maintain the resiliency that we have today. We're not trying to improve it. We're not trying to let it decrease. What we're trying to do is to maintain that level of resiliency. That's important because if we have that resiliency on the system, it gives us a lever, it gives us a springboard to be able to do more things in the decarbonization study. And hopefully, as we go through that study, what we'll find out is that we can do them sooner, quicker. And so, things like, what do we do with John Street? What do we do with Nebraska City 1? What do we do with our other carbon generation? And what does that look like going into the future? And so this really provides us with a foundation to be able to look at those things and to really push us through the modeling that we need to do and come back to you, the board, and our customer owners with solutions for how we have pathways moving forward to decarbonize our fleet.
And So yeah, this is kind of the future version that I had mentioned.
Right.
Can you elaborate on some of the possible answers that are within the realm of discussion because this is being done, that would not be within the realm of discussion if this were not done? I mean, you mentioned specifically a couple locations, but are there things that we can look at that we kind of expect that could be included in the decarbonization investigation now that would not be without this?
I don't know about without this, but what I would say is that it makes it easier for us to look at things like how do we increase the distributed energy resources on the system? How much can we support energy efficiency with our customers? What can we do with resources like Jones Street, which I already mentioned? What sorts of things might we be able to look at in terms of microgrids, in terms of batteries? I think all of that comes on the plate as far as the decarbonization study. I can't today assess, what could or could not have been on that study. I think this is more of a timing issue. I think that if we have a strong foundation, it allows us to do things probably faster than we would have if we didn't have something like this to help backstop the system and make sure we have enough resiliency in the system to move forward with a decarbonization plan.
So are there specific operational changes at other facilities that might be possible?
Sure. I think there could be things like maybe we just operate Nebraska City 1 seasonally. I mean, those are things that we can look at. We also want to look at, can we put on some sort of decarbonization technology so that not only do we take care of the emissions that we have today, but we're also looking at carbon as an emission and how we can do that going forward. So we'll look at carbon capture technology moving forward. So it provides us with the basis to do all of that.
Great, and I guess I'm sorry, I just wanted to highlight that because three things are happening simultaneously, SD7 that we already talked about, and this decision now, and the decarbonization study that will be happening in the future. And so relating the three of them together to how we reduce the cumulative impacts over the next few decades is very important to me, and a lot of the discussion that we've had about current decisions does lead to references to that will be handled in the decarbonization study, and so that is asking for a lot of understanding that that is critically important. And so I want to make sure that we understand, that how closely tied these are, and that ongoing implementation there is necessary to see the best outcomes from the decisions that we're making now.
Right, and I think it ties to what Lisa was talking about earlier too. We're looking at how it is that we go out and we get stakeholder input on the scope of this, right? To help us to understand what the expectations are as well there. And then through the decarbonization study, how do we touch base back with them? And so the whole strategy around the stakeholder process that Lisa will go into in detail here in a little bit, I think is also being one of those things that for the future that we need to pay attention to specifically with this study, because I do think it's important to go out and get that feedback similar to what you're bringing up with the questions that you're asking.
Great, thank you.
So Mary, one thing that you didn't really mention, but one of the drivers of this process has been the economic development that we've been seeing across the district. And yes, there's the Facebook and Google, but it really is economic development across the district, from Blair. I see it all across my subdivision, but really it's economic development. And then also most utilities in this day and age have seen flat to negative load. And so that's kind of what makes us unique in this journey. But also as we look to the future, where if we want to electrify our transportation, if we want to electrify more homes that are currently using gas for some of their needs, then it's important that we have a system that can support that. And so
Absolutely.
So this is that we know that this is partly driven by those closures and those changes, but it's also driven by some of the economic development that we've seen, and kudos to our economic development team that made that happen. And good to have that problem, I think, at this point in time.
Thank you.
I had a follow-up question to the 80 to 90% and based partly on expected runtime. So what capacity factor are you using as a placeholder there in making those calculations?
I think we put in a 10%.
At 10%?
Yeah.
Thank you.
Anything else? Okay. So really what guides our decisions and why are we acting now? As you all know, you have set our strategic directives and our mission statement to provide affordable, reliable, and environmentally sensitive energy services to our customers. Those are things that we do internally that are really guiding our decisions. We also have external influences in the state of Nebraska, and I'll talk about something that I think Janice was just referring to is our obligation to serve. We have economic development. We do have an obligation to serve all customers who come into our footprint. We also have the United States federal government in regards to FERC and NERC, or Federal Energy Regulatory Commission, and North American Electric Reliability Corporation. They also guide our activities, as well as the Southwest Power Pool and their rules that we must meet. One of those rules is our obligation for power supply. So not only do we have an obligation to serve all customers who come into our footprint, we also must guarantee the power supply, either generated or purchased, over 12%. So we need to have our peak day or our peak plus 12% reserve margin to meet our SPP obligations.
So on that slide, I'm sorry.
No problem.
This may come up again. This has been a fundamental misunderstanding of mine, perhaps. This reserve margin of 12% is for reliability. Recall a couple of exchanges we have had where a presenter talked about a resiliency margin. So is that more of a technical choice to make this margin happen, or is that an additional delta there in this?
So this slide is talking specifically about accredited capacity to meet the SPP market rules. So what we're really talking about in this slide is just our obligation to have enough generation to meet our peak day plus 12%. When I think about reliability, I think about some of the things that Troy was just talking about. Reliability of the system, if we have cable failures, we go out and replace them. I think you've talked about service in some of the rural areas and the fact that they don't have the reliability that maybe some other areas in the system have. And what can we do to shore that up? And some of the things that we're doing in terms of cable repairs are absolutely providing that. And so that to me is reliability, right? Reliability is having power each and every day to turn on that light. Resiliency is the ability of our system to withstand the shock. So things like tornadoes that we saw in 2017, when we had several transmission lines out all simultaneously, and then we had a transmission line that was out for about 9 to 10 months while it took us time to repair that and rebuild it. That's the resiliency of the system, the ability of the system to handle a shock. Flooding that we had earlier this year, that's the shock to the system, where we had a couple of weeks where we really wanted to make sure that we had enough generation to meet our load. That's the resiliency of the system, making sure that we have that. So this slide in particular is talking about our accredited capacity requirements to the SPP marketplace.
And this has been also termed generation sharing, so that we as a utility, this 12% is around generation sharing to make sure that each utility has enough reserve margin or generation sharing above their peak, 12%, to help the whole region value and benefit. So you don't have a cascading effect if there's one generator that fails for whatever reason. And the piece around the resiliency margin is as you begin to eat away at capacity and VARs and frequency on the system, these are more electrical kind of elements of the electrical system. As you begin to eat away on that margin that we've historically had, you begin to put the system at risk. Not necessarily reserve margin that we're required to have, but the system at risk for being able to take care of that impact and being able to come back. And if I begin to lose that frequency in the system, I move to a brownout or a blackout. And so what we're trying to do is prevent that and to make sure we have the right resiliency margin that we currently have today as we begin to build for additional load in the future and as we begin to make these generation changes.
Thank you.
Hopefully that's helpful.
It's all helpful.
So, leading to that, not only do we have generation sharing, but we are interconnected on a transmission system that is similar to a highway system. If you think about it, it knows no boundaries. It doesn't matter whether or not there's a city, just like I-80 will come through Omaha. It'll also go through Denver. It doesn't matter what city, it doesn't matter what state. This is the transmission system that comes across. Typically, we call it the grid, right? The grid that brings in at a high voltage into the regions across the U.S. We belong in the Eastern Interconnect, and so the kind of the eastern side of the U.S. is what you see that we're all connected to. What happens in that system affects us because of this interconnection. So what are we trying to solve for? We've had a lot of discussion about this. It's this changing generation landscape that I'll show you here in a minute. It's supporting the needs of our growing community, as Director Malhoff just spoke about. And it's remaining not, it's make sure that we maintain the reliability and the resiliency of our system. It's not one or the other, we have to do both. And we're going to do that through the framework that we set up. The mission, the strategic directives, as well as our legal and regulatory obligations. So what does that look like? Why do I keep talking about the changing generation landscape? It's because of this. What you see in April of 2016, Mid-American shut down George Nill Units 1 and 2, as well as Walter Scott Units 1 and 2. We made the decision in 2016 to shut down Fort Calhoun, which is 502 megawatts. And we also have the commitment out there for North Omaha, as we just talked about, to retire 1, 2, and 3 on and move them to gas, and then retire them permanently in 2023. And then 4 and 5, North Omaha 4 and 5, will be taken off of coal by the end of 2023 and converted to natural gas. All of these changes are affecting our ability to make sure that we have enough resiliency on our system. We've increased our renewables to approximately 1,000 megawatts. We have reduced our baseload generation in the region by about 1,300 megawatts, all having significant impact on how we plan and use our system. So resiliency, we talked about flooding, polar vortex, freezing cold. On the right, you see tornado with a transmission line down. These are the shocks to the systems that we've had in the last couple of years, which has really made us think differently about how the system needs to be analyzed. So the modeling that we went through, we not only looked at the reliability of the system, which has been consistent, and which is what the SDs are set up to monitor, and that's around SAIDI, and the SAIDI that we report out. But it's also now one of the things that we're seeing, given the conditions that we've seen through weather events over the past couple of years, resiliency needs to be part of this conversation going forward, and it needs to be part of the considerations that we have in how we're going to replace North Omaha 1, 2, and 3 and convert 4 and 5, as well as providing us with a good baseline in order to springboard forward on our decarbonization studies. So what did we do? We looked at what had gone on, and we also looked at what was that resiliency threshold. We looked at the system resiliency, and we are projecting out that if we take no action, what we could see is a significant decline in resiliency. What we're asking the board to do is to approve the solar and the gas assets in order to maintain the resiliency that we have on the system today. We do not want it to degrade further to the point where the resiliency threshold is met. And at that point, people ask me what happens, and my answer is you either have rolling brownouts, you have blackouts. Those are the sorts of things that you will get into if you don't have enough resiliency on your system.
Can you explain what would happen? A lot of people say, well, how come you just can't have solar and forget the gas? What would happen to resiliency then?
So solar is an interesting attribute. And as we went into this process, earlier this year in kind of the late December last year, January timeframe, maybe into February timeframe this year, We went out and we asked vendors to come in and talk to us about the capabilities of solar. What we learned is that solar, if you contract it appropriately and if you build it appropriately, has the ability to provide some essential reliability services, so frequency and voltage control, which is what we need. We need megabars into the system in order to keep the system at a significant, what I would term, pressure to move the electrons from A to B. So that's what pushes the electrons through the cables into your homes. What we found out was why solar can do that. When we look at bringing all of these things together, it's only accredited. It goes back to that, what I have to meet for SPP is my peak day plus 12%. It's only accredited in the summer months. And so in the winter months, I have no accreditation for that. And so I still have to meet that accreditation requirement. And so that's why I need the backup to the solar, is to ensure that we have enough credited capacity year-round to meet the SPP market rules.
And would SPP ever change that accreditation? People are saying, why don't we just wait until SPP changes the accreditation?
Yeah, SPP has changed it. It used to be 14%. So they have changed it down to 12. But what I would say is now there's a national conversation going on, starting with FERC, going down to NERC and down into SPP, in terms of what we need to do in order to ensure resiliency. And so as they look at that, they could also increase it back up to 14% to make sure that we have enough resiliency on the system. But at this point in time, I'm not aware of anything that SPP is talking about that would say that they're going to change the 12% margin. Always could come up in a conversation tomorrow, next week, but I'm not aware of anything, and I know Joe probably is the closest in the room to this. And Joe, I'll ask you, do you know of anything? No. Okay. Yes?
Could they potentially change the way that they view solar during
Yes.
winter months?
Yes, they could. And actually, there has been some conversations about that. What we included in the analysis was what we know today that we can accredit. I can't be subjective in trying to figure out what they might do in the future. We'll have to react to that when it comes, but we do know that there's conversations going on around that.
So one very important piece here, it's the interaction, not only technology-wise. The technology is evolving, and it may improve on the accreditation, it may worsen on the accreditation, but it's also how that technology is being replicated all over the system. So it's, yes, solar is getting better, but now everybody's putting in solar, and everybody's putting in wind. And then you have markets like SPP, now they're calling in for critical operations a lot more frequently than before. So technology is getting better on its own, could improve the accreditation, but when you combine it as a whole, it could degrade the accreditation. They may say, hey, there's way too much of this one specific technology, where the sun in the winter sunsets at 4:30 p.m. Now you're putting a lot more stress on the system, and so it could go the other way around. Right. So I want to be super clear about this. We think technology will continue to evolve and it will improve accreditation, but we are also very careful about how these may actually backfire if it's too much of the same technology in the same region.
So the saturation on the system will have some effect on that.
Certainly.
As it moves forward.
Well, and the reason that SPP has zero accreditation during the wintertime is your peak hours are actually when it's dark.
Right.
So it's really early in the morning and it's late in the evening, and so your solar is not producing during that time, so that's why the accreditation is the way it is now.
You're
All
right,
right.
peak hours.
Yeah,
Correct.
Did I say summer?
No, you just said
Winter.
peak hours.
Winter. Excuse me, winter.
Winter. So one more question. Remind us, please, what, if we don't meet that 12% capacity value, what is like the daily financial penalty for that?
Well, I don't know that I can answer that. There will be penalties and fines that would come from SPP if it's intentional.
Right.
So, you know, we can't be intentional and not do anything. We do have to meet our peak load plus 12%. That is a requirement. It is the basis upon which we move forward, and we do want to carry a small margin on top of that to make sure that we never get down below that. And by small, I do mean small margin of error, so to speak, going forward, or contingency, I guess would be another way to state it.
And Mary, can you just speak briefly about accredited capacity for battery storage?
Sure.
And what that gets us?
SPP does not, in their tariff today, have any language about accreditation for battery storage. And so at this point in time, we don't know what that would be because there's nothing in there. FERC has ruled and has told SPP to put it in their tariff, and so we know they're working on it, but there is no language there today. Joe, anything else? Okay.
I am hopeful. So this is my personal view, and I am optimist that these type of technologies will come into play, just like solar came into play just 5 years ago and into now. I think it's important and incumbent upon us to, one, protect reliability, resilience, make sure that we are delivering the power that we promise to our ratepayers. At the same time, as Mary has talked about this is the springboard for a much larger plan on decarbonization. I wouldn't be surprised if once we protect the main resiliency issue we're trying to solve today, now we will be in a much better position to then take advantage of this evolution of batteries and other things that we know and technology that we don't even know today, right? 10 years from now, it's something that we're not even contemplating today. So I'm excited about this gradual approach where we are making the right decisions, they're responsible decisions, and we are leaving the door open for future improvements.
My turn. Where to start? So there are no units here on this graph, and it's meant to be illustrative, and I appreciate that. It does appear to me that I might interpret this, given the timeline at the bottom, that the resiliency threshold for no action relates to the capacity that we have. Is that a fair statement?
I think that's a fair statement.
Yeah. So
the capacity in 2024?
Yes. So that's where we would no longer have enough generation available to us if we did nothing. And so I get that. Another resiliency kind of question that I have, the previous slide showed that the biggest creator of a resiliency is distribution problems or transmission problems. The weather events showed power lines in rivers or power poles in rivers and power lines down, not generation. As you described resiliency earlier, I took it to mean that you were looking at having capacity for a multi-day event.
Yeah.
Is that a fair statement?
We are. We're looking for capacity to be able to cover the shock to the system for a multi-day event. So there's a lot of questions about why aren't batteries an answer to this problem. You can put batteries out on your system and you can have them out there ready to go should you have an issue, a weather event like we've had over the last couple of years. And the answer that I give them is, yes, batteries will help you for 4 to 8 hours. But when the battery drains down, just like in your phone, you have to recharge it, which means I'm draining off of the system to recharge that, and I'm just making the situation worse. And so while it is a short-term solution, if we have a short-term problem, so there are places where batteries would make sense and for different events, it's not something that is a multi-day resource that we can depend on in these types of events that we've seen over the last 2 years. So I want to make clear that it's really that has been an input into the analysis that we've done, is the weather events that we've seen over the last couple of years.
So we're responding to weather events because, well, and other things, but yeah,
right.
It could be anything.
It's the generation that has changed, right? It's the market rules that are out there. It's all of that brought together into a single analysis to make sure that we meet not only the reliability of the system, the resiliency of the system, the capacity requirements that we have, maintaining the affordability for our customers, being environmentally sensitive. That analysis has brought all this together.
Sure.
I would say one last thing, just in addition to weather events, it's also the location of that generation. So it's not just the weather events that could happen, which is absolutely one of the things, but here we are now relying on importing generation from significantly further generation sources. So the way it's been explained to me, it's like hose with water. The longer the distance, the lower the pressure. So regardless of a weather event or an act of nature, that alone has degraded also our resiliency on frequency support. So in addition to natural events, you have our reliance on resources that are significantly further away. We're looking at closing down North Omaha, which is right here in the load, and replacing that with potentially sources that will be
Further away.
miles and miles and miles away. So it's that too, that I didn't want that to be lost.
Thank you.
No, I appreciate that. Back to the metrics on this particular graph, though. So we're talking about multi-day events. We've talked about not investing in batteries and some other things because we don't know what the regulations will be. So we don't have any regulations on resiliency.
It's not just the regulation, right? It's the fact that the battery only lasts 4 to 8 hours, right? It doesn't meet, it's not a solution for a multi-day event. So
well, it's not a complete solution, but it could be a partial solution.
It could be a 4 to 8 hour solution.
Sure.
There's the capacity requirement to the accredited capacity. That's
It doesn't meet that at all.
Feeds into this.
Today, it doesn't meet it, right?
Right.
Right.
That's correct.
So, and I guess that's my point. We don't have any metric for resiliency that is required by SPP or FERC or anyone else. Is that correct?
So there is a resiliency margin in the FERC rules, and Dan Linehan can help me here if I go astray. There is a resiliency point at where FERC says you should take the action to shed load. And so there is a resiliency margin that is defined at where you would have to decrease your load, whether that goes into brownouts or it goes into blackouts, but that's the next step that you would take. We don't feel it's prudent to plan to that step. We think you need to stay above that step, which is what you're seeing here, a representation of we want to stay above that, maintain the current resiliency that we have in the system.
So, is this requirement something that's really a continuum? It's not always shed load by brownout. It can be shed load by other means?
By other means, meaning, I don't know how you would shed load other than do that.
Yeah, exactly. I mean, what we would do today is we would ask in a serious situation, we would ask customers, interruptible customers, to be interrupted. We could certainly do that. We have in the past, back in, I would say, early 2000s when prices were $5,000 a megawatt hour, come out with an energy alert and ask customers to reduce energy. So we didn't have to buy $5,000 energy in the peak market. So you have the capability to do that. This example that we're talking about, one, with, again, you have to add these elements together to get the problem. And to look at any one of them all alone by themselves doesn't get you the solution. So I have load growth that's occurring, I need additional capacity, and we have a resiliency-related need. And so batteries do not solve the resiliency need that we need for a multi-day outage, right? So I think we've been incredibly clear about that.
Nor do
what
they.
that may look like. And we have some examples that we've given just in this last year with the floodwaters down in Nebraska City with one outage, with one plant in an outage, the other plant being shut down because of potential impacts to the river, and we had to operate all of our other peaking generation to maintain resiliency in our system. If we would have taken one or two other ends off our system, we would have been in the situation where we would have been either doing isolated brownouts or blackouts or alternating outages between circuits, right? Because the whole market was having some issues around this issue. What we don't want to do is to get beyond that. We can manage through some of those related issues, and so folks in our transmission operations they manage through that, but it begins to thin this resiliency piece when you do that. So again, I would say we have to take a look at all three of those elements to really understand this solution. And to not peel one of them out and say, hey, here's a solution to this.
It's about the solution of all three of those elements.
And then to the idea of waiting for batteries to be accredited. They're not gonna be accredited until you get beyond 8 hours. We don't have that right now. We don't have batteries that run for 72 hours at a time without having to be charged. Is that correct, Mary?
Well, it's a bad investment to get 6 hour, so many banks of 6 hour batteries that you make 72 hours. I agree with that. Yeah, but I do think that the batteries can be a solution for, and I ask for this information, you know, how often are we needing some kind of backup? And the histogram that I would expect to see is that 75% of the time, batteries could answer it.
Yeah, but what do you do about that other 25%?
So again,
Do we want that?
I don't want to plan. I'm not planning on doing routine brownouts and blackouts. I think it's, I mean, I know, but that's what you're saying.
No, I'm saying there are interim steps, and we've seen it work in other markets. We know that is exactly what SPP asks people to do. They say, please, go to your customers and dial down.
Sure,
I mean,
sure.
in 1 and 2, and not until 3. And you are saying every chance that we are threatened with this, we go straight to blackout.
No, that's not what we're saying at all.
An example is this flood last year. If we would have just had that battery backup, we would have gone to the ground.
Part of that emergency plan is to begin to step through these pieces, right? But you can't guarantee, I can't use them for capacity in SPP. So I cannot use that as a capacity requirement unless I control the switch on every individual home that says, I'm gonna take this amount of load off every compressor in our service territory, and I control it. Boom, I can drop that down.
Yeah.
I can ask customers, and customers get the choice of whether they do it or not. That doesn't solve my problem, potentially, right? And so I'm focused on solving the problem.
Gotcha.
Right?
I don't want to be a PG&E.
But I wouldn't mind being a Great River.
I don't want to be a PG&E.
Can you imagine that he would take a very good position to ask the public to voluntarily dial down? It would not be good. People would not be
I think
happy.
they want the reliability. I think we have to look at our SDs. What do our
Thank you.
SDs say?
thank you. So why now? I mean, that's a great question, and we do hear that. And this shows you, we have increasing load. We have expiring contracts, and we're retiring units 1, 2, and 3, and we're fuel switching 4 and 5. And what we see is this gap of accredited capacity, and I need to be clear, this is accredited capacity. And this is the problem of our growing communities. The good side of that is it's economic development, and it brings in a lot of jobs. It brings in a lot of money. It's good for the economy. This is our obligation to serve. We have to meet this accredited capacity need.
Can you help us understand the load growth that we project into the future? Where does that generally come from?
Where does it generally come from? It comes from the Google and the Facebook. It comes from our growing communities. If you drive around the region, you'll see homes being built. It comes from commercial operations coming in. It comes from all over in the region.
So there have been load growth projections in the past prior to data centers arriving that showed no projected load growth over multi-years into the future.
I would say 0 to flat to slightly increasing or slightly decreasing, depending on what year you picked that the projections were done.
Thanks.
However, and I think this is a good point. I've been asked this same question. I think even in that scenario where there's flat growth, the actions that we've taken in the past on North Omaha 1, 2, and 3, Fort Calhoun, Mid-American, that has degraded resiliency. So to me, it is a problem that we have to solve no matter what. The additional load growth that we've seen recently has expedited the analysis of the need, but it was not created just because of that. And I think that's an important point to make. And on top of that, if we're looking at a future where we're trying to electrify the economy and getting more electric vehicles and public transportation and electric water heaters and heat pumps and you name it, it is a feature that I believe we were going to get there anyway. The analysis and the need is probably closer to us now because of this additional load
So what should you expect? We did this analysis. We've gone through this the last couple of months that we've had a board committee meeting, and we looked at different generation. We looked at storage options. We looked at our existing assets, what we could do with those. We've looked at voltage support assets. We've looked at demand side resources. And at the end of the day, we're still making the recommendation to the board to go out and acquire 400 to 600 megawatts of solar and to do the modernized gas and the backup gas. Part of that, we wanted to show you again and remind you that as we go through, back to what Javier just said, North Omaha 1, 2, and 3, as well as 4 and 5 fuel switching, what we see is that the resources and the way that we're moving forward in a decarbonized world, those resources definitely will be reduced in terms of the CO2 output from North Omaha. And we talked a little bit about our peaking stations and the difference between a peaking unit and a modernized gas unit, and then the startup capabilities of units 1, 2, and 3, and eventually 4 and 5 will be the same manner.
As we get through the responses, the proposals that we get back, are we going to be looking at the total carbon emissions estimated for each type of resource over their expected life with regards to what SD7 might be looking forward, or how are we going to be evaluating the specific impacts that were modeled in that frontier analysis when we have the proposals back? I mean, will we be seeing a response that says, now that we have received X proposal for solar and then Y proposal for gas, that we now know that solar, not carbon emitting, but gas would have X potential impact over annually or over its expected life? Is that something we should expect to see through the negotiation and contract finalization process?
I would say yes, but I'll look, yes. I get the answer, yes.
And we're basically going to be looking at the percentage that we've assumed that these units are going to run.
Right.
Is it higher, is it lower, and therefore are the emissions higher or lower? We believe that what we have today is pretty solid and consistent with what we've seen around, but it could get even better. It could get worse, and we'll evaluate that against this.
And what we'll see is that once we have the technology defined in terms of those assets, whether it's a simple cycle combustion turbine or reciprocating engines, that will have some minor effects on that as well. So we will go back through and establish what that should be going forward.
And so that's for future assets that will be constructed. Do we currently do independent analysis of carbon emissions by generation site now, or is that something we would expect to do and break out in a future SD7 report that we would be under the new guideline if approved?
Sure.
Total carbon emissions by generation location could be provided in the SD7 annual report?
Yeah, I don't see why not.
I think we have a cumulative.
We do an aggregate. I don't break it out by unit, but we could.
We have it, yeah. I mean, it's not that we couldn't do it, yeah.
Great, thank you.
So again, we're working towards a solution, and with the changing landscape, with the framework, the solution that we are proposing is the large-scale solar with the modernized gas. Voltage support, as we get through the 2 RFPs that we're proposing, what we'll come back through and see if we have enough voltage support on the system or if we need to add any additional voltage support on the transmission system in order to accommodate the changes that we're seeing and the growth that we're seeing going forward. What I want to talk a little bit about is kind of shift gears here. That was really kind of the basis of how we got to where we were. But we did want to give both the board and the public a little bit of an idea of how this is integrated, because I think we get a lot of questions around this. And I know this is a busy slide, and I'm going to go through it at a high level. You know, this presentation will be posted out on the website, as will the streaming of this. And so, you know, the things that people can look at and really look at the detail in this. But we start with the updates that we've had in the Power with Purpose and the modeling and analysis and the recommendations. That's where this starts. If we get board approval on Thursday, we intend to put out a solar RFP. As we release that solar RFP, the things that will come from that is bids coming back that will tell us, you know, what projects are out there, what developers can offer to us, the location, the pricing of all of those assets. And that all need to be modeled and taken back into this model that I've been talking about. The reason that we do that is that when it comes back into the model, typically what we'll see is solar developments in and around our system, not necessarily one large solar field. We'll see separate ones. And we want to make sure that we know where those are in the system, and that will inform us about the best location for gas assets, because as I said, this is kind of the pressure in the system. It's the analogy that Javier gave earlier about if you go a long distance in your pipe, your pressure is going to decrease. And so what you need to do is inject that a little bit, and this will give us the information that we need about where those gas assets should best be located in order to meet the requirements for the resiliency on the system. And then, we'll go back and take each one of those components. We'll put out a gas RFP. So these are staggered a little bit because we need to get the information back in on the solar projects to make sure that we can get the modeling done. And that will inform us about the gas RFP that needs to go out. The other thing that will happen at this time is any ownership of generation within the state of Nebraska for gas assets need to go to SPP. We need to put in an interconnection request to SPP. If we were to own the solar assets, we'd need to put in an interconnection request as well. And so we go through the same process as anybody else in terms of SPP analyzing how that will be impacting the whole SPP footprint. SPP has a deadline on that of April 30th of 2020 for those requests to be in. If we miss that deadline, we have another year to wait. They will not look at it until April of 2021. And so it's a critical date for us, April 30th of 2020, to make sure that we get those interconnection requests into SPP to make sure that they get studied over the next few years. We will go forward with, gas supply, gas construction and solar construction based on the bids that we get back in. And so these are really illustrative of what we think might come in those bids. And we need to refine this, and we'll bring it back to you, the board of directors and the public, as we get more information from our RFPs. So our RFPs are really going to inform us about what that looks like going forward. I think a critical piece of this is that, we've said all along, this is not a one and done. This is not the last time that the board of directors or the public is going to hear about this project. You're going to hear about it frequently. And you're going to hear about it frequently so that you understand what we're getting in terms of the RFPs, where we're headed, what the decisions are being made. And so we really want to make sure that we stay in tune with the input that we're getting, both from the solar RFP and the gas RFP, but also from the board of directors and our customer owners. So we need to make sure we take all of that in and make sure that we make the best decisions going forward.
Mary, can I stop you for a moment? I think maybe this is a question for you. We've got stakeholder touch points from now until 2024, and you kind of alluded to it. But thinking about SD 13 and fully acknowledging that perhaps your team hasn't thought all the way through this yet, but any preliminary thoughts on where we fall into those categories, inform, consult, et cetera. Inform is an obvious one, but beyond that, as it relates to this, and knowing that it's really only been informed to date, is it likely that we shift out of that in terms of obtaining input, or is it likely to stay into the informed?
Absolutely, we'll shift out of informed. In fact, I go back to the resource generation that we did, going back out to the public multiple times to say, what is it that you're looking for, and so forth, and then what is it that you need from us, and then working with the decarbonization team. So we have a lot of work to do.
So that's the decarbonization study, I think is what my interpretation of what you just described. But in terms of adding solar, natural gas, and the voltage piece, also true there that it's going to be more expensive, or are you really just describing?
We'll need to stay in the informed state through that, because like we said, Mary said we got to get to that foundation in order to get us to that pathways.
I would say just the collaboration piece of this could be with the partners that we select in this, and how we go back and look at undercover under the solar arrays, how we look at other environmental related activities, whether, there's some conversation I know amongst the board, about prime farmland and what that looks like. And so, part of that will be that kind of, consultation and collaboration with those partners to make sure that we're kind of living within, the parameters that we've set for ourselves as an organization.
A more narrowly defined set of stakeholders rather than
Bingo,
all customers.
like
Correct.
Selfie
But to
transmission
let them,
project.
but I think it would be, the important piece would be to let them know what we're doing
Sure.
around those elements or around that continuum.
Well, and especially when it comes to siting.
Right.
I mean, once we've picked the contractor and determined where we need these on the system, then
We have to reach
that
out to the
whole, we have
communities.
to reach out and say, this is going to be happening in your community. We want to make sure you're informed about this.
Yeah, absolutely, and that's why I brought up this Sarpy transmission project, because it's people that are impacted, but then also the entire community.
Sure.
So.
Thank you.
So, Mary, at the time we received the proposals, are we going to have, or at the time the contracts are finalized, are we going to have an expected useful life for the equipment? Is that part of an original proposal, or something that we do internally for economic purposes or accounting purposes? Or how do we understand the life cycle analysis at the time of the creation of the asset over the future decades that it'll be around?
I think that's something that we'll learn from the developers. Excuse me. And I think that leads right into kind of what the overview is of these different RFPs. The developers will help us to assess what the life of the project is. So I'll just stick with solar for a minute. As we look at solar, the things that we're going to be looking at are not only energy capacity, but also those essential reliability services in the state of Nebraska. And we are looking for responses that will include multiple projects, more than likely, ranging from 400 to 600 megawatts in total, but we will accept bids from 50 megawatts up to 250 megawatts. 250 megawatts, you start to kind of move out of the economies of scale, and so we really think that the under 250 is about the ideal place to be, but we'll consider projects that are larger. They will interconnect on a transmission level. That's going to be one of the things that we would like to add into that. We want them to have future energy storage capable, and so that means that it has to be built specifically in order to accommodate energy storage going forward. We want to have different options for commercial operation state, because that gives us a way to stagger these in and out and gives us a lot of flexibility. Gives us a lot of flexibility in how we're looking at these assets and when they're coming online. Similar to what we get from our customer owners, right? Our customers come in and they give us ramp rates as to how they're going. They don't always work out the way that they think. We want to make sure that we have some flexibility in our operation dates as well. Multiple contract structures. We're looking at anything from purchase power arrangements to ownership options, whether that be build, own, and transfer, or engineer and procure and construct. And we intend to release that RFP pretty immediately if we get the approval from the board on Thursday. Did that answer your question, Director Williams?
It's mostly about the next slide, but.
Okay, I'll go to the next slide. So modernized replacement backup gas overview. The technology, the sizes, the location are contingent upon the solar. As I've talked about, once we know multiple locations for the solar, we can put this into the model that's been built over the last several months. And as we do that, it will come back and let us know the locations, the best locations to do the interjection of gas assets, whether they be combined cycles or reciprocating engines. The gas asset RFP will be released after we get the results from the solar and we get the modeling done, but before April 30th, because at April 30th date we have to have that interconnection request into SPP. And we have to be pretty firm in that interconnection request about what the assets are, what the size of those assets are, what the location of those assets are in order to put in an interconnection request.
And Mary, just to verify, it's simple cycle combustion turbines or you have not combined cycle?
They are not combined cycle. Combined cycle is typically a base load unit where you want to run it 24/7, similar to the way that we run our coal assets today. These are peaking units. This is coming in to be able to fill that gap when we don't have enough generation online. And it's really those peaking. And that's why it's a solution for when we have multi-day situations where we need to bring on peaking units to cover should we be having problems with, in this case, during the flooding in Nebraska City and the flooding that was going on up there.
And then, given Eric's question about, the life cycle, or whatever, some people have said that these gas turbines are going to be stranded assets. Can you comment on that?
So my belief is that these will not be stranded assets, and the reason is that I think we're going to continue to see in our area continued growth. We continue to know that there's likely other economic development projects that'll come along, and that's just looking at what's going on in the region. Also, we know that as we start to look at decarbonization, not only within our region but other regions, that there'll probably be changes in the generation fleet there, and we are going, as we integrate more and more renewables on the system in SPP is going to value those quick start units much more than I think we do today, and it's really how do we integrate all the intermittent renewables on the system with our peaking stations. So I really think that our peaking stations are going to continue to have value. And what we're seeing just over the last year is our peaking stations are running a bit more. They're going from like 1 to 2% to 4 or 5%. And that's why, as we looked forward and you said, what was the capacity factor that we thought, that's why we put in 10%, because we think that that's where the marketplace is headed.
So, Mary, I know that when you did your slides, we hadn't talked about this yet in the committee meeting, but we are allowing in the RFP process alternative fuels for these combustion turbines other than natural gas. So
yes.
I just wanted to bring that up because I didn't see it anywhere in your slides, and I know that we added that late in the process.
Yeah, we did add it into the data sheet that'll be part of the board resolution, so it has been included in there, and we do know that it will be added into the RFP as we discussed at the systems pre-committee meeting.
So your first bullet, technology sizes, locations contingent on solar proposals.
Mm-hmm.
I'm kind of interested in the band of variability there. I assume that the location is really going to be driven by where the solar will be. It's also my assumption that the size probably isn't going to fluctuate a whole lot from the 350 and 250 that we're at. But can you talk a little bit about
so we're
the extent to which those might change?
Yeah, we're talking more about the size of the gas asset that's put at a specific location. So is it 100 megawatts or is it 275 megawatts at that location? What sort of interjection do we need based on where the solar assets have come in from the developers? And so those are the things that we're looking at when we're talking about technology, sizes, and location. That's why it's really critical that we understand the solar so that we know the size and the location on the system about where we need to make that interjection.
So in other words, the 600 is pretty firm. It's just a matter of how the puzzle gets put together.
Up to 600.
Up to 600.
Yes.
Yeah.
Yes.
Right, but I want to set expectations for what we're going to get back, and I don't want people to step in and go, okay, well, we've got solar. Can we get the gas down to 300? Right?
Yeah.
That's what I'm trying to understand is, okay, we've got a cap, but what's the floor?
Yeah, and I've had this conversation with a number of you. This is a capacity problem. Mm-hmm. Capacity is an addition problem, right? I need to have enough capacity every day to meet that peak plus 12%. And so even if I wanted to do less, I don't think that I can do less because of the accredited capacity that we need going forward and what we're projecting as the load that's coming in. And so that's really the issue associated with that and why we feel like 600 megawatts of gas is the right number.
And then to stress that these are peaking units.
These are peaking units. These are peaking units. We don't expect them to run more than 10% of the time. Now, that could change. I mean, something could happen in the SPP footprint. As we see it projected today, that's our anticipation as to, about the range of what they would be operating on an annual basis, about 10% of the time.
Previous slide, you talk about 600 megawatts AC this would be in the top end. Can you talk about the equivalency of 600 megawatt AC to 600 megawatt gas?
In relation to,
I understand that, is there some difference between megawatt AC versus megawatt
no.
Explain
accreditation
to people who might be
there?
listening.
No, it's about accreditation, right?
Well, and I think that the AC is what the interconnection is, so the panels produce DC.
DC,
power,
yeah.
Inverters convert that to AC, which is what goes on the grid. So we're just specifying that it's not 600 on the DC side, but it's 600 on the AC.
So the AC through the inverter, do you end up with 600?
Right.
Yes, AC
That's
is on the other side of the inverter, the grid connecting side.
Okay.
DC would be larger than that.
Right.
Thank you.
So, Mary, you talked about the potential way that we operate the gas assets in the future. Would these gas assets have flexibility to allow us to make other decarbonization choices where, for example, the operation of these could be increased combined with other intermittent renewables to allow other assets to be removed from the system because 10%, 15% without having to seek additional assets in the future?
I think that's the decarbonization study that we want to get through. And that is certainly one of the things that we're looking at is, how do we build that foundation? How do we make it strong so that we can look at those sorts of things for the future in the decarbonization study?
Yeah, I just want.
That's the bridge.
Right, and I know we've talked about this a lot, but now
Yeah.
that we're at the end of this discussion, and
Right.
I mean, I want to make sure that is something that we understand is a possibility in the decarbonization study, that we evaluate increased operation of these coupled with additional intermittent renewables, possibly storage, possibly demand management. All of those together could lead to additional decarbonization at other locations without the need for additional new generation like this now.
Or with the need for lower new generation that you would otherwise need. I think you're hitting on one of the most important points here, is that 10% run for these units is what we're assuming right now. We could end up using them more.
Mm-hmm.
If we do, it will be for a good trade-off on the rest of the decarbonization strategy.
Then the other question I had asked earlier about the expected useful life of the assets. Do we have an expected useful life for either the solar or the gas? That's something we'll hear from the developers, and so we will have by the time we confirm the contracts.
Yeah, and the reason that I hesitate on you is that a combustion turbine, typically has a 20-year life, but a developer could bring in something that's, been. There's another secondary market out there. They could bring in something like that. May not have a life, but it may be a great project for us to look at going forward. The other thing that I think is out there is on the solar side, they typically are what I would say a 10, 12-year life.
They'll go longer. So typically the panels are warranted at 25 years.
Okay.
The different components have different lifetimes.
Lifetime.
I think the challenge here is it's a purchase power agreement. Our life of that is fixed.
Folks are having a hard time hearing.
Yeah.
I'm sorry.
Come on up, Courtney.
All right.
Thank you.
So to the question on life of solar, typically the panels are 25-year warranty. The other components have different life terms. When we get into talking about evaluating, we have different contract options. So from a purchase power agreement, if that's a 20-year PPA, that's a 20-year life of how we would look at it versus an asset that we might own could be 25, 30 years or beyond.
And then within that expected useful life, particularly on the gas side, I know we've talked about a price on carbon there, but do we expect that at some point in the future we would incorporate price on carbon into the analysis of the total lifetime cost of those gas assets? Because I guess in the timeline of 20 years, are we doing any projections to estimate when we might have to begin incorporating that price into the overall cost of that asset over its entire life?
At this point, I don't have anything that I can put into analysis that I can say, point to and say this is a regulation or this is where it's going to be. I know that there's a number of laws out there on the federal side where they've ranged anywhere from $20 up to $100 a ton. And I don't know where to pick that. What I can tell you is when that comes to pass, everybody that has carbon to producing will have to include that in their analysis, and what you'll see is everything get raised up in relation to where it is today. So the way I look at it is that we'll still be competing on the same basis assuming the carbon that we have in the system. So as we move our carbon down, it means that we are going to be more competitive if that should come to pass. But we're still going to see everything rise that same level, giving whatever it is, whether it's $20, $50, or $100 a ton.
Everything except the renewables.
Except the renewables. That's what I mean.
So-
Everything in terms of carbon generating.
One very important thing here is that profitability will be affected by a number of things. One, you mentioned price on carbon. Two, could be the actual price of the fuel itself, with or without policy. The other one could be congestion in the system. A ton of different things are going to make the units more or less profitable, including renewables. Today, we have many very unprofitable renewable units that are still providing value to the system. So I want to separate value from profitability. The value that some of these assets will provide goes beyond just the market value. In fact, I would argue that some of our most valuable assets are assets that don't produce any energy or produce very little energy, but they're there, ready and available to be fired up when we need them, right? And they could be incredibly unprofitable, but the value that they provide to the system is there. I would also say that this proposal moves us further and further away from our reliance on fossil fuel. A unit of this magnitude and this characteristic is going to be fired up about 10% of the time. So even if we have a price on carbon or the actual price of gas goes up or down, our volatility will be significantly less because we will be relying less and less on that fossil fuel. So I just want to make that distinction between profitability and value of the units. I hope it's helpful.
Yep. And I know we have talked about this before, just that since the last time we talked about it, there are court cases with Exxon about their price on carbon policies, and there is a report from 2017 where SPP reflected an expected future price on carbon. April of 2017, SPP expected $21 per ton. So it's not unprecedented to say that we expect over the future life of the asset, when we understand it from the time of the contract, that at some point that will become a factor in the overall economics of those assets.
And I will remind you that the Clean Power Plan was in effect at that time, and that's what those projections were based on. It's no longer in effect. Now we have the ACE rule. As we see regulations change, we need to respond to those appropriately, and we will continue to do so. I think back in that time frame, we were looking at how it was that we were going to reduce our carbon footprint in order to meet the Clean Power Plan. We will still be doing that with the changes that we're going to be doing at North Omaha. And so we will respond to regulation when it comes about appropriately, same as every other utility in the nation.
Thanks.
Okay. So just a few more, just the last slide I think for me is, we do want to have some things that we want to look at. There's an analysis process for the solar responses, and that will be the input into the transmission and the economic modeling, and then we'll refine that. I just want to be clear about what this process is. Once those are refined, then we'll take that and we'll put that into look for the gas assets that we need to do. But we'll also go back once we do that and confirm, do we need any system upgrades? Do we need any gas interconnection upgrades? And is there regional gas pipeline expansions that will need to be had, and voltage support devices that we could look at going forward? So it's not, when we get these RFPs back, we're not done with this. There's still all these other things out there that we need to make sure that we take a look at, and that we know what the integrated generation solution is at the end of the day. So I want to be clear about the process that we're going to go through.
And Mary, I would just add on the slide that talked about the time frame, on the top of that slide talks about our commitment to the board.
Absolutely.
To get input, perspective, advice, counsel. Each month we're going to come to the board with an update on where we are on this timeline, what we're seeing, what are the implications, get feedback, input, and perspective. And our commitment is to continually do that over the course of the regulatory approvals and all the pieces that we have in play. And then there will be times where we will probably do some things because there'll be some confidential pricing pieces in closed session, but we'll try to also find opportunities to share the process that we're going through publicly as well. So the public understands kind of what we're doing, what we're seeing, what the implications look like as we begin to move forward. And again, we'll be getting the board's kind of advice and counsel and perspective as we move through this process as well.
Let me just double down on that. I don't have a lot of experience, but my relevant experience is with the decommissioning contract that we did last year.
This year. It just seems so long ago.
Yeah.
Sorry.
It took us a while to negotiate it.
So, similar process in that the board granted management the authority to direct, negotiate, and award that contract. And I remember being very uncomfortable with it at the time because the dollar amount was astronomically huge, but appropriate. And I had, some reservations about handing that over to management and felt at the time that it was my job to essentially approve that. Having gone through it, what I can tell you, especially my newer colleagues that haven't gone through this before, is that once that determination was made, there was regular checkbacks, not monthly at the time because there were a lot of negotiations happening that we didn't need to be involved in, but there were unquestionably points in the process where information was brought back to us. And the board provided, I think, some guidance and insight and perspective and really kind of helped to navigate and in some cases sort of validate the direction that was going. So I have confidence that there's no reason why I would believe that we would depart from that in this case. And in fact, the way that it's mapped out, it seems even clearer that there are multiple points in the process that we're going to be involved.
If you recall, what we talked to the board, there were several options, and for the life of me, I may not be able to get them, so Mary or somebody help me out here. But we talked about, do we want to give away the license to somebody else to be able to do? Do we want to maintain it ourselves and third-party contract? There was 3 options that we gave, and we asked the board at that point in time, give us your thoughts, give us your insight, give us your perspective around what you thought and what you think that ought to look like. And the board essentially migrated to, hey, OPPD should keep the license. We ought to be committed to the community to make sure we do the right thing in the right way, and that we should look at a third-party partner to assist us in that process, but not to essentially take over the rights to the decommissioning, so to speak. And that's the counsel and the input and the advice that the board gave us that was incredibly valuable. And I think we may see some of that show up as we begin to look at these purchase options, structure options, and that's what we'll do as we kind of go through that process, as we'll get that advice and perspective and insight and counsel from you. I think that's a great example on how we did engage the board, and we'll continue to do that, and you have my commitment that we'll do that.
And I started off this presentation with a thank you. And the reason that I did that is because I think the board has asked a lot of questions. It's voluminous, but it has really made us present you a better, overall, clearly articulated solution. And so, you do add value. I mean, you may feel like you're just asking question after question after question, and we feel like we're answering and answering and answering. And that's okay. But I will tell you there's value in that. And I think that it's taken a lot of time and effort on the board's part to be able to do that. We've gotten value out of that. It's really made us think through a lot of these things with very clear perspectives. I would say the same thing happened in the decommissioning as we went through that. There were lots of questions, and what that did was that made us think clearly about how it is that we wanted to move forward in that process. And so I do think that the board's not just that, it's the value that you bring in the questions that you ask.
Yes, I would like to thank the entire board for being engaged. This is the most
absolutely
engaged board we've ever had, and I think we've got some good output as a result of that, good results. And thank you very much, Mary, for your whole team.
Mary.
Thank you.
And the entire team, all those that are here.
Thank you. Well, as you can tell, this has been a district-wide effort. I concur with Mary. It's had a lot of rigor, and it has made us a better organization. I will tell you from the stakeholder meeting that a couple of the individuals back there sat in on with, they acknowledge that this is a complicated business, and extremely hard to explain the complexity of it. So it's a good time for SD 13 because we talked about that toolkit, and I'll go through some of these items. But I do want to start off and thank it was important for us to bring in the environmental stakeholders at the very beginning because they've been with us through this journey over the last several years. And so we did extend an invitation, and it was really important because basically, our objective for that was to say, ask questions to gauge clarity and understanding. And here are the 4 questions that we asked, and at the end of that stakeholder meeting, we went person by person to say, did we meet that objective? Is the problem we are solving for understandable? Is it clear how OPPD's mission, strategic directives, and legal and regulatory obligations shaped our approach? Do you have clarity on what generation technologies were included in our analysis? And do you understand the factors in our trade-off analysis? And everyone in that room said yes. So I will also tell you, their input was extremely valuable. And let me give you some key observations. They appreciated being asked about this journey, and while they articulated that they understood it, they also said, what we need you to do is speak more to the less emissions. So our messaging talked a lot about that. Emphasize that gas wouldn't be running all the time, long day. Play up pollinator garden habitats and being mindful of the environment when citing generation and transmission assets, and proudly speak to solar. We had downplayed that, you guys. And so they said, be proud of it, and we are. But we were concentrating so much on the gas side of it. And then play to the connection to the decarbonization, and this is just one more step to come. And you know, Director Moody, your comment was well taken because it did take me back to STP. And with the SARPI transmission project, each phases of those had a different engagement process. So the answer is we will be looking at that because once the RFPs come back, we'll know what we're dealing with and develop stakeholder outreach for each of those components, which that will be part of the update to the board as well. So thank you for that.
Lisa, I have a quick question. You made an offer to speak to their organizations and others. Did we actually speak to those specific organizations that are now complaining about how we didn't engage with them?
So we're going to be meeting with Omaha by Design, which they're very excited about that, which also we're hoping that they'll be our partner in the community conversation of what impact could our community, or what's that vision for our community could look like. The Wind and Solar Conference was a big one in that regard. Power for Purpose for the Engineer Club of Omaha, and then the American Society of Engineers, and we also pushed that out on social media several times. So the answer is some of them did take us up on it, but probably not some of the organizations that we thought would.
Okay, that was my point.
So. Okay, thank you. Also, we talked about allowing us to talk to our employees. That is a core value of ours, and it was very important to all of us. So thank you for that. And I will say that the environmental group helped honor that as well. So thank you for that, because it was important that we talk to those. So we held meetings at each generating plant. Mary, thank you for that in-depth tour. And then we also did an all-employee live stream presentation. And then we also added briefing the retirees on it. It was important for them to hear where the vision was, and they greatly appreciated it. It was, they understood why. So that was another audience for us. Education and presentations, which we talked about. This one, new to the toolkit. We did an outreach to 1,000 commercial and industrial customers and organizations, went to the chambers, leadership in a lot of the communities and so forth, and gave them basically an overview of the project like we did with the World Herald. OPPD listens, and we'll talk a little bit more about that. We heard from some of our stakeholders of do an FAQ and then also a video talking through this, because not everybody's sitting for 6 hours, going on 7 hours, 8, on that. So we wanted to make sure that that tool was out there as well. And then outlets goes to all customers, both either electronically or through traditional, for some of our traditional customers. And then OPPD listens, I'll talk about the statistics on that. Media coverage, you heard me say, of all the years that I've been here, this had the most coverage of anything that we have ever done. So it was every news channel, and it was on a local and a national level. So I want to thank Jody and Kate and the team for that outreach as well. So and for the subject matter experts to make themselves available, and that was our commitment to everyone that said, "You invite us, we will come," and so forth. So just some social media stats on that. 128 comments via the various channels. OPPD listens, board and senior management outreach. The call center, we had a few calls that came in through that. The environmental groups were really great about that, and commercial and industrial customers. We also received 80 hand-delivered letters from the Sierra Club. And just to be transparent, it was opposing the 600 megawatts of gas generation, concerned that the proposal breaks decarbonization promise, and believe energy storage could be part of the solution. I will tell you, we had a call with the Sierra Club and John Crabtree and talked through all of that to say an email that had gone out to the organization talked about the natural gas but did not approach about the solar. So, and John was very respectful, and we also know that he has a job to do. The letters that were received were form letters with a few comments, so just wanted to be transparent on that. We also received 600, it's a petition from the Nebraska Conservation Voters, and basically that was a petition that says, we ask the Omaha Public Power District Board of Directors to commit to a transition away from fossil fuels and toward clean energy. No comments, but just their names and not addresses, but just what part of the city or state that they lived in and so forth. So that one really kind of felt like it kind of crossed over for SD7 and Power with Purpose. So general takeaways from the comments, and the team, Lori Zagurski and the team did a great job. This was a lot of heavy lifting, you guys, and when I talk about technology, we got to find a way that we get a better process in place. So a majority favored the proposal, approximately 10% opposed to natural gas backup, approximately 10% mentioned reliability concerns, approximately 5% mentioned cost and or rate concerns. Surprising, few questions from some C&I customers, but the ones that engaged felt like the reliability was extremely important as well. Needs some or increased education on natural gas and battery technology. So as these RFPs come in, that will be part of the stakeholder process in order to do that, and also to get some subject matter experts. Questions of why more wind was not part of the solution, and we put that in the FAQ. And overall, OPPD is heading in the right direction. The initial stakeholder meeting affirmed hard topic to cover, and they told us good luck on that, right, Dr. Corbin, on that, and need video, message, and presentations to help explain trajectory. With education, there is a general understanding that this is the first step in OPPD's journey to decarbonization. And we purposely put the timeline in there that talked about Power with Purpose, as well as the journey on the pathway to decarbonization. So, related stakeholder, we talked about the environmental stewardship revision to transition away from fossil fuels, overwhelming support of revisions, including the goal of net zero carbon. And then we talked about the petition. We had 811 signatures. So what's next?
A vote on Thursday, I think.
There will be a vote.
So as we talked about, this is going to be a journey, and there's going to be check-ins with you and the public every step of the way. It is not one and done, and as you can tell, it goes all the way through here, and then it will also be parallel with our pathway to decarbonization. So with that, President Burke, I'll pass it over to you.
Yeah, so I mean, I think our perspective, we had a great conversation with the stakeholder groups, and as much as I've been out in the community and the state, this has been a topic of great support. And
But you need to know, there's also great trust in that if we're recommending this to the board, there's great trust with our customers that we're doing the right thing, and you need to understand that. I mean, I think in almost every conversation that I had with either chamber board members or chamber executive committee members or just different things going on in the community, it was kind of like, well, you guys are doing the right thing, keep up the good work. And any concerns with what we're doing? No, not at all. But those that are in the manufacturing, not even the large data centers that we've talked about here today, the other operational folks are saying, thank you for looking after the resiliency and the reliability. That's important to our business. And one, I mean, just a couple comments was, because if you guys don't do that, I got to put my own natural gas generator in or diesel generator in to support my needs. Well, I'm not sure that's a good community solution either, to be very honest with you. So there was those kind of conversations that went on. So I would just, ask the board, I know there was conversation earlier in closed session, but I would ask the board to embrace the recommendation as we have designed it, as we have put it together. I think it's really in the best interest of not just the organization, but our customer owners, and I think it lives so true with our strategic directives that we have in place and the strategic initiatives that we've developed that we will begin to work on once we kind of move down this path. I reflect on the conversation with the environmental stakeholder group, and one of the comments said, well, why don't you just do solar and not do anything else? And so what that meant was you keep units 1, 2, and 3 at North Omaha on gas, and you keep 4 and 5 on coal. And it was the conversation about, listen, we made a commitment back in 2014 that we want to continue to live up to. And in order for us to live up to that, here is the trade-off that we need to make. And so we think we're living to that. And I think that's part of our trust proposition that we have with all of our customer owners. And so I would just ask the board, as we kind of begin to think about this, as we begin to move into Thursday in the board meeting, I would ask you just to support the recommendation as it has been written and presented to the board, and allow us the opportunity to show you what we can do and engage with you and have you consult with us on this process.
Can I want to thank you for that. That's helpful. Can you I want to piggyback off of what you just described and ask the board, because many of us have been doing outreach, town halls and a variety of things. I don't think we need to go into what did you hear, what did you hear? It's 4:30. But I'm just kind of curious, based on what Lisa just described in terms of the input that we've received as an organization, anything significantly different that you heard as you were out doing meetings and whatever you did? Anything stand out that we need to make, that we as your colleagues need to know about?
The only thing that a lot of them ask is there going to be a rate increase because of this?
Yes.
And I said,
comments I got off the
they came up with comments for me. And the other one said is, they were just so excited about the solar, and they said, oh yeah, but the solar's not there all the time. I said, well, that's why you still have the gas back up. And they said, oh, okay. So they were okay with it.
Okay.
There were a couple comments off the editorial concerning about the rates.
Sure.
So the 400 megawatt elephant in the room in my subdivision is Fort Calhoun.
Mm-hmm.
And comments that I got when I was up in that area was, well, if we wouldn't have shut down Fort Calhoun, and how is this different from that? And so I think being respectful of that sentiment out in my subdivision, and important that, again, when we're looking at the contracts and we're thinking about siting, is that we don't forget the northern part of the of the district as we're building in resiliency. The other thing is, when I talk to Rotary Club, the Westo Chamber, and other organizations that I belong to out there, they're excited for economic development, and that these kinds of projects help with growth, not just in Omaha, not just in Sarpy County, but across the district. So that's a concern. And then even my good friends in the environmental community, once we sat down face to face and talked about it, and they kind of understood the complexity of it, they're like, well, I'm glad you're the one that has to make this decision and not me. So, but that's why they elected me, is to make these hard decisions. So
Sure.
that's kind of what I heard in a nutshell.
Yeah, thank you. Anything more to add?
Me?
Oh. Anybody else?
People in North Omaha are very glad to hear that coal will be removed from that facility. I mean, particularly within the area which would be potentially impacted by any of the emissions there directly. I think that's a big accomplishment. Younger people, dramatically more supportive of the need to take specific action on climate change. Students from UNO and a couple of high schools came to a couple of events that I had. Very interested in how fast can we move to decarbonizing the utility, and basically it doesn't matter how fast you say it, they want it to be faster.
Sure.
That trends dramatically with age. The younger you are, the more of the consequences you will see in your lifetime. And so I think those are all expected. Similar response from people who are concerned about the environment, that this is, the idea that building natural gas is decarbonization is challenging to convey. And so I appreciate the time that we spent highlighting how this allows us additional flexibility. And the overall carbon impact is measured by the cumulative emissions from now until we get to net zero by or before 2050. And so does this investment allow us to look at other things that would have overall lower total carbon emissions by 2050? I think the answer is yes, and I think that's an important thing to remember, that this allows us more flexibility in the future. The rate impact, I don't understand the World Herald article. Title was right there. The very next line said, no general rate increase, dash Tim Burke, and people still have missed that. Don't understand how, but we've been very, very clear about it, that this does not cause a rate increase. I'm glad that we were able to work that into the financial calculations, and that we're able to convey that to people, that that is part of the solution, that clean energy does not cost more. In fact, it provides benefits that are not available otherwise, and so I think it's really important that we convey that to people now as we make this big investment. So
Now, the only caveat I would say is that it's based on the pricing that we put in the model today. And so if bids come back significantly different than that, then we'll have to evaluate whatever that may look like. And certainly the board will be certainly engaged in that. But that's our thought and our belief. And we think we're pretty strong on the pricing, and we think we have a good handle on that. So we think we're in pretty good stead. Now, there could be other issues that pop up that drive other rate impacts, but we believe we're in good stead here.
Just a quick comment, I just want to make sure that we don't leave it. In some instances, clean energy do cost more, and we've been willing to make that investment for other reasons, not just cost. Many megawatts of wind we have blowing in today, producing power into the grid that it's costing us significantly more, but we're yet making that investment. So it's important just to clarify that not all renewable energy costs less. These one in particular we're looking at does cost less. So we get the best bang for all buck. Lower cost, better environmental attributes, and good resiliency. Sorry.
If I can go back to one more thought, Mary, when you spoke to the other one of the more important stakeholders are our employees. With the whole decision that we make as far as North Omaha, there's going to be, a significant decrease in employee force there. And I'm wondering if you can comment on that. And this would, again, be with Mark, too, as far as how we're going to handle this. Because, this causes a lot of stress as far as our employees.
So I would say in general, employees, not just at North Omaha, though I think that they're seeing the immediate concern, right? It's becoming very real for them. They've known about this since 2014. I would say that very concerned for their jobs, right? They're very concerned about what's going to happen in the future. I will also say that I think the folks at Nebraska City are also saying, hey, how long are we going to have? And so, I think they're looking for some resolution around this to give them some concrete answers that I don't have today. So I would say in general I have a very nervous workforce, at least at those two facilities. In terms of what I told them that the senior management team and the board of directors, we're going to make the same commitment that we made to Fort Calhoun.
and that is that we're going to provide you as much information that we can when we have it, and that we're going to be transparent about it, and that, we want to provide a runway for people to be able to do what I was saying was happening earlier with our security workforce, a trip out at their own pace, in their own way, going to different jobs, better jobs. I don't know that, but I mean, they're going where it suits them, as opposed to us having to lay people off. And so, that was what I conveyed to them about how this path would move forward. Many of them know people at Fort Calhoun. They've stayed in tune with that. Some of them came from Fort Calhoun, and so now they're back into this situation. And so I would say that they're consulting with those people to see how we've treated them up there.
And I would say they're also reaching out, quite a few of them proactively, to sit down with some of us in human capital and talk about their options and what other careers they might consider within the company. And so that's happening as well.
I think it's important for the employees to know that the board is not just forgetting the employees. It's important that we feel the pain there.
Well, just, I mean, this is interesting, and I know it's 4:40 now, but I think it's important for the board to know, that Mary, as she is making these recommendations on behalf of the team, has the tough job of dealing with an organization that you saw last month that is beginning the end by moving that first canister in the dry cask storage. And we are willing to make these tough decisions, right? It'd be so much easier not to, right? To the environmental community that said, that's a much tougher decision. The easy decision is just keep North Omaha open and operating the way it is. And it's like, I couldn't do that. We made a commitment to the folks in North Omaha, right? We made that commitment. And we got to stay with that commitment, and we have to do the right thing. And I firmly believe we're doing the right thing that will prepare us for the future. So, you're not getting a senior team or the subject matter experts that are making the light and easy decisions. We're making the right decisions, and I think we're doing it the right way. So,
I appreciate that.
yeah.
Thank you.
Well, it's time of hard decisions where true character comes out, and I think that the way that you've handled Fort Calhoun and this project just sets the tone for how things will be handled in the future. And I don't know, if I was an employee at one of those, I would feel probably nervous about my job, but also relieved to know that the way that you're going to manage that runway is going to be in my best interest, right? So hopefully that's the sentiment that they see, because that's certainly the perspective I have here sitting on this side of that table, that decision-making table.
Is that?
We have a quick item here, but I think it's relatively quick on the governance side.
We have governance.
Two of them. That completes the systems report.
Yeah. That's what I was asking.
15 minutes, thank you very much on that.
Why don't we roll it this way, guys? We have two items. The first one's approval of the SDA compliance. We introduced this last month, held it over for the public to comment. There were no public comments during the last
And
month.
SDA is what?
SDA deals with employee relations.
Yes, which I was just going to point out is going to be very, very important this next few years. Go ahead.
Okay, any event, if you folks want, there have been no changes made since last month. If you want to look it over, if you have any questions, we can discuss it on Thursday. As of right now, it should probably be the consent or the agenda. If you have any issues, let us know. We can take it off.
Director Kavanaugh, if I could just add just as a quick point of order. We have a couple of summary reports, and what we'll do is we'll post those. Normally we would review them. For the sake of time, we certainly won't, but I just want to acknowledge that a couple of things that you see here will be posted even though they weren't reviewed.
Okay. Next item is the schedule for the Board of Directors 2020 meetings. The meetings are all normally scheduled at this point. None of them are off the normal first Thursday after the 10th of the month. All of them at 4 o'clock. To see the attached schedule, again, that'll be on the consent agenda on Thursday. If anyone has any issues or concerns with that, bring it up in advance so we can take it off consent.
I checked and looked at when the APPA meeting was, and that's at the beginning of the month, not in the middle this time, so we're okay.
Okay, that's all we have.
That's it. That concludes our meeting. Thank you very much. This might have been the longest meeting ever.